Broadcast is now starting. All attendees are in listen-only mode.
All right. Hello, everybody. Neil, good morning. Thanks for saying hi. As you come in, make sure you say hi. We'd like to see it. Anyway, my name's Jeff Gibby. I'm going to kick us off for day 4 of the Metastock Online Traders Conference. Thanks for being here. It's good to see you. I'm going to basically start by reading the same legal disclaimer I've been reading all week. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So, welcome everybody. If you're joining us on YouTube, hit like, hit subscribe. It helps a great deal. As we go through the day today, we are going to be giving away prizes. If you're watching us on YouTube, one of the pinned comments that's going to come up after I get Dave started here is a registration link. If you register, you'll be eligible to win prizes. We have a couple of sponsors. I want to thank Stocks and Commodities Magazine. You can find them at www.traders.com. They've been a firm supporter of Metastock throughout the years. It's a great magazine. They've been publishing it since 1982. Got 1.3 million subscribers. You should get a subscription if you don't have one already. You can do that at www.traders.com. So also want to invite you to join the Traders Forum. You can do that at thetradersforum.com. There's live market chats. You can learn about the market. It's a community of traders designed to help traders. So thetradersforum.com is a place to do that. We'll be talking about Metastock all day long. So I'm going to save that for a second. Our first guest today, you can see him. He's probably like right here, actually, in your view. For me, you're right underneath me, Dave. Dave is one of the people that taught me a very sophisticated way to look at the trend and to identify if you're an uptrend or a downtrend or a sideways trend. And I think he's going to share that knowledge with you today. But all kidding aside, Dave is such a good friend of Metastock. He's been working with us for a number of years now, and we appreciate all the work he's done, and we absolutely love you, Dave. So let's get you started. Let me go ahead and come over here. You're gonna get a little pop-up that's gonna say, hey, do you want to share your screen? You click on yes. If you have any questions at all as we get going today, type them in the questions box. If you're in GoToWebinar, if you're YouTube, just chat them in. We're doing a really good job of actually keeping up with the questions. So let us know what you've got. Dave, I can see your screen. I can see you.
Fantastic. Thank you, Jeffrey.
Here you go. We're off to a good start.
Okay, fantastic. Whenever I approach to do a presentation, I always think about, what kind of gee stuff could I do? And then I fall back to what happened probably 25 years ago. Larry Connors asked me to write a book. And I said, that's great. I've got all these great ideas. And there was an uncomfortable moment or so. And he said, why don't you just write about what you do? So that's what I'm going to do today is write about what I do or present about what I do. And I had a really amazing streak, and that streak is ended. Okay. So I don't want to make it look like it's always like this, but I went 6 months with only one loss, and nearly every one of those setups was a Landry light pullback, which I'll explain to you in just a minute, or a look-alike type of setup. Now, all you really need is one setup to be successful. I'm going to drive that point home today, and that's a Linda Raschkeism. And it's also important for a little money management and a lot of trading psychology. So I'm going to touch upon those as we go through these. Obviously, I want to thank everybody for attending. Thanks again to Metastock. And Jeffrey, thank you for inviting me back once again. I really enjoy these presentations. As I think I've said before, I cut my teeth on Metastock. Probably in the 80s. I'm from the 1900s. But it's been a while. I know I've been using Metastock long before a lot of people have been at the company. But anyway, thanks everybody for attending. I appreciate you taking time out of your busy schedule to be here. There's a disclaimer screen. I'm not going to read it to you. You can read them if you want. The bottom line is, and I stole this from Greg Morris, all predictions are about the future, and a lot of stuff can happen between now and then. Now, as I just said, I went 6 months and only had one losing trade with my trading service. These are direct recommendations. I did take them personally myself. And if you look at the weekend charts on YouTube, youtube.com/Dave Landry, you'll see every one of these setups over time. I explained the setup and the money management and so on and so forth. And I'll touch upon some of that today too. But nearly every one of these was a Landry-like pullback or a very similar pullback related type of setup. So here's a spreadsheet capture over that 6-month period, and there was only one loss. And so I'm going to show you how I pulled the rabbit out of the hat, so to speak. Now, it's a lot of stuff, but this is not one and done. I'll give you my books for free, all 3 of my books, some mini courses, and the slides. If you go to davelandry.com/slides and put your information in, you'll get all that, plus limited access to the members area so you check some things out. There's enough stuff to keep you busy for a long time, and I'll come back to that in just one second. There's all my contact information. Feel free to take a screenshot of that. You can also reach me at dave@davelandry.com. Now, this is what Jeffrey alluded to a minute ago. Probably the best way to determine whether a market is in a trend is through the use of the big blue arrows. I actually had them printed on my arm in case I forget. Now, Landry Light, which we used to call Daylight, and I think, I don't know if the plugin from Metastock still calls it Daylight or Landry Light, but we'll get that changed. Anyway, it's just simply the number of lows greater than the moving average or number of highs less than the moving average. And when the Landry Light when the bar intersects the moving average, there's no Landry Light. So I find that it works really cool if you create a count. And so the algorithm is if the bar touches the moving average, the Landry Light resets to 0. If the low is greater than the moving average, Landry Light becomes Landry Light +1. And if the high is less than the moving average, and Landry Light becomes Landry Light -1. Now, my plugin with Metastock is free, and it comes standard with Metastock, which is pretty cool if I say so myself. That's the actual code there in case you wanted to look at that. Anyway, talking about the counts. So 2 bars here above the moving average. So that Landry Light count will be 2. On the flip side, on the downside, 2 bars where the highs are less than the moving average, the Landry Light would be 2, obviously, but -2. And then if the bar intersects the moving average, there's no Landry Light. Now, one thing by complete accident that happened when I sent these formulas over to Metastock, oh geez, probably in the early 2000s, maybe. It's been a while, but they plotted it as a Metastock, and I'm sorry, as a histogram, and I thought that was pretty cool. And so I've since adopted that. So if it's green and red, it means the market's flipping back and forth around the moving average. So that means that you're in a choppy market. And Tarzan speak, that would be bad for a trend follower. In order to follow a trend, you must first have a trend to follow, something I've been preaching quite a bit lately. And that's another Greg Morris-ism. Now, if the highs are less than the moving average, in Tarzan speak, bad, okay? And then if the lows are greater than the moving average, Tarzan speak, good, okay? Very simple way to determine whether you're in an uptrend, a downtrend, or a sideways market. Now, you'll notice that there's some kisses along the way. The Landry Light pullbacks, if you sign up to get my books, as I said earlier, for free, you'll notice that it was in the Layman's Guide to Trading Stocks. I called them Kiss Ma Goodbye, Kiss the Moving Average Goodbye. And I used a 20 EMA there instead of a 30. But anyway, when the market comes down to kiss the moving average, your Landry Light goes to 0, okay? But you can see that we stayed green this entire run, and there was only one small bar. You have to squint your eyes to see it, but there was only one bar where you were actually below the moving average. So if it's mostly green, that's good too. Now, as I preach, don't forget to draw your arrows. The most powerful indicator in the world, I think, is the big blue arrow, and it's blue because my paint program defaulted to blue many years ago, specifically in 1999 when we were in this crazy bull market. I started drawing these big blue arrows in the chart, and the only reason they're blue is because my paint program at the time defaulted to blue. So that's how I became known for the big blue arrows. But anyway, one of the most powerful things, in addition to the blue arrow, is when it comes to determining trend, is the net price movement. Okay, so you can see in this chart about 575 or so, just eyeballing. Let's just say 600 to make the math easy. It was at 600 in February, and you go back a couple of months, and it was also at 600. So net price change is not that great. Then obviously the net price change was down, and then we had a pretty good bull run afterwards. So if you fast forward to more recent times, notice your Landry light was flipping back and forth early this year when it was choppy. The Landry light was to the downside, and then when we had this amazing run to the upside, the Landry light went back to the upside. So this is a really good indicator, and often I call indicators illustrators because they don't indicate anything. I see all these BS ads on YouTube and elsewhere about somebody has an indicator that's going to tell you where the price is tomorrow, and that's BS. But but indicators aren't completely worthless. They just sort of illustrate what's already in price. But always look at price, no matter what. Now, again, like Linda said, all you need is one pattern to be successful. And you're going to see in a few minutes how we had all these fantastic trades using this one pattern or a lookalike to that. So the market must have 10 to 20 bars of upside Landry light, and I'm using the 30 EMA. The 20 EMA was in my original book, and that also works well too. In more recent years, I like the 30 more and more. Anyway, so you have 10 to 20 bars of upside Landry light, but you also need to look at the chart and make sure it's headed, let's say, up for longs or down for shorts, of course. Now, in some cases, it might get fairly near the moving average as long as the pullback is fairly substantial. And the theory behind pullbacks is you want to make sure some players have been knocked out of the market. I even have a pattern I call a trend knockout, which I'll show you in just 1 minute. Now, the market then pulls back to touch the EMA, which resets the Landry light back to zero. You want to go long above recent highs. You want to give it a little bit of wiggle room just in case the stock rallies up on noise alone. And then you want to follow the hybrid money management and position management, which I'll discuss in 1 second. The money management and position management allows you to have your cake and eat it too, so to speak. We're going in for a short-term gain. I'm slotted as a swing trader. My first, I think, 2 books had that in the title. But even back then, I was willing to hold stocks longer term. So you want to get in, capture a swing trade piece, hopefully, meaning a short-term trade and short-term profit. You want to exit half of your shares and then trail a stop loosely on the remainder. I'm going to walk you through a few of those in a minute. Anyway, you can see this was a defense stock, part of that 6-month run we had. Defense was really hot last year, long before the war. In fact, defense now has topped out now that we have a war. The market looks ahead, right? Anyway, you can see a little pullback to the moving average. Landry light goes from 20-something, looks like 26 or so, down to 0. And that's it. And again, these are built into Metastock. So if you back the chart way out, you can see there's a Landry light pullback. This was the service on that particular day. By the way, if you go to davelandry.com/archives, you could look at all the services going back many, many, many years, maybe 20 years or so. And that shows you how the methodology works. So like I said a second ago, I'll give you plenty of stuff to keep you busy. And that link will be in the davelandry.com/slides. I'll have that link in an email there. Anyway, the entry is here, or was here. The stop is here. The initial profit target is up here. So let's see what happens. It meanders a little bit, but it does rally up to hit that initial profit target. Now, the model account, which I just showed you in the spreadsheet, is based on a hypothetical 100K account. I do take the trades personally. I would not suggest you put your money into harm's way if I'm not going to do the same. And that's why during that 6-month period, one of my clients emailed me, said, man, your business must be booming. I'm like, no, I actually lost clients because a lot of the time during those 6 months, I was telling everybody, like, look, I'm sitting on my hands, and I think you should sit on your hands too because there's no opportunities. Anyway, that's a whole nother story related to psychology. So when you do hit that initial profit target, your stop comes up to break even. And that allows you, as Charlie, the trader Kirk, says when he saw this money management, when I explained it to him, or to his peeps, I should say. He called it free rolling. So the worst thing that can happen to you barring overnight gaps is you have a profitable trade overall, and you get a shot at an potential unlimited gain. If you're trading for only limited gains, sooner or later you're going to get whacked. No matter what type of trading you're doing, sooner or later you're going to get whacked. So you need to have some sort of aspect in there that occasionally allows you to have that triple-digit gain. And again, I'm slotted as a swing trader, but sometimes we'll stay with trades for a long, long time. So there's a trade, again, hypothetical on 100K. I did take this trade across multiple accounts, 60% on the first loaf and 106% on the second. So here's another setup that was part of that 6-month run. Now, this was also what I call a TKO. So you can see it didn't quite get to that 20 EMA, but the knockout move was substantial enough to make me think it was worthwhile. A TKO is a trend knockout. And again, that's in the books. And also you can find it on my YouTube channel. But a trend knockout, the idea is you want to knock out the nervous Nellies, those people who bought near the all-time highs or at the all-time highs. Those are the worst traders, both mentally and monetarily. Mentally, they don't have the wherewithal to stick with a position, and monetarily, they get squeezed out really quickly. And speaking of squeezed out, the shorts are attracted to markets making new highs. They confuse the issue with facts, so to speak, and they go in and short when the market begins to break down from highs. They get instantly vindicated. They feel pretty good. But when the market begins to rally, or if the market begins to rally, they get squeezed out. So the predicament of both of those traders can work to your advantage. It knocks out the nervous Nelly, so they're not dumping their position and taking you out with them. It attracts shorts, which creates pent-up buying. And also, when the market begins to rally, two things happen. The shorts get squeezed out, which could propel the market higher. And two, those nervous Nellies, the FOMO might kick in, and they might jump right back in. Now, this could actually cause markets to go parabolic, but you can see nice little pullback type of pattern, very close to that moving average. Now, the great thing about Landry Light pullbacks is it's wonderful for scanning. You can use Metastock to scan for these. I like to look at a lot of charts. I did the math a while back, and I forget, it's either 10 or 20 or 30 million. It's something ridiculous, the amount of charts I look at. I look at a couple thousand charts every day. I think when I speak in person, I usually ask, are there any musicians in the group? And by the law of averages, somebody is. And I'm like, how did you get good? And they look at me, like I pooed my pants. And they said, I practice, dumb arse implied. And if you want to get good looking at trading technical analysis, look at a lot of charts. But anyway, the great thing about this is you can scan for these setups, maybe use a lower time frame moving average to make sure you're catching more and more potential setups. And most of my methodology, or probably 99% of my methodology, is based on pullbacks. I do have a longer term market timing system, which I'll give you. There's a mini market timing course, a bunch of goodies in that link. Not to pimp it, but if you want to learn for free, there's a lot of good stuff in there. But the market timing course, you'll see it has a little bit of a breakout characteristic. Also, in IPOs, I do tend to trade one pattern specifically that has breakout characteristics. But for the most part, I'm trading pullbacks. So here's another one in that run. You can see nice trend higher. You can draw the big blue arrow. Notice that you had Landry Light for a long, long time. Lows greater than that 30 EMA. Little pullback to the moving average right here. That's a 20 EMA in that particular case. And then we got long and caught a pretty good run. Now, if you have a good eye, you'll notice there were a few little pullbacks along the way that might have been tradable. Here's the next one, ABCL. And you can see nice Landry Light pullback to the 30 EMA and the 20. Now, this one triggered, came back in, and began to meander around, but eventually took off. And that's a testament for following your plan, good, bad, and indifferent. What's the old saying? A bad plan followed well is better than a good plan not followed. AYTX, this was another one of those defense stocks. And you can see, you also want to look at what else is happening in the chart. You want to make sure the chart tends to trade cleanly. Ideally, you want to see it accelerating higher, and you also want to see it in a persistent trend, meaning that it tends to go up day after day. So this stock breaks out. We don't buy the breakout. but we wait for the first pullback. And that's been part of the problem lately, is that the market just sort of melted up and didn't let us in. It happens. Spell with a silent SH. That comes with the territory. And as a lot of good thing, you get a lot of good from Greg Morris. And one thing he says, the worst thing to do is change your system during the heat of battle. And the last move we had was unprecedented. So you don't see those type of moves often. And I've tweeted out quite a few examples of how that's never happened in history, that melt up that we just saw. Anyway, nice little pullback to the moving average. In this case, it was a 20 EMA, which was the original Landry-like pullbacks. It took off, and then it kind of meandered for a while, and then eventually took off again. Now, I'm going to show you something that a guru has never shown you, and that would be a losing trade. So this stock looked good. This is a crypto type of stock. Nice little Landry-like pullback. Just looked absolutely fantastic. It triggered and then it came right back in and stopped us out. This was the one losing trade that we had during that 6-month period. Now, what I would recommend you do, again, if you want to get better at this, look at a lot of charts, but 2, go back to day 1 on a losing trade. And if you could tell yourself, I would take this trade if I saw it again tomorrow, then you're definitely on your way to becoming a successful trader. Now, if you back it out and it's like the setup is kind of ugly, the trend wasn't really there, it wasn't persisting, and all these other things I preach about, then you're like, okay, well, I'm going to learn from that. If you ever get stopped out on a trade and you immediately say, I knew I shouldn't have taken that trade, then I call that foresight and hindsight. And that's a lesson you'll have to learn over time. But just make sure, again, before you put your capital in harm's way, everything looks really, really good. In this particular case, there were a few pullbacks to the EMA along the way that were possibly tradable. And also notice that the stock, it consolidates by trading sideways. It's not bouncing around like electrocardiogram. It tends to thrust, pull back. And unfortunately, this last thrust out of the pullback did not happen. So that was a losing trade. It happened. Spelled with a silent SH. In our GV, this stock took off, and you can see made a nice little Landry-like pullback to that 30 EMA. And then again, previous to that, nice little pullback here. So it tends to thrust, pullback, rinse and repeat. Also, persistency. Notice that it tends to go up day after day after day. And orderly. Notice that it tends to pull back in an orderly fashion. So it pulled back to the moving average, and it triggered on this day here. And I actually got a complaint from a client. He's not a former client, so maybe something else was going on. I don't know. Maybe he was pissed off at his wife's boyfriend or something. I don't know. But he complained that this stock hit the initial profit target and came back in and stopped out. And if you were able to make such a huge gain in one day, annualized, those numbers would be ridiculous. You would own the world. You would make millions within a few years and billions and so on and so forth. So it happens. And that's why we use money management. And that's what I call the better than the poke in the eye trade. So again, notice that we had some prior pullbacks. So this was definitely a good candidate to trade. Unfortunately, we just had that one and done type of move, but that's why we use money management. NUAI was in a nice trend, or a nice little breakout, pulls back almost to the moving average, but it was deep enough to make trading it worthwhile. And you can see pretty close to that 20 EMA. And then it took off nicely from there. Now, this was a biotechnology. Biotechnology was hot late last year, and this is a TKO type of setup. And sometimes you could kind of use your mind's eye or 2-day chart if you prefer, and just kind of combine these two bars for your knockout move, okay? And then pulls back to the moving average. Landry Light again goes from a very high number, in this case 60-something, down to 0. This was the initial setup. And again, if you want to see a video on this particular day, okay, go to davelandry.com/archives, and those links will be in the aforementioned davelandry.com/slides. But go here and watch these videos, and you'll see when I recommended this one and this one. Those are two gold stocks. We'll get to this one in just one second. and this GLUE. Now, this is all based on a 100K hypothetical account. Again, I will take these trades. I will take them in a model account, which mimics this trading service. And then I will take them in other accounts. And on that particular day, I called the pattern a TKO, but it's also a Landry-like pullback. So a lot of my pullback patterns will be very similar. A TKO could also be a Landry-like pullback, and a generic pullback can be close to a moving average. So very simple stuff that I'm doing here. And it always amazes me, again, getting back to what Linda said, all you need is one pattern to be successful, is my best trades come from the most simplest pattern. And you know, if you find yourself plotting that 15th oscillator, just stop and go back to a blank chart and maybe throw in one or two moving averages to see what's happening there. I've seen a couple things. I've seen charts with so many indicators on them you can't see the chart anymore. And in other cases, I've seen there's I'm not gonna throw anybody in the bus, but there's one trader out there, been around forever, and he took an indicator and basically negated it and put his name on it. So when one oscillator is going up, his oscillator is going to be going down. I don't know why, but that's how he did it. And I'll see both of those plotted in the same chart. So they're always going to be the inverse of each other. So that just creates analysis paralysis. So learn how to read charts first and foremost. Anyway, entry was above the high, stop was down here, initial profit target was up here. And it triggers and didn't do a whole lot initially. It came back in, but it didn't stop out. And then we had that big gap higher. And we were able to get a little bit more than 1% or $1,000. The stop again comes to break even. And then now we're going to let that stop gradually loosen over time. In this particular case, we stopped out for a little bit better than a poke in the eye type of trade. So there it is right there. Now, this was an IPO, so obviously you don't have a moving average, at least until whatever moving average you're looking for. It trades that many days. But you can see that it did make what I call a first deep retracement, and it also did pull back to the moving average. First deep retracement is when an IPO comes public and takes off and then has this really deep retracement. IPOs, I did a whole course just on IPOs. IPOs tend to get a little ahead of themselves. There's a little euphoria going in. Everybody rushes in, and then all of a sudden people start taking profits. And the same sort of thing happens like with the TKO. The Johnny-come-latelys are buying into that high, and they get shaken out really, really fast. But anyway, first deep retracement is a great pattern in IPOs. And you can see, again, thrust followed by a deep retracement, followed by a nice uptrend from there. Now, AXTI, nice Landry-like 60-something bars. This is a very strong trend. And again, as I've been preaching throughout, and we'll come back to in just a minute, it tends to persist, means that it goes up day after day after day, consolidates, not by doing this, but by going sideways or drifting lower, okay? And then rinse and repeat. So this stock's been in a great trend for a long, long time. Pulls back to the moving average. Now, it's also a pattern I call a double top knockout, okay? DTKO. And that's when you have like a minor double top. So the super short-term traders are looking at that saying, wait, this stock is done. I see a little tiny double top there. I better rush it and short, or I better dump my shares if I'm long. And then you have the knockout type of move. Now, this occurred over several days, but that helps knock out people. It helps people think that, hey, you know what? Maybe this trend has come to an end. And then if you notice back in time, it made a Landry-like pullback. So we caught this run out and got stopped out on this day here. And if you know what AXTI did, it pretty much tripled from there. So it happens. But this technically was another Landry-like pullback right there. And again, yet another Landry-like pullback, nice thrust higher. And again, notice it trades cleanly, thrust, pullback, thrust, consolidation, thrust, and then pullback. It's also kind of a double top TKO look-alike type of pattern. I like the right side to be higher than the left, but it does kind of look like that double top knockout. And again, a pullback to the moving average. Now, when that happens, yet again, the Landry leg goes to zero. Any questions thus far? I'll be happy to address them. Let me see if I can get the chat running. Okay, we'll keep going. Okay, looks like there's a mistake in this one. This is KGC. I don't know what happened there, but you can see that's the original parameters. It worked so good in rehearsal. So again, we banked $1,000. Now in this particular case, you can see that it took a long while to get to that $1,000. But notice the Landry light down below went to 0, but it didn't go negative, okay? And the main thing too is it didn't stop us out. So this was one of our bigger winners. This has since stopped out. If you go back and look at the last time back in February when we did this presentation, or when I presented for Metastock, this was still a live trade. This was another gold stock. Now notice that it was headed lower and there was negative Landry light for quite some time. Then it begins to rally and we have all upside Landry light, 1 or 2 bars where you have 0 Landry light, and then it pulls back to the moving average. So it's all green. Now, the other thing I like to look for when picking stocks, and I did a course in stock selection. It took me 14 hours to explain everything, but a lot of the stuff I could give you today: persistency, acceleration, ability for a stock to trade cleanly, and then of course you want a nice setup where it's deep enough in the pullback to have likely knocked out some nervous Nellies and attracted some eager shorts. But anyway, you could see right here you had a Landry light pullback, and it also accelerated out of that pullback. So if you have a good eye, you might have gotten in a little bit earlier on this one than we did. But you can see nice pullback to the moving average. Landry light goes down to 0. Now the count wasn't super high here. It was only about 14 or 15. But notice that it was all green leading into that, okay, and no downside. So you can kind of look at that as like this thing's been in a trend for a long, long time, at least 3 months. And again, pulls back the moving average and then takes off from there. TFPM. Entry was up here. Now you want to have an entry high enough to where you're not going to get triggered in on noise alone. As I've said probably 10,000 times, sometimes I'll go to emails like, Dave, I'm down 50% in that turd you recommended. And they'll give me a symbol, XYZ or whatever. And I'll look at it, and XYZ is going straight down for 6 months. They're right about that. It's going down for 6 months. But then I'll back the chart out. I'll go look at the archives. Again, davelandry.com/archives. And you'll get the link with the slides link. But anyway, I'll go back and look at the archives. I'm like, yeah, I did recommend that 6 months ago, but it never triggered an entry. So waiting for an entry in and of itself will keep you out of a lot of trouble. Will keep you from putting capital into harm's way unnecessarily. So this was TFPM, and that's what the stock looked like back when it first triggered. Now, I say live trade here. This one's since stopped out. So last time I did a presentation back in February, again, it was still live. We banked $1,000. The stop comes to break even, okay? So now we're free rolling. So as long as it doesn't gap below our stop, we can slowly let that stop widen out to longer term trading. Now, longer term trading is where the money is, but the risk is also there too. And I would never take away anything from anyone, because believe me, like right now I'm going through a drawdown and it sucks, to put it mildly. But the turtles were famous. If you read the first Market Wizards and maybe the second Market Wizards too, they were in the right place at the right time, and they made a lot of money with longer term trend following and commodities, just ridiculous amounts of money. But since then, most of them haven't done so well, just because the markets went back to like normal pattern of being choppy and not trending as much, and so on and so forth. I would never take anything, again, away from anyone, but that's what happened. They were in the right place at the right time. But you also have to be smart enough to recognize you're in the right place at the right time. But anyway, the point I'm trying to get to is, years ago, I did a lot of mechanical testing, and you're only going to be right about 28% of the time with longer term trend following. So 70-something percent, 72% of the time, you're going to be wrong. Now, I know statistics are worthless, and 75.4% of all people know that. But in this case, I think it's worth knowing. Longer term trend following is tough because your accuracy is going to be abysmal. And also, your drawdowns are going to be absolutely horrible. But by taking profits off the table, okay, and then gradually adjusting for that longer term risk, it really allows you to have your cake and eat it too. Anyway, so portfolio was looking a little better back then than it is now. But you can see here's that trade at the time I took that snapshot. This is another defense stock. Defense was still pretty hot toward the end of the year. And again, nice little uptrend here. Back here was just kind of chopping around. But then it got its act together, began to take off, pulls back to that 30 EMA. Landry light again drops down to 0. Now, this is one that really tested our patience. It triggered and went sideways for nearly 2 months. Most people tend to give up in a case like this, but the stock really didn't do anything wrong. It didn't really pull back that much further, and then eventually took off. Now, here's the setup coming into today, and maybe this will be the start of the next big streak. Notice that this stock based out for a long time, okay? Nothing to do there, but just trading sideways. And this is a fairly new issue. That's why you don't have a moving average back here. It did begin to take off nicely. And notice how persistent this move is. I think if you only walk away with one thing today, as far as stock selection is concerned, it would be persistency. And I'm always amazed at how powerful persistency could be. Mathematically, persistency could be equated to linear regression. I just like to draw a line through as many bars as possible and intersect as many as possible. And if you could intersect most of them, then you know you're in a persistent trend. And after you do that a few times, you could just eyeball it and see. So this was in a really, really, really good trend. You had a nice deep pullback. The depth of the pullback is important, or it has to pull back deeply, or should pull back deeply if you're in a really, really strong trend. Again, the whole basis of a pullback is you want those nervous Nellies, the people who jump in with the FOMO, to be shaken out. Those are the absolute worst traders. They will dump their position at moment's notice and take you out with them in many cases. And again, you also want some shorts to be attracted in. But nice little pullback to the moving average. And we'll see what happens. So this one has not triggered yet. We'll wait and see. But there's your live setup for today. Now, do your due diligence, okay? Go in and look at those archives. Again, I hate to say this, but I wish, let me know if you know anyone. Let me know if you know anyone out there who will put publicly and for free all their old recommendations out there so I can go in and figure out what they're doing, warts and all, okay? You're going to see a lot of losing trades if you go through those archives. If you can't sleep at night, start watching those old videos on what I was thinking and when I was thinking it. And I go through what the market's doing, what the sectors are doing, and the stocks that are in my Landry list. That's my watch list for the upcoming day. And then I also go through, obviously, specific setups. So find setups that worked, but more importantly, find setups that failed miserably. As I've said many, many times, years ago, I was talking with a trader friend, and he said he just got long this stock, and he said he's trading this pattern, and he explained the pattern a little bit to me. And I wasn't sure whether I could wrap my head around the pattern or not. And I said, well, that's kind of neat. I need to think about it a bit. He goes, how long have you been trading that? He goes, oh, I just read about it this morning. So do not go trade Landry light pullbacks this afternoon. Make sure that you fully understand the pattern, warts and all. Make sure you're picking the best setups, okay? And then also make sure you're finding some that failed miserably. We all tend to focus on the positive and how much money we're going to make and grail hunt and all these other things when it comes to trading. But the reality is you need to play a little bit devil's advocate. Now, again, make sure you're picking the best and leaving the rest. Acceleration, persistency, ability for a stock to trade cleanly, pullback that's deep enough. The 30 EMA is usually deep enough, but in some cases, maybe it won't be, okay? But ideally, you want to see nice acceleration and a fairly deep pullback to make sure some players are knocked out and some shorts, again, are sucked in. Eyeballing the chart is probably the best thing you could do. Look at the net price change again. And also draw your big blue arrows. And I guess I can't beat this dead horse enough. Make sure the trend is significant and ideally persistent and accelerating before the pullback. Also, in an ideal world, you want the market, the sector, and the stock to all be looking good, right? Behind you. You want sort of a backstop, right? You want, like, a rising tide tends to lift all boats. A rising sector tends to lift the stocks within the sector. And then you also want to take a little time and drill down within the sector too. Sometimes you'll have a sector where only one or two big cap stocks are leading the sector, but the rest of the sector doesn't look so good. So you want to do as much homework as possible going into the trade. It's also good, obviously, to do your homework before the heat of battle, because once the market opens, the information obviously begins to change, okay? And the most amount of stress is caused when information is changing. So you can plan with a clear mind while the market is closed, put your plan in place, okay? Plan your trade and then trade your plan. Now, if you go to the archives, again, davelandry.com/archives, that's a good place to start. Again, if anyone knows of a trader that puts all their recommendations out there before they trigger, as opposed to like a highlights reel or whatever, a couple of cherry pick trades, let me know. I'd like to check out what they're doing too. Maybe I can learn something. Now, if you want to see recent services, you can go to youtube.com/Dave Landry, and I have multiple playlists, and one playlist is core trading service. For my international clients who not non-English speaking, or non-English speaking is their first language, I upload my service every day to YouTube for them. And the AI translation, even with my coon-ass English, is actually pretty good. And then if you want the live ones, obviously you can go to davelandry.com/trading service. All right, let's talk a little bit about money management. You want to risk 2% of your accounts on every trade, and that's based on the stop distance, okay? It's not 2% of $100 if it's a $100 stock and your stop is 2 points away. The stop depends on the volatility of the stock, okay? When you go in and look at those archives, you're going to see in some cases we might be risking 10% on a trade. In other cases, we might be risking as much as 30% on a trade based on the volatility of stock. But what we do is we adjust the share size down accordingly, so where it's 2% overall on the entire account. And I actually did an article a while back called Better the Devil You Know, where I showed that trading more volatile stocks within reason is actually safer because you're trading fewer shares than trading less volatile stocks. And the reason I'm trading those more volatile stocks is I'm looking for a market inefficiency, something that's not priced into the market. Now, again, the stop is going to be set based on the volatility of the stock. You know, as I've said before, it's like I've had clients like, I can't trade with no 30% stop. You know, it's like, well, you don't get no Coke. But if you look at the chart, you know, 30% might only be like that far away from where the price is. And that's what it calls for. And again, if you look at those archives, I do have a column that says how much percentage we're risking, okay, stop wise. But remember, that number gets converted. And I have a spreadsheet I can give you if you want that'll do that automatically. If you put the entry and the stop in, it'll calculate the initial profit target, show you the number of shares that you need, and then show you the risk based on the stop distance. So we're going to take partial profits when reward equals the initial risk. Systems designers will say, Dave, that has a negative expectancy. It's like, well, it does if that's all you ever got. But occasionally we do catch a home run, and that's where it eventually pays off. So if the trend materializes, you're still in the position. And if it doesn't materialize, at least you made something, again, barring overnight gaps. Now, what we're going to do is we're going to make that transition to the longer term trader, because that's where the money is. It's also where the risk is, but that's where the money is. And we're taking that money, we're taking half of our money off the table, and then we're letting that ride on the rest. And we let that stop gradually open up over time. There's different things you could do to let that stop loosen up. One thing I do is I call keep the change. Let's say you're in a $30 stock and it goes up 10 cents or whatever, something very small. Then we don't move that stop up. And by doing that, we allow that stop to widen out just a little bit. The other thing I do is called gaining ground. So let's say you're lucky enough to where that stock jumps like 3 points in one day. Well, maybe you're only bringing that stop up 2 points, okay? And that way you're now 1 point away from 1 point further away. So again, when you first start out in that swing trade, it's kind of 1 for 1 basis. Stock goes up 1 point, your stop, STOP, goes up 1 point. And then after that, you allow it to gradually loosen up, okay? So initially, you see in this drawing from one of my books, you can see it's kind of stair-stepping up exactly with price. But then after time, we let that stop loose. Over time, we let that stop loosen up. I'm also slightly more liberal with my initial stop, so it's not always 1-to-1. I will play some of those games I just mentioned by letting that stop loosen up a little bit on the first loaf. Now, once we make the transition, we gradually let that stop loosen up over time. So it gets wider and wider, and we're adjusting to the longer term volatility. If you trade properly, what happens is the volatility of the stock you get in, because we're trying to capture an inefficient move, right? The volatility of your stock that you're in begins to increase. Also, the price, when the price gets higher on a point basis, it's going to tend to move more and more, okay? So that's another reason why we let that stop widen out over time. Now, if the stock comes in a little bit or doesn't make brand new highs, you don't do anything. All right, we now have come to the most difficult part of trading, and that would be trading psychology. So I spent a lot of time on a lot of people who see me speak in person, peers that is, they're like, I didn't realize you were so into trading psychology. Well, trading psychology is probably what I often say, methodology is like 90%, and then the other half is trading psychology. Vitally important. Now, obviously, attitude is far more important than aptitude. And there's a few quotes about this from Market Wizards. And I think it was was it Eckert, once said that he sees no correlation between success and intelligence. He knows a lot of smart people who can't trade, and he knows a lot of people who are more average that do really well. So I really think that attitude is so much important than aptitude. Now, it was probably about 15 years ago. I was speaking in San Francisco at the TSAA conference, and Denise Shaw was there, and she was talking a little bit about neurology, something I never really thought about much when it comes to trading. And you can't make any decision without emotions, okay? So when someone says you have to eliminate your emotions from trading, well, that's impossible. It's like you can't breathe while you trade. You cannot eliminate emotions from trading. And every decision, even what you have for lunch, and it's like I needed to eat something. I normally don't eat that early. Usually I eat about 9:30 or so, about an hour after the market opens. But this morning, because I'm just kicking off today's presentations, I had to eat something. It's like, okay, what do I eat so I'm not, burping doing the presentation or whatever. It's like, it's surprisingly how many emotions go into every single decision of your life. So when you go to make a decision, there's going to be emotions attached, and there's also going to be some sort of stress. Now, I know things aren't brought about by thinking about their opposite, but in trading, you really have to play devil's advocate a lot. And one thing I spent a lot of time working on, in fact, I woke up this morning and was writing about it again this morning, is the extraneous. There's so many extraneous influences when it comes to trading. You might have a fight with your spouse, your significant other, or both, okay? And you're like, well, I'll show her, and you come in your office and you think market's too high, and you fight the trend, you short it, and you lose a lot of money. And you're like, well, she'll never know. Now, here's the good news. Provided you've been trading for a little while, you know what you're doing wrong? Well, you know what you're doing wrong. One of my favorite examples here is a client a few years back, and he's been with me forever. But he went through a rough patch, as we all do, okay? I'm having a hard time right now because the market went straight up and didn't let me in, and we got stopped out of all shorts. First one or two longs hasn't worked yet, but I feel confident longer term in my methodology, especially when I go back and look at all the prior trades to put together a presentation like this, that it's going to work over time. But anyway, this one client calls me up and he says, Dave, I can't make any money with your service. And I'm like, it's like, okay, well, let's take a look at that period of time. It, it wasn't a great period of time, but we were doing okay. And he insisted that I take a look at his trading account, gave his password and everything, log in. I'm like, look, this is not what I do. Technically, it's for information purposes only. And he's a Italian fellow, and he was not going to take no for an answer. Okay. So I looked at all his trades. I put them in a spreadsheet, and I noticed that he followed the service to a T, almost better than I did over that period of time. And he made a little money. It wasn't much, like $300 or $400 over several months. And I'm not bragging about that, but the point is that he really did a good job at following the trades. So he actually made money. Where he didn't make money was he had 21 trades and Continental Airlines, which no longer exists, but these were day trades. And he had lost about $5,000 or thereabouts on those trades. And I said, look, I've got good news. It's like, you did a really good job following service. In fact, I think I was barely breaking even or barely profitable over that period of time. You actually made a few $100, $300 or $400, I think, by doing exactly what I said to do. Do as I say, not as I do. And I said, but here's the gotcha. It's like, you lost $5,000 on these day trades. And before I could finish explaining myself, he said, I know. It's at one point, it was probably back then, I said, look, I tell you what, let's do this. Tell your wife, you're going to follow this guy, Dave Landry, and he's not the ultimate guru or anything. He doesn't have the Holy Grail. Sometimes he makes money, sometimes he doesn't, but overall, over time, he does well, knock on wood. And I'm going to follow this, and I'm going to show you that I'm following it. And if you make trades outside of the methodology, then you have to show your wife those trades too. And he said, oh no, that went into marriage. So that told me right there that he wasn't ready back then to hold himself accountable. He is now, though. He's a really good trader. Now, in summary, find something simple like Landry light pullbacks. Again, like Rasky said, all you need is one pattern to be successful. You want to study the heck out of it. Go back and look at those 6 months of trades that I just showed you. DaveLandry.com/archives, okay? And again, you can get the newer ones on YouTube, youtube.com/Dave Landry. And notice what I was seeing at the time, what the market was doing at the time, okay? And without any benefit of hindsight, look at the setups, okay? You want to pick the best and leave the rest. I know it's cliche, but you'd be surprised how many times people will send me setups that look nothing like my setups. It's not going to be like electrocardiogram. Use proper money and position management. Make sure you identify and separate the extraneous. If I was given more time in these presentations, I'd spend a lot of time on the trading psychology and specifically the extraneous influences. Tom McClellan's mother, late mother Marion, paraphrasing, she once said, everyone uses timing in their investments. Some people buy when they have money. Some people sell when they need money, and others use far more sophisticated methods. So there's a lot of extraneous influences out there when it comes to trading. So in summary, pick the best, leave the rest. Know that you might be your own worst enemy, or you are your own worst enemy, your best friend and your own worst enemy. And may the trend be with you. There's all my contact information. I'll be happy to, we got a few minutes left. I'll be happy to take some questions and look at whatever you want me to look at. Jeffrey's trying to find his mute button. Thanks again, everybody, for attending. I appreciate you being here.
I have to turn on my microphone.
I was wondering.
Hopefully it wasn't live the whole time.
I'm like, am I going to have to start dancing, or what do I do now? I'm out of slides.
Yeah. Apologies. We do have a bunch of questions, and hopefully my mic wasn't turned on the whole time. But I assume you probably would have told me. Anyway, Robert wants to know, are there special considerations to your strategy when you're using a bear market?
Pretty much the same patterns work to the downside. I am a little bit more, I hold back a little bit because we had that big rollover and we shorted 2 stocks, and both of them failed miserably. So in more recent times, I'm a little bit more cautious on the short side. You're not gonna get rich on the short side, but the reason I do short is, one, obviously it's the only way to make money in the bear market, but two, it helps you to see both sides of the market. If you have short patterns and long patterns, which in my case are pretty much the same patterns, then you're able to see both sides of the market. Now, what I would recommend if you are going to short, catching that first transition when the market rolls over. If you go back and look to, and maybe we did some I think we did some presentations on this last year at these Metastock conferences. They should be on YouTube. But you'll notice that we did put on quite a bit of shorts last year when the market rolled over, and the transitional patterns, the bow ties, which I didn't have time to get to today, but we did talk about in previous presentations. So go in and watch those previous presentations. Something like bow ties when the market is first rolling over from all-time highs is a good pattern on the short side.
Danny wants to know, do you do trade alerts for day trades or just swing trades?
Just swing trades. I do have a Facebook group, and occasionally I'll put out what I call an opening gap reversal. And if you go to my YouTube channel, which Jeffrey just put the link up for, look at the methodology and action clips, and you'll see some of those opening gap reversal trades. I don't have a day trade alert service, so to speak, but in my Facebook group, which you have to be at least a gold member of DaveLandry.com, I will show the opening gap reversal trades when I take them personally. I'll show them in the group, and I'll also point out when maybe a stock is triggered or unfortunately stops out, or on the plus side when it hits the initial profit target. So I am in that Facebook group all day. If somebody wants to ask me a question there, I will respond immediately, and I have the chat and everything. They can ask me personal questions. So no official alert service, but I am there during the day for anyone who needs help.
Right on. Donald wants to know, Dave, what's your opinion about using 4-day trades? Day trend. Okay, let me start over. What's your opinion about using 4-day trends before changing a position?
4-day trends?
Mm-hmm.
I don't think that's long enough for, unless unless it's something like an IPO or something. I don't think that's significant, because remember, I'm looking at a longer term trend, and I'm looking for a way to get on it, or some sort of trend transition like the bow ties we talked about in the last presentation. So 4 days depends on the magnitude of the move. The magnitude's big enough to stop me out that I get stopped out, but it's a very short period of time to look for a trend, unless, again, like I said, you're making some sort of transitional pattern.
Francisco says, thank you, Dave. Great presentation. Troy says, thank you, Dave. And Francisco, earlier, he said, when you're talking about the flat 6 months, he said flat covered calls and condors were a good strategy for him then.
Yeah, I did a recent presentation where I said the sun doesn't shine the same dog's arse every day. If you're in a choppy trend like that, yeah, I hear you. I try to not have too many moving parts to the trades, and I find that options, even something like cover calls, which seems simple, can have a lot of moving parts. And let's say you've got a cover call and the stock begins to break down. Do you exit the stock? Do you cover your call? Do you roll it down? It gets really complicated really quick. I find like the engineering types are really good with the covered calls. They like to tinker and mess with the numbers and stuff. But for me, I keep it really simple, and I'll just do straight out options. I do like to play options like on a gamma basis, so something short dated, like maybe tomorrow, if something looks really, really good and begins to take off, or especially like an over the gap reversal for intraday, I'll go in and buy some out of the money options cheaply. But for the most part, I don't do a lot of option trading, at least that spreading it, all that other good stuff.
Pardon me if you heard that. I throw my laptop around over here. All right. Those are the questions, Dave. Thank you so much. I think I appreciate the coming in and doing this. And all the systems that Dave talks about, they're already in Metastock. You can go get them. You can go use them. Very, very cool. So DaveLandry.com. You can go to a bunch of his different links here. Dave, let's have you back again soon.
Thank you, Jeffrey. Love being here. Thank you so much.
All right, very cool. Let me go ahead and take the presentation over here. You're welcome to leave too. I've actually got it set up so nobody can shut down the webinar and ask.
Yeah, I remember that.
Which is finally something that they added for us. So that's nice.
Yeah.
Cool. All right. Thank you very much. All right. As we move on to the next presenter, I want to say thank you to Stocks and Commodities Magazine. As I mentioned right before Dave started, they've been a great partner with Metastock. They've supported all of the events that we've done. They've done it for about 14 or 15 years, and we really appreciate it. So a big thank you to them. Great magazine as well. You're here on day 4 of a 5-day seminar, watching, paying attention. Obviously, you know how important it is to continue that education around trading, and this is a great way to do it. Traders.com. So another great way to do it, and you can do this for no cost at all, is you can come to join our Traders Forum. You can join the trade. Oh, there's not a slide here. You can join the Traders Forum at tradersforum.com. I'll talk a little bit more about it after we have Silas. So I do want to tell you that all of the specials, Dave talked a lot about his bow tie, or not his, he talked about a lot about one of his methodologies today. It's built into Metastock along with a lot of his other methodologies, and he's just provided it for free. So if you want to get started with Metastock, that's just another great reason to get going with it. You can start a subscription. If you pay for a month, we'll give you the second and the third month for free. It's going to cost you about $75 a month to do that. It's cheap. You're going to pay more in gas. I must promise. So you can go to metastock.com/conf-promo. You can give us a call, 800-882-3040, and you can go to metastock.com/saleschat. I'll be coming back in just after Silas to talk a little bit more about an Ichimoku method that's very, very cool in Metastock too. So stay tuned for that. Our next speaker is Silas. Silas is a good friend of mine as well. I love the methodology he's about to talk to you a little about. We've had him plenty on the forum. And Silas, I did get that email sent to you to the right address after the second try today. How you doing, Silas?
Don't make me crack the whip on you, Jeff.
Oh, there you are. I have you in here twice. So
Okay.
Talk. Okay, I can see which one's actually talking. So let me make that one the presenter.
Let's see if I can. I've got an echo. Let me see what's going on here.
Yeah, I think it's because you're in here twice is why.
I just like this event so much.
Yeah. You're trying to drive up the attendance, right? I'm going to excuse the other instance of you.
Yes,
so
please.
If something happens, just log back in, okay? Yes. Okay. Are you still here?
Am I still here?
All right. Very cool. Did the echo go away? Hello?
Okay. Am I back?
Yeah. You're here. I can hear you. Did it just ask if you wanted to share your screen? Hello?
Not here.
I can hear you. All right, Silas, I think you're not hearing me now, which is fun. Okay, he's going to come right back. All right, well, he does. Let's give away a book real quick. You're here. You're chatting in the chat. I'm going to give away a good friend of mine, Steve Bigelow. Great partner of Metastock over the years. Super good friend of Metastock, great partner. Somebody I learned a lot from trading, and we definitely miss him. Can you go give away his book, Eliminating Emotions, by Steve Bigelow.
Hey, Jeff, can you hear me?
Yeah, welcome back.
Cannot hear you, so not sure what happened.
We can hear you.
If you can hear me, can you put a thumbs up or an okay on the screen?
Yeah, we can hear you. We can hear you. Okay. See if this works. Hey, Silas, can you hear us now? Well, he could hear us twice before, and now he can't hear us at all. So I'm wondering how did we resolve that? Okay, let's give away this book real quick. What I want you to do is right now put in a number in the chat between
Test,
0 and
test.
100. We can hear you.
Oh, gosh. All right, I can hear you.
Okay. I just asked the chat to put in a number between 0 and 100 so that we could give away the Steve Bigelow book. Wow, we were getting your audio working. So
Yeah, sorry about that. Everything's good though?
I can hear you great. Yeah.
All right, awesome.
So type in your number. I'm going to go ahead and do a Google number after we get Silas started, and I'll let you know in the chat who wins. So let me make you the presenter here, Silas, and it should ask you to share your screen.
Ready? All right.
Okay, here it comes.
Awesome.
That worked excellently the first try.
Sorry about that.
No worries at all. It happens. We haven't really had a lot of problems this time, so we were overdue for one. I can hear you. I can see you. I'm not going to curse things. I'm going to go ahead and get out of the way. I'm here if you need me.
Okay, awesome. Well, I'll try to get you guys back on track. So thanks, Jeff. Appreciate that, and appreciate you getting that email address updated for me. Give you a hard time. Thanks to Metastock again for these events. Always an awesome event. I do truly love these. Always a great audience. And so if you guys, as always, if you have any questions, comments, feel free to ask in the chat. And then once we get through this little workshop here, because my goal here is to actually teach you a strategy that you can start implementing immediately. Okay, so it's not just some fluff. I'm actually going to teach you something that I've been using for several years, and we'll kind of walk through that. But you will have the complete mechanical strategy. So my name is Silas Peters with T2 Markets, and you are here today, so you are definitely in the right place. And what I'm going to do here is give you a methodology with a clear set of mechanical rules, high probability setups, no guesswork, and hopefully you can start trading with some confidence. Now, we must quickly cover the risk disclaimer. We know past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So I think you guys have probably seen that before, but it is very important. Now today, what we're going to talk about, what you will learn, is why price action patterns beat indicators. This 3-point setup explain step-by-step entry and exit rules. And we're going to talk through real trade examples. And then again, you will learn how to apply this starting today. And my goal for you is that I will prove to you that this works in any market or time frame, because we are trading price and price alone. But the real benefit of listening to this workshop here is that you're going to be done chasing hot stock tips. Okay, there's not going to be any need for dozens of indicators cluttering your charts. You're going to have the exact rules for entry, exit, and target. And these are the types of setups that you will now begin to see on your charting platform, like this trade here in GE, this trade here in Barnes Group, this trade here in Bank of America. Gold futures is a 4-hour chart, a 240-minute chart, even down to the lower time frames like the 5-minute chart, the 2-minute chart, even on tick charts if you wish to go that low. And everything is going to be plotted out for you very, very specifically. So there's no guessing, no hunches, and just no gambling. Okay, so you're in the right place today if you want simplicity and consistency. If you're one of those out there that has tested dozens of indicators and subscription services, you're not in timeout here. We've all tried dozens of things before, and it's important. You've got to figure out what works best for you and what suits your personality. But if you've been frustrated by emotion-driven trades, you want something simple and mechanical, then you are in the right place. Now, if you are one of these that who's fed up with just complicated systems and that endless noise and cycle of indicators and that hamster wheel, then pay close attention, because what I'm about to show you today is different. You're going to finally get something that you can rely on, which means no guessing. Okay, you want to enter the market with confidence where you're not guessing and gambling. Now, before we get going here, a little bit of a background on me. My name is Silas Peters. I'm a founder of T2 Markets, co-founder and partner of Blue Marlin Advisors, entrepreneur, risk taker, full-time trader, speaker, author, educator. Started my career at the Chicago Board of Trade. And then most importantly here is that I am a husband and a father to two beautiful girls. I'm a mentor to thousands of students. Now, I have spent years in the trenches trading stocks, options, futures, currencies. I tried everything, indicators that claim to predict the market, to flashy newsletters, elaborate strategies that cost more in frustration than they've ever really paid off, and taken losses. I've taken losses, but over time, I found what works, and now I build tools so you don't have to bleed your account dry experimenting. Now, what I want to kind of address is, why most traders struggle initially, and why most traders fail, and why, what many of you are probably going through or have at least at some point. And it's really due to overcomplicating systems, chasing lagging indicators, and making emotional decisions, and really just lacking a repeatable edge. Now, before I discovered this particular pattern, I was probably right where you are, charts looking like spaghetti, indicators everywhere, chasing hot stock picks, just overcomplicating the process, looking at all these Greeks and robot trading or EAs, black box systems, and just, these really overly unnecessarily complex strategies. And, the drill of, hey, we need some more damn indicators on our charts. We have 55 indicators, that's gonna solve our problems, and it really leads to just emotional hesitation, entering too late, exiting too early, risking more than you should. And I got burned, again and again, lost money, losing confidence. And again, you get trapped in that cycle of kind of hoping and second guessing. So I'm sure that this resonates with anybody. And I'm just kind of getting through this initially here. And yeah, of course it does. And so what it led me to is what I call kind of the big discovery, and something very powerful. And it's a 3-point reversal pattern that we're going to be discussing here shortly. This has been around forever, but most traders actually ignore it or overcomplicate it. And I thought, what if we could build something, kind of completely mechanical around it? Exact rules, precise targets, no emotional guessing. Start it up, back it up with tests. I was already doing this manually, and I knew the power of it and that it already worked. And I already gave you the hint. It only consists of 3 steps. And I'm going to ask you, can you follow 3 steps? And step 1 is pretty simple. We're going to spot the reversal structure, define the exact entry, exit, and target. And then we're only going to trade when those 3 rules align. And if you do these, then your trading becomes much cleaner. And if you skip them, then you're back to the noise. And I'm going to talk to you, why price action? Why price action? Because when we have a price action, we have repeatable setups. We have a strategy that works across all markets, and they're easy to spot in real time. Okay. And this is an example of what that can look like. Now, what you're seeing here is just plain price, right? And it really may not mean a hill of beans to you right now, but trust me, these charts are going to mean everything to you. Okay. This is going to be your go-to method that you will use every single day. And these will become your favorite charts. Okay. And I'm going to show you exactly what we are looking for inside these charts. And how do I know? It's because this is the same strategy that I've been using for nearly 20 years. Okay. We've got literally hundreds of students who've learned to essentially wipe everything off of their charts, all of the crap and the clutter. And I'm not saying you've got to remove everything, but I'm going to show you a very clean, methodical method that just flat out works. Okay. And again, this is what it looks like. We're looking basically for what we call the 3-point pattern. And the best thing is that it can be plotted directly onto your chart with no manual input. Okay, so you can find very clean swing trades, very clean day trades, whatever method or style it is that you use. Okay, so I'm going to go ahead and address this. You know, the question that I always get: well, what markets does it work on? What time frames does it work on? Does it work on stocks? Does it work on futures? Does it work on options? The answer is yes to all of that. Okay, because again, we are trading pure price action. Okay, this is these happen. This is not some anomaly. We get these setups and these patterns every single trading day, whether you trade a 5-minute chart of the S&P, whether you're trading Forex or stocks. And again, with all these examples, simplicity beats complexity. Now, how smooth and how clean were those setups that I just shared with you? Exactly. So let's get right to the rules. Okay, so this 3-point strategy is going to start with step 1, and that is identifying the trend shift. Okay, this strategy, we'll call it the 1, 2, 3 strategy, is a trading hack that helps traders identify trend reversals and continuation patterns with very high accuracy. Okay, again, whether you are a day trader, a swing trader, or position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets. So let's start with point 1, as this is really the baseline starting point for our pattern. Step 1 is about spotting the reversal. Okay, so point 1, let me get my handy dandy drawing tool out, is really the highest point in an uptrend. Okay, or the lowest low in a downtrend. And so if we look at this example, we've got price making, higher highs and higher highs. And so each of these higher highs is going to be your number 1 point. Now, in a downtrend, each of these lower lows that we see here is your number 1. Okay, so again, guys, if you can count to 3, then you're going to be in good shape. Okay, so point 2 is actually the retracement. So we know that we're going up, and then as we have a retracement, that we're now looking for our number 2 point. We're in a downtrend and we have a retracement, we're looking for our number 2. So here is an example. We have that last higher high, which is our number 1, and as we retrace lower, this gives us our number 2 point. This number 2 should actually be over here. In a downtrend, we have the lower lows, lower lows. When we get that first retracement up, becomes our number 2 point. Everybody follow me so far? Told you this was going to be easy. Point 3, as the name applies, is our third leg. It's the second low point or high low for a long or bullish formation, or the second high point or lower high for a bearish formation. So you can see here that we have a lower high. We have a number 1. Here's our retracement number 2. And we retrace up. This is a lower high. That's our number 3 point. Okay. On a downtrend, it's a higher low. Okay. So we have a number 1. Here's our retracement up. We pull back, but we may have a higher low. That becomes our number 3. All right. So that's all we've got to do to start off here. That's our 3-point profit pattern. So what are we missing here? Yeah. I mean, how do we enter? How do we enter? Where do we enter? Anybody want to take a wild guess on where or how we enter? Well, we simply wait for a break above or below the number 2 point. That's it. Above or below the number 2 point. So a bullish entry, this bullish example, means we're looking to go long, expecting to go higher. We're simply waiting for the market to break above that number 2 point, trade through that number 2 point. And so as we can see here, price traded through and above the number 2 point. And I think that we can all see and all agree on that. For a bearish example, just the same thing, but now flip to the other side. So here we are bearish. We are looking to sell the market, expecting it to go lower, right? And we are, of course, waiting for the market to trade below the number 2 point. Okay. So do you see how this is damn near, if not 100% mechanical? We are all seeing the same thing. And that means that this is rules based and that it is mechanical. Okay. We want to make our process as mechanical as possible, because why? Because it eliminates confusion, it eliminates emotions. Okay. So once price breaks through 0.2 after forming 0.3, then that signals a trade entry. So very straightforward up to this point, right? Very straightforward. So what about stop losses? Because every time that we consider getting into a trade, we've got to put a stop loss in. Why? To manage our risk. And what about profit targets? We always want to know what our target is, or where our target is, to take the trade off the table and bank profits. That's why we're actually trading in the first place, right? Is to try and extract profits from the market. So then that really takes us full circle. Trade management, right? Once you are actually in the trade, what exactly do we do? These are all great questions, and they're extremely important. We know that we have to use the stop loss to protect our capital, and we always need to know where we should look to take a profit. This is why we're in the market in the first place, as I've already said. So let's first cover stop losses. That just simply means that sometimes Mr. Market does not do what we want it to do and goes in the opposite direction, and that's okay. We're not going to be right 100% of the time, so we put a stop order in to protect our capital in the instance that we are wrong. So for a bullish setup, it's below the number 1 point. Okay, that's our initial stop loss. So we know that we have our 1 and our 2 and our 3, and we know that we're looking to go long, buy the stock, buy call options, buy futures, sell bull put spreads, whatever our style is. And our stop is going to go below the number 1 point. Okay, below the number 1 point as our initial stop. So for a bearish setup, again, not difficult. You guys probably have already figured it out. It's going to go above the number 1 point. So we've got our 1, we've got our 2, and we've got our 3. Our stop loss, we know that we're looking to short, we're looking to sell the stock, sell futures, sell bear call spreads, buy puts, whatever your flavor or style is. Our stop loss goes above the number 1 point. Okay. So now let's talk about profit taking. This is the fun part. Profit taking. Where do we look to take profits? So for a bullish setup, we're simply looking for the distance between the 1 and the number 2 point, and then we measure up. Okay, so let's talk about what that looks like. It's the distance between the low of the 1 to the high of the 2 measured up. So whatever this range is, and you can see it, it's $1.98, $1.98. We're going to take that in equal distance, and we're going to measure up. So we know that the distance is $1.98. We're going to add $1.98 to the high and add that up. Okay. So we take that 198, we measure up. This is where our profit target is. Very simple. And again, very mechanical. Bearish setup, you guys seeing kind of a repetitive pattern here? It's the same exact rules, the same setup, just flipped. So for a bearish setup, it's the distance between the 1 and 2 point, and then measure down. Let's look at a visual. So we're going to measure from whatever this high is, and then whatever this number 2 low is. We're going to take that range. You can see it's $3.68. We're going to subtract that from the number 2 low. Okay, whatever this is, we're going to take that number, subtract $3.68, because that's the range between the 1 and 2 point. And that becomes our target. And I'm going to tell you right now, it is quite uncanny how often we reach that to the tick and then often reverse, just like you see in this example. Okay. So let's recap here. For a bullish strategy, we've got the trend established. Okay. Yes, a bullish strategy, we're looking for price heading lower. And then we're looking for it to find that last gasp low and then retrace higher. And then we're looking for it to confirm a higher low. Okay, we have a low, we have a higher low. And then we have our 1, 2, 3 pattern. And we're looking for price to trade up and above the number 2 point. So for that bearish strategy, for bear strategy, we are looking for price to be heading higher. We're looking for price to retrace. We're looking for price to attempt to make another high, but put in a lower high. So we have a 1 and a 2 and a 3. And to enter, we're looking for a break or close below the number 2 point. Okay. So let's look through some additional examples, guys. It's just about repetition here. This is a monthly chart. A monthly chart here. We have a 1, we have a 2, and a 3. What are we looking for? We're looking for a break and close below that number 2 to take us down to target 1. On a weekly chart here, we have a 1, we have a 2, and we have a 3. What are we waiting for? We're looking for price to take us through number 2 and on to target 1. All right, this is a daily chart. Daily chart, we went from a monthly now to a daily. You can see we're looking for bullish setups and then looking for that last 1, 2, 3 pattern, and we're looking to get long on a break above the number 2 to take us onto target 1. Hourly chart. The lower you get, the lower time frame that you get down into, you're going to have more setups, right? Because price action is moving much more quickly. Okay, price is moving much more quickly. So here we have an hourly chart. We've got 2 setups here with the break, our stop, target 1, target 2, our break, our stop, target 1, and target 2. Everything is plotted for you on autopilot. No putting the calculator out, having to do this by hand, which is what I did for several years. Thanks to technology, it's all automated. 1 minute chart. We've got 1 setup, 2 setups, 3 setups, 4 setups, 5 setups. Everything plotted out for you in a very nice format. And I know people that are using this on 15 and 30-second charts. So when we utilize this mechanical method, you understand that we're only trading when all the rules are met. There's no forcing trades here, no forcing entries. We're not guessing. There's no fudging criteria because you feel like the market should move up or down. We're simply waiting for our 3-step criteria to be met. And so when we wait for these rules to align, it's what separates hobby traders, emotional ones that are second guessing, chart hopping, chasing entries, to those that are following a systematic process, a mechanical plan, because it's either there or it's not. Okay, these are real world trade examples. Real world trade examples here. You can see that everything is plotted for you. There's your 1, there's your 2, there's your 3. Can we all agree that we see that? Yes. And once we break through the number 2 points, you're going to get your stop, breakout level, target 1 and target 2. And when you hit your target, you're going to get a nice little smiley face that says, congratulations, pat yourself on the back, you had a winning trade. Here we are on gold. Doesn't matter if you're looking at gold futures, GLD ETF, gold miners, micro gold, mini gold, does not matter. Delta Airlines, here is a long setup. Also flagging here the direction for you in case you just get off the reservation. See how simple and mechanical that these setups are. And all we try to do is rinse and repeat. Rinse and repeat. And then we start the next day over with the same process. Cardinal Health. Okay, how would I trade Cardinal Health? Well, we can buy the stock. We can buy call options. We can sell bull put spreads. Okay, now we move up. We have a short trade. How can we trade this? Well, very simple. We can sell the stock, we can sell bear call spreads, or we can buy bear put debit spreads or bear puts. Same thing with Google. We see the setup here, sell bear calls. See the setup here, sell bear calls, buy put debit spreads. All we're doing is keeping things simple. Do we need a bunch of complicated Greeks? Do we need some type of crazy, Fibonacci arcs, Elliott wave theory added? Look, I'm not knocking it, but the answer is no. I think you guys are probably starting to see that. So what have we learned so far? We've learned what we call a 1, 2, 3 step pattern. Everybody here up to this point feel confident in what I've shown you so far. Something that you can say, yeah, I can follow this. I can do this. 1, spot the pattern. Is the market heading higher or lower? So the market is heading south. We're waiting for that last low to form to start our number 1 count. We get our retracement back up and then a pull back, giving us our number 2. We have a higher low locked in, our number 3, and now we know that we are looking to get long on a break or close above the number 2. We already know whether this is a daily chart, so we know days in advance. We immediately know where our entry and our stop loss will be. And so we can put that entire order in together. It's called an OCO, order cancels order. Okay, so we're doing all this manual stuff right now, drawing, well, we're measuring this, we're measuring that. Well, thankfully, with Metastocks technology, you don't have to do any of that. Technology does all the counting and calculations for you. But we know that our target is the distance between the high of the 2 measured to the low of the 1 measured up. And our stop or risk is going to be below the number 1. And then step 3 is execute. It's execute. Put the trade on. So price breaks above the number 2, then we can put that order in as an OCO order. Order cancels order means you get filled, you get in, and immediately you have a target and a stop go in. If the market trades up, hit your target, it's going to cancel your stop. Or if the market does not work out, stops you out, it's going to cancel your limit order. So how do we trade these guys? Bullish. We buy the stock, buy futures, buy call options, sell bull put options, bull put spreads. Okay. And in this chart of ABC or XYZ, I purposely left the symbol off because it doesn't matter. People ask, well, what symbol is it? What market is that? Doesn't matter. Bearish, we sell the stock, sell futures, buy put options, sell bear call spreads. And then we just get out of the trade and then we move on to the next one. You're probably wondering, how do I do all this by myself? How do I find these patterns on my own? Well, at this point, you know what it takes, right? You see the steps, but you might be thinking, well, great. Now I've got to learn charts, learn all these indicators, spend hours back testing, buy expensive tools. No, that's what this strategy is built to eliminate. You get a system that does the pattern spotting, the plotting of entries, exits, targets, and then all your job is to run the scanner and look for setups and execute across any market or time frame that you wish to work on. And you then therefore start trading with clarity. So what if you had a tool that locates the pattern and setups for you, that automatically plots your entries and exits, that could scan multiple markets and time frames? Would that help you find high probability trades on a daily basis? Of course it would. And good news, and we're glad that you're here because that's exactly what we did, is we built a tool that does all of that for you. So do you remember the examples from earlier? Remember the examples from earlier? Like this example here, where we basically had to first spot a pattern that was forming. Secondly, had to then map out the 1, 2, 3 points. And then lastly, where we had to get the calculator out and define the range for our targets. Well, we've got $53.19, and this is $46.33. I'm going to subtract that and subtract that. I think that's $2.81. We're going to subtract $2.81 from $53.32. Whatever. We don't have time to do that. We don't need to do that. If you're trying to trade something like the NASDAQ or Bitcoin or whatever it is it may be, you certainly don't have the time to do that. So with the powers of technology, all of the heavy lifting is done for you. And it looks absolutely beautiful here that we can see on Metastock. You've already seen some of the examples here. Beautiful. Again, I have no idea what this chart is. It doesn't matter. It does not matter, right? You have the technology finding the pattern for you, and you just flat out take action and execute. Here we are on the SPY S&P 500. Here's another one on the S&P 500. We have our 1, we have our 2, we have our 3, and then here's that breakdown. Here's a little entry that says, hey, we're getting short, and we have target 1 and target 2. Here we are on Meta, META. Same thing, guys. Same thing, same pattern. What are we looking for? Looking for a 1, looking for a 2, looking for a 3. We're not guessing. We're not doing this manually or by hand, are we? No. There's our entry, and then we're simply waiting for target. Here we are on the other, on the flip side here. Our 1 and our 2 and our 3. There's our confirmation entry. There's our target 1. And a little reassurance there from our little happy guy with the smiley face. It says, boom, congratulations, bank your money. GE Aerospace, again, the chart is a little expanded out, but I don't know if you can see these little dots there for you, but there's your 1, there's your 2, there's your 3. There's our breakout level. Our breakout level is what? A break above the number 2. That's our confirmation. It's our confirmation. Okay. And then in the old days, you'd have to, measure from the low of the 1 to the high of the 2. All right. Well, that is going to be $18.17. And we're going to measure that up, whatever the heck that is. And there's our target. It's all done for you, as we can clearly see. GLD, gold. Monster moves going on in precious metals, crude oil, even the indices like the S&P, NASDAQ, Dow, and Russell. Awesome moves on the daily, 4-hour, 1-hour, and the intraday charts. This is our go-to bread and butter to trade on the intraday as well. Speaking of crude oil, here we are on crude, guys. We're talking, 4, 5-figure moves going on right now in some of these markets. Now, this is obviously, and of course, Metastock, which just looks absolutely incredible on, does all these calculations for you. But we've also coded, programmed, built this out for platforms like Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4, and even Wealth Charts. So it's very flexible. And, why is this different than maybe other things that you're used to seeing? If you're using something else and it's working for you, then keep using it, okay? Keep using it. But I still would argue that this would probably help you in your decision making. This is different because, as you've clearly seen, we don't have dozens of indicators on our charts. We're not chart hopping, just staring at charts, wondering what the heck we should trade, because the scanner and the technology is telling you this is what you need to be trading because we have a 1, 2, 3 setup. And once we look at that chart, we're not second guessing anything. I'm sure you've tried it all, 20 indicators, 10 subscriptions, loads of strategy experts. And all it does really at the end of the day is clutter your mind, drain you mentally and financially, and still leaves you lost. This is different. Simplicity, mechanical, and a clear set of rules that you just follow. Okay? Mechanical consistency, so you know what to do next. Reduce your stress, no emotional decision making, and have a set of high probability setups that you can go and implement every single day. And when you implement what you've learned today, then this is what your new trading day looks like. Confidence. You wake up, you're happy to sit down at your desk, glance at your scanner, you see the setups, and you know exactly where your entry, exit, and target is. So no emotional guessing, less stress, better decision making, and less margin for error. And I'm going to tell you that we do practice what we preach. Using this as one of my primary entry method techniques, we see results. We see results, and results matter. Okay, this is our primary entry confirmation tool. Let me tell you something. I want to be very clear here. I would not continue to be using or talking about this nearly 20 years later if it didn't work and we did not believe in it. Plain and simple. So why do I still use this every single day? Because it's simple and repeatable. I don't want to get stuck trying to make 24 decisions. It's price action based, it's pattern based, it's not lagging, and therefore it works across all markets and time frames. Okay. I don't get caught up in, well, does it work on this? Does it work on that? It works across all markets and time frames, whether you trade everything from stocks to futures, to currencies, to crypto, to tulips and tea leaves. If it can be plotted onto a chart, then you can have this pattern run for you. And now it's all automated. So I built a step-by-step program to help master this strategy. And we do it with what we call the 3S code, where we automate, execute, and repeat. Automate, execute, and repeat. And again, it's through the 3S code. That includes full on-demand trading, watch whenever you want at your speed, full indicator and scanner suite, the tools that you will now use daily. Members only Telegram room. We've got ongoing support and community. You're not alone. We have weekly live trading and training sessions where we walk through real trade setups. We walk through real trade ideas together so you actually see all of this theory being put into practice. And it's all done through, again, what we call the 3S code. Now, let me ask you this. Let's do some math here. How many losing trades have you taken because your system was unclear? How many indicator subscriptions have cost you, I don't know, $50, $100, $200, $300 a month? Or how many, hot tip newsletters promised you the moon and delivered scraps? Well, if you added up the time and the stress and the mistakes and the pain, you've already paid way more in losses and wasted effort than what this will cost you, because I'm sure we've all been there and done that. Now, if you try to build what I'm giving you here, scanners, indicators, rules, training, live sessions, community, access to me, you'd spend thousands. You lose time figuring out what works, you'd make mistakes, cost you money, stress. But here, this is package proven, ready. We're not going to charge $3,000. We're not even charging $2,000. We're not even charging $1,000. None of that. Not even near that. With this package, it includes the 3S code indicator, the 3S code scanner, weekly strategy and scan sessions, a private Telegram room where you can spot high probability setups every day without hesitation. Imagine having mechanical clarity. You know exactly where to enter, where to exit, where your target is. Trading both swing and day without all the chaos, without worrying what that newsletter or indicator you just saw is going to suck you in. 3S Code eliminates all this. And not only are you getting the indicator and the scanner and the strategy sessions and the Telegram room, but you're also going to get my 25 top option strategy guide, chart pattern principal trading guide, and all of the other quick start guides and bonuses. And you can have all of this today for a one-time unlimited lifetime access for $397. And you go to metastock.com/code, or you can call 1-800-882-3040. Now, what I want to do here is make sure you understand everything that's included here, okay? So we have this available for all of these platforms: Metastock, Swim, TradeStation, Ninja 8, TradingView, MT4, and WealthCharts. And we don't limit you to just, one. If you like to use, 1, 2, 3, or all 6 of these, 7 of these, however many it is, then you have the ability to do that. Now, the weekly strategy and scan sessions, what are these? They are held every Tuesday at 11 a.m. Eastern. What do? Well, we get into the charts live and we discuss top setups, day and swing trading, the 3S code, options ideas, trading minis, micros, ETFs. We talk about data. We look at institutional data. We look at seasonality, and you walk away with a handful of ideas that you can go and implement if you wish. Go to metastock.com/code. Now, the indicator and scanner includes a visual plot of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, target levels, customizable settings with multiple look back periods. You can scan for setups only, trigger only, or both. If you are biased one way or the other, you can look for tops only, bottoms only. Okay. You can scan for intraday setups or swing setups or both. Multiple time frames. Find the time frame that works for you, that ones that you like to do, and then you just execute. Stocks, ETFs, futures, Forex. Settings are customizable. If you don't like red, you want hot magenta, then you can change the colors. That fits your style. Now, bonus 1 is my chart pattern principle trading manual and guide. This is going to help jumpstart you by teaching you how the markets work, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality, much more to trade this incredible pattern. Bonus 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a very powerful trading instrument if you know how to use them properly. So it's important to me to include this so everyone can take advantage of options if they wish to do so, and do it the right way using the 3S code strategy. Bonus 3, as already mentioned, is access to our private Telegram channel. Okay, we cover stocks, ETFs, indices, futures, commodities, currencies, 3S code setups, providing data and ideas in there every single day, guys. So you are basically, being fed fish while you're learning to fish. Okay, and I'm going to tell you, this is very important. This is not just me, doing this, guys. We've got hundreds, really now thousands of students using this methodology. They've got it on every chart. I talk to a lot of our students. I might do a remote session. We have live, doing live events, and it's on every chart. It's on every chart, and it's not cluttering up anything that you might be doing. We've got students that come to me and say, I've tried indicators before, they didn't work. Well, it's an indicator, but it's price action, right? This is really price action, and we've taken that price action methodology and we've had it coded into an indicator. You could do all this by hand. Help yourself. You want to do this by hand? By all means, help yourself. You don't have to buy this indicator. You don't have to buy this. You can do it all by hand. And I did it by hand for years. People say, well, I'm new, I don't have time. That's fine. You can do this on, end of day charts, weekly charts. It works on all time frames. People say, well, what if markets change? Markets have been changing for years, but really markets are moving down or going sideways. So the strategy is based on price action, and that is what's so critical here. It's price action based, which means it's timeless. So if you're sitting there going, I bought indicators and I've got burned, well, I get it. It's why this isn't some secret sauce indicator. It's mechanical. There's no black box here. I've taught you the rules. Or, I'm not experienced. I don't have hours of time. You don't need to stare at charts all day. And that's exactly why this is so special. What if markets change again? Well, again, we're trading price action, guys. Price action isn't going anywhere. When emotions flare up and your other mega indicators are lagging, or somebody on CNBC is saying that this is going up while your newsletter is saying that this is going down, cut that noise out. Cut that noise out and focus on the price action. So we've opened this up today, guys, and yes, you are reading this correctly. This is lifetime. So this also includes any future updates, enhancements, anything that we may do or add, and frankly, we haven't added anything in maybe, I don't know, 15 years or whenever this was built, because we don't need to. Okay, it's continuing to work. Why change something, fix something if it ain't broke, is what they say, I think. So here's how you get started, guys. metastock.com/code. You get lifetime access, indicator, scanner, weekly strategy, and scan sessions, private Telegram room, all the bonuses and guides. Of course, we've got installation guides and videos. If you can turn your computer on, and the fact that you are here today and you were able to log in to GoToWebinar, which yes, I had some trouble myself, but if you can do all of that, then you are going to be fine. You'll be up and running. Metastock has a tremendous support team as well if you need assistance getting it locked and loaded, but it's all right there, guys. It's all right there. And the training's included. And of course, the best training, in my opinion, is come to the weekly sessions. There's no obligation. Come to the weekly sessions and ask questions in real time. Like, ask me in real time, and that's the best way that you'll learn, in my humble opinion. Anything we can hear or see about the percent accuracy of the trades? Well, percent or accuracy of what trades? Like, there are 24 different time frames. There's 5,000 stocks, 35 commodity markets. Percent or accuracy depends on whatever market you're trading, what time frames. So Joan, the scanner is available on all, with the exception of TradingView, because there is no scanner. So Metastock has an awesome scanner. The others one as well. Donna, does it work on a 1 minute chart? Yes, I use it on a 1 minute and 2 minute chart just about every single day. Yes, it does. Glad you love the sessions. All right. Well, I think I got you guys back on track. So I want to give a big shout out again to Mr. Gibby and the Metastock team. I really do appreciate the invitation to come present to you guys. I love this stuff, and I think I'm not going to speak for Jeff, but Jeff, I believe he's a pretty big fan of this 3S code indicator himself. And so thanks so much for having me on. I apologize for the tech issues earlier, but I think we got through this pretty smooth, and now you're back on track. So guys, there's a lot of great presenters that you've heard this week and will continue to hear. So take some good notes, learn something, find something that resonates with you and that fits your personality and your trading style, and let's go attack these markets together. So stay safe out there. Have a tremendous summer, and we'll see you guys in the markets. Thanks, Jeff and Metastock, and hopefully I'll be back in the future.
Thank you, Silas. I appreciate it. Good to have you. I actually want to spend just a few minutes talking about 3S Code, and I've got time because I'm the next presenter. So, Silas, great having you. Such a really cool product for $397, and it just ran a scan, and it's amazing even how you just pull up a random stock and it works so well historically. I'll show that too. Silas, thanks for being here, man. All right, let me go ahead and share my screen. Okay, should be coming through. Should be able to see the box of the 3S Code. And what I would like to do is just kind of give you a little bit of a tour, a demo, show you how everything works, how the scans work, et cetera, et cetera, et cetera. I do like the W bottoms, or the 1, 2, 3 tops, 1, 2, 3 bottoms that he's looking for. I like the way that this is written. And without further let's just jump into the actual product. Let's show you exactly kind of what happens when you open up the chart. And you can kind of see right here, we do have an active signal that's generated, at least was generated earlier today when I ran the exploration. I'll walk you through exactly what it's doing, but I want to kind of just point out some of the other things where the other trades that appear here. So right here, this is COO. It just came up randomly on the scan. You've got your 1, 2, 3. Here you had the penetration, and it's just kind of sank since then. Over here you've got a 1, 2, 3, and it's forming that W bottom, or that 1, 2, 3 bottom. You can see exactly where this is actually annotated on the chart. These are labeled on the chart. They're drawn on the chart. They're automatic. You just have to apply the template. I do see another. Let me go ahead and open up. Dawn says thank you. All right. I'll pass on to Silas if he's not here still. All right. Let me look over here too, just to kind of look at the thing. Here at a 1, 2, 3, we had a entry signal. It didn't hit the stop loss, but it did end up hitting the first and even the second target. Not all of these work, but they work pretty well when they do work. So there is a commentary that's integrated into this. I'm going to go ahead and kind of show you how that works. You go ahead and click on View Expert Commentary. And let's go ahead and just open up the window here. In the commentary, as soon as I actually open up this window, what it's going to do is it's going to focus on this bar. So the default bar is going to be the furthest bar towards the edge of the chart, the bar that you want to analyze the most. So right now it's just saying a long position trade management. There's a new entry found. Prices closed above the break line, triggering an entry signal. Now, we do want prices to close above the line. So we'll want to look at what this is doing a little bit closer towards the end of the day. And I'm not recommending you buy this for legal reasons, just showing you how the product works, okay? If you go into that trade, you put a stop loss at 58.89, you put your first target here and your second target here. It talks a little bit more about the strategy as you get down in here. It gives you some additional tips. But it's really, really very, very straightforward. Once you've got your stop loss and your first and second targets put in place, they're going to be drawn on the chart for you as well. So very, very well put together. If we come back down to this short right here, we can kind of look at the commentary for that day, and I'll just pop it open. Here it's giving you the same information, only it's telling you that there's a short position that's been found. Days remaining in the stop, you've got your stop loss and your first target and your second target. Very, very straightforward. They're actually even drawn on the chart for you. And you can even see where they're coming in for your first and second targets, as well as your stop loss, which would be up here. All this is calculated. It's dynamic. It's put together for you. Now, the big thing that we've been talking about the whole week is scanning. As a busy trade, well, I don't know if you're as busy as I am, but as somebody that, with just the amount of opportunities that exist in the market, there's 6,000 stocks. I want to be able to find the stocks that have an opportunity right now. And for me, I run a scan every day. Sometimes I run a scan twice a day. But what I want to be able to do is just cut through the noise. And if this is a pattern that you want to be able to trade, you just want to be able to focus on those signals. And the tool that we use for scanning is called the scanner. I'm going to go ahead and open it up right here. This is the exploration. I've put it up here in the search box 3S, so it'll just list the 3S symbols or the 3S scans. And I'm just going to go through what they are real quick. You've got your long position management. That just shows you everything that's currently in a long trade. You've got your long setup. What that's going to be looking for is everything that's actually established a 1, 2, 3, but hasn't triggered into a trade. So if you want to put together a list of stocks that are giving you that 1, 2, 3, but haven't broken out, you'd run the setup. It's a great way to build a watch list because you're just looking for it to get above a certain price and close above a certain price to get into that trade. You've got your long signal, and then you've got custom versions. You'll notice that it says custom. There is a custom. You can go in and customize all kinds of things in here, like the distance between 0.1 and 0.2, or the minimum vertical space between 0.2 and 0.3. All kinds of things that you can go in to tweak and actually define the W pattern a little bit more if you want to. So in addition to that, you've got your short position management, what that allows you to do. And there is a training that shows you exactly how to go in and change all of that that's available as soon as you place your order today. Okay. In terms of the short positions, you've got short position management. Same thing. It's just going to list every stock in your list that would be in a long trade or short trade. You've got your setup. That's going to be stocks that have generated a 1, 2, 3 top, but haven't triggered yet, so you can watch them. You've got your short signal, which is stocks that are actually breaking into a short pattern or giving you a sell today. It's that simple. Those are kind of the scans. So the scan that I ran to show you was the long signal. I ran it based on today, and I said to show us all of the stocks in the S&P 500 that meet that criteria. Very, very simple to do. I just put a check mark here. I put a check mark here. I hit start scan. I waited a minute, and it came back with the answers. So let me go ahead and show you what those are. Out of the S&P 500, there's about 503 stocks in there because, there's a couple duplicates. Google's in there a couple of times, stuff like that. Out of the S&P 500, though, if I want to talk about narrowing my focus down, I have 2 stocks I can look at. There's the one that I already showed you, which was COO. The other one that's actually triggering earlier today was a stock called Dana here, DHR. Okay, so I can open this up. I'm going to go ahead and open it up. Let's take a look at it. I can come in here and I can go to, I'm going to apply the proper template for it, which is the 3S code template. And we should see a 1, 2, 3 bottom forming on this. And here you go. You've got your 1, 2, 3. It triggered above that entry line. You can see where your long profit target is, your second long profit target. All that stuff is in here. Now you'll notice we had a couple trades on this chart already. You've got a 1, 2, 3 top here. Hit its first target, which gave us a smiley face, and then gave us our second target, which gave us a smiley face. And then you did have one that stopped out before it finally broke down and kind of flushed through. So works pretty well. That's really kind of how it's that easy. We can go in, we can set up our scan. Now, I only scan the S&P 500 for the purposes of showing it to you. You can scan whatever markets you want. You can use it here in the US. You can use it with the data that we get our data from the London Stock Exchange Group. There's several hundred exchanges, anywhere from India to London to Australia. All of those are available for you. They're very, very easy to scan. You can scan against any market you're interested in. They also have great coverage of futures and Forex and pretty much anything. So there you go. And I think that kind of sums up what I wanted to talk about with regard to this. It's so easy to use. It's so easy to apply and look at with Metastock. Just to kind of recap real quick, it does draw all those symbols on there for you, the 1s, the 2s, the 3s, the targets, all of the entries, the exits, all of those are drawn on there for you. It's going to give you the instructions on how to implement the trade, where your stop loss should be, where your targets are, all of that stuff. What more could you really ask for? And of course, scanning, the ability to go in and say, this is my universe. Show me the opportunities so I can focus on just the opportunities or the stocks that have an opportunity. I love that. Okay. Silas did a good job of talking about everything that's included, the Telegram room, the defined parameters, the sheets, the cheat sheets, the guides, the strategy guides, the weekly sessions. This thing is a bargain for everything that's included. When you go in here, and I have a Labor Day special on here, I should have fixed that, my bad. But when you're talking about $397, you're talking about somebody that's going to hold your hand and have sessions and training and all that kind of stuff for a whole year for $397. It's a good bargain. So you can get that at metastock.com/code. I've got the chat link in here. You can go to metastock.com/sales-chat. And you can give us a call if you have any questions, if you want to see any charts, 800-882-3040. Dawn says, thank you. And I don't see any more questions. Let me just check. Okay. All right. No questions in YouTube either. YouTube, you've been quiet today. Feel free to talk to us. We'd love to hear you. All right. Before the break, when we were having a little bit of a technical issue, I had said, okay, well, since we're having a little bit of a problem getting Silas started, let's give away some books. And I had a few of you, I said, hey, put in a number 0 to 100. And a number of you participated. I'm ready. I decided to actually give away 4 books. So we had so much participation in there that I decided to actually do 4 books. And so I'm going to announce the winners now. The way I'm going to do this, though, is I'm going to email you kind of the choice in terms of what book that you want. So the books that we would give away are, and these are both from Steve Bigelow. Steve Bigelow is a huge partner of Metastock, somebody we absolutely love, and somebody that taught me a lot about trading. When we start to talk about patterns I like to trade, Steve Bigelow is the one I'm running the scans on every day. So what I want to say is we have 2 of his books. We have High Profit Candlestick Patterns, and we have Eliminating Emotions by Steve Bigelow. Okay, I'm going to give away 4 books, and you guys, for those people that won, I'm just going to let you choose what book we want. So the winners, just to announce who those are, without getting, let's see, 2. The winners were Alan W., Anchi W., and Elizabeth Rudo from GoToWebinar. And then in YouTube, actually, I don't want to do that because it was Frenchie Benjamin. So I'm going to, with Frenchie, I need you to actually email me because I don't have your email address because you're just watching on YouTube. But if you email me and let me know what book you want, I'll send it over to you. And for the other 3, I will send you an email once I get done with my part, which is next. And we'll go ahead and get your address, and I'll be visiting the post office with my books and my packages next week. So very cool. That says since Google runs high, you thought 90. All right, very cool. Oh, all right, my turn. I'm going to spend a few minutes talking about Metastock today. Actually, very specifically, we're going to talk about a methodology that was put together by Goichi Hasada. And if you don't know who that is, his name is also Ichimoku Sanjin, which was a pen name. I'll get into this a little bit later, but we're going to talk about the Ichimoku Kinko Hui method and how you can use it to analyze trends and midpoints and stuff like that on a chart. Very fun demo. Before I get started, though, I do want to remind you we're running a special on Metastock. If you've never used it before, it's been rated #1 in its price category, and it's been rated #1 in its price category for 33 years straight. Never lost. We've talked about scanning. I just showed you a quick market scan. I talked about testing trading ideas and the forecaster. We talked about the forecaster yesterday. Scott did a really good demo on how that works and helps you predict probable price action with its patented program. I was just using a bunch of P's at the same time. We talked about that as well. Real-time alerts, I showed you the commentary just now. We're going to talk a lot about the commentary because it's really helpful in what I'm going to be doing in a second. And if you want to do a trial to Metastock, we'll talk more about this as well. But if you pay for a month, the monthly cost for Metastock, what we call delayed charts, is $75 per month. Or actually, we call it Metastock daily charts. Okay. With Metastock daily charts, you get daily, weekly, monthly, quarterly, annually. You get everything we've talked about in terms of the scanning, the forecasting, the whole product. You get global data. You get anything you need to use it. And it's just $75 per month. That's it. If you pay for a month, we'll give you the second and third month for free, which brings your effective cost down to $25. So You can do that if you go to metastock.com/conf promo. You can do that if you go to metastock.com/sales chat. And you can do that if you want to give us a call. We would love to talk to you. 800-882-3040. So without further ado, you're welcome. Don says, I guess I didn't get to vote for that time. We will do more prizes, Don. So stay tuned. All right. Okay. I'm the next presenter. So let's go ahead and read a legal disclaimer again. This got a little bit funky. Sometimes Google does a really weird job when you paste stocks in here. So let me resize, shrink the text to fit the shape, and we'll start here. Hopefully I won't have to do that too much. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. I lost the train of thought right at the very end, and I've only said that like 3,000 times. So in any case, we've talked a lot about how Metastock is a toolbox. I said it ad nauseum just a second ago. Today, what I want to do is, I'm going to start with a little story. As many of you, if you watched my earlier demo a few days ago, also it's been rated #1 33 years in a row now. Many, many years ago, in March, I'll have worked for Metastock for 30 years. And I have to say, I really like working here. I'm going to retire here. But in March, I'll be here for 30 years. I started in inside sales, and I moved on to business development. I run all of our conferences, and I'm in charge of our sales team now. I just keep seeming to get more responsibilities as we go. But it's been a lot of fun. It's a great company to work for. It's a great product. And I've over the years met people that have been using Metastock for longer than I have. And I use it to help me do trades every single day. So as I was kind of new to Metastock, there's a expert advisor in Metastock that's called the Candlestick Expert Advisor. It was one of the very first ones that I saw. And if you attach, I'm not going to jump into the chart, go in and open up a chart and attach it now. But if you attach it to a chart, what it will do is it'll identify some of the more common candlestick patterns, like bullish engulfing or bearish engulfing or doji, or there's about 32 of them. Those are the ones that kind of come to mind. And I remember I just barely kind of learned about what a stock was. I didn't know much about the market. When I started, I knew nothing about the market. In fact, I trained as a pharmacist, and I just decided selling pills was going to be a little bit too much of a boring way to live. So I kind of got a job with my friend here, and she helped me get the job applied. I found this expert anyway. Let's not get too distracted. Found the expert here that was called Candlestick, that you could attach to a chart. It would identify all the candlestick patterns. It would tell you what they were in clean detail, and I just love that. In fact, there's a lot of indicators and experts and systems that are in Metastock that just kind of help you understand different methodologies, like trend following or MACD or whatever it was. But I really like this Candlestick Expert Advisor. Fast forward for maybe like 5 years ago, we worked with a guy called Robert Dedman. Robert Dedman was an employee here at Metastock, and he wanted to create something that you could use to help people understand and utilize Ichimoku method in your analysis. And I thought it was he did a great job. We sold it as an add-on for a number of years. It was about $300, but he did such a good job of kind of making it so that you could understand Ichimoku and utilize it on a day-by-day basis that I wanted to include it in Metastock. So I made him an offer to buy it. And I think it was Metastock 19. It might have been Metastock 18, but at that point we decided to start including this Ichimoku method that I'm going to show you. in every version of Metastock going forward. So there's a little bit of a history lesson. I think it fits well. What I want to do today is actually show it to you. I want to teach you about Ichimoku, how it works. There's a lot of people that pay for courses that are like $5,000, $10,000. It's a very, very popular method. So today, what I'm going to do is show you how this works in Metastock. It's included with Metastock. If you do an extended trial, you can play with it in Metastock. I'm going to do my best to teach you what it is. How does that sound? Okay, let's go ahead and get started. This guy on the chart, his name is Goichi Hasada. He was a journalist in Japan, and his pen name was Ichimoku Sanjin, which can be roughly translated to what a man in the mountain sees. The methodology that he developed as a trader over the course of about, well, here, let's see what I have as far as notes. We can read my notes with me. Whoops, if I could get them up here. Okay. So in the 1930s, Goichi Hasada developed the Ichimoku methodologies. He spent about 60 years perfecting them. He released them to the public right around the 1960s, the late 1960s. Ichimoku, if you translate what it means one glance equilibrium chart, or sometimes it's referred to as the one glance cloud chart, based on the unique look of it. Okay, that's the only time I'm going to need to refer to my notes, because I've got the rest of it pretty much memorized. What I want to do today is actually show you how all of the indicators work, how they fit together to give you a glance at the equilibrium of a chart. Okay. In terms of the uses for the original Ichimoku Kinko-Hui indicator, there's buy and sell indications. There's a couple of different ways you can pull buy and sell signals directly from the chart. And there's tons of ways that you can measure bullishness or bearishness based on what the other indicators are doing. Okay, so the ton of ways you can look at bullishness or bearishness. The Kumo is very much designed to show support and resistance into the future. It gives you an idea of what the current trend is and what the expected future trend is in anticipation of future trend, how stable that future trend should be, helps you identify potential reversals. And Goichi Hasada, when he developed the methodology, didn't include specific stops. But because a lot of the indicators that he would use define where support and resistance is, you can use a lot of the different indicators as actually stop values. So let's go ahead and kind of move over here, and we'll talk a little bit about the indicators. We're going to go through all of these indicators. We're going to, oh, hey, well, I'm thinking about it. If you have a symbol that you would like to look at, put it in the chart, or put it in the chat, and I will put it on the chart. Put it in the chat over here, and we'll look at whatever symbols you want to. I don't like to kind of cherry pick a bunch of golden examples when we start to talk about these. We trade in the real world. These methodologies are based in the real world, and sometimes they work and sometimes they don't. Okay, so give me some stocks, and we can look at them in just a minute. Okay, the indicators that we're going to talk about is going to be the Tenkan-sen and the Kijun-sen. We're going to talk about this first. Then we're going to talk about the cloud, which it consists of the Chiku span A and the Chiku span B. No, I'm sorry. That's not right. Senku span A and the Senku span B are the clouds. We're also going to talk about the close. It's very important, and the Chiku span. So, all right. Let's see what symbols you're doing. Okay. Dalal says we're going to look at PST. Alan, you're running this thing today. All right. Let's start with Tenkan-sen and Kijun-sen. It's the primary, two of the primary indicators on here. I was going to say that's the two primary indicators, but I wouldn't really call them primary. You want to look at the whole picture and determine bullishness and bearishness. If I wanted to tell you how to calculate a Tenkan-sen and a Kijun-sen, it's very, very simple. A Tenkan-sen, I would look at the last 9 bars of data, whether that's a daily bar or a minute or whatever chart you're looking at. I look at the last 9 bars of data and find the highest point. And I'd also find the lowest point. And it could be different. It's probably going to be different days. I take the highest high value and the lowest low value for those 9 days, and I add them together and divide it by 2. And what I have is a 9-day midpoint. It's that easy. Okay. Kijun-sen is exactly the same thing. Instead of 9 days, I use 26 days. Again, I'm looking at the 26-day midpoint, the middle of the range from the highest to the lowest for those 26 days. Okay. These aren't moving averages. A lot of people will confuse that, but it's okay to kind of confuse that because you can take a similar view to those as moving averages. because you're looking at 2 midpoints. So if our shorter term midpoint is above our longer term midpoint, you could infer that you're in an uptrend, because that's going to happen if you're in an uptrend. If you're in a sideways trend, there'll kind of be a lot of overlap and they'll be a little bit sloppy. If you're in a downtrend, your T-Kinson is definitely going to be down below your Kijinsen. The lessons that you've learned from moving averages are going to apply when it comes to looking at the T-Kinson and Kijinsen, is my point. Okay. The secondary signal, there's a primary signal. We're going to cover that when we cover the Kumo, or the cloud. But the secondary signal for the Ichimoku method is the cross of the T-Kinson and the Kijinsen. So if my short-term midpoint crosses up above my longer-term midpoint, that's going to give me a bullish entry order that we could consider. There's some factors that we want to talk about, and that's why this lesson lasts about an hour, right? But that's our secondary buy signal. If our T-Kinson crosses up above our Kijinsen, that's a secondary buy signal. You can also use it as an exit if you're short. If our T-Kinson comes down below our Kijinsen, if it's a cross downwards, then we're going to have that as a secondary sell signal. Now, there's a whole bunch of other stuff we want to pay attention to. That's just what we're talking about right now. George, thank you for all of the symbols. I kind of want to look at Costco too. They had a nice little breakout a couple of days ago. Okay, so to recap, and we're going to look at these on a couple charts. But if our T-Kinson is above our Kijinsen, then we're bullish. If our T-Kinson is below our Kijinsen, then we're bearish. A cross indicates an opportunity to buy. Okay, let me go ahead and jump in here, and we'll just go into a chart. I'm going to go ahead and I've got a bunch of charts open because I've been looking at markets and I've been running explorations and that kind of stuff. Let me just close a few things here. And for now, what I'm going to do is I'm going to look at DPST, which I'm going to guess is DPTS.O. We'll look at SCHY. Thanks for that symbol, George. We'll look at cost. And I think I might even have another one if I scroll up. And Francisco says, can we throw in the SPY on a daily basis? Okay. I'm pretty easy. I'm not sure we'll look at all of them just because, sometimes I just talk. And sometimes I get a little bit into the weeds on this. I didn't mean to hit the browse button. Let's go ahead and cancel. Let's go back into that chart window. I still have all of these stocks actually listed. And let's just open them up. If I want to apply the Ichimoku methodology, I'm going to just find it on the chart. It's called Ichimoku. So we'll just go to the eyes. There we go. And there is an advanced version of this template. For now, I'm going to focus on just the indicators. We'll go ahead and open up the chart. And we'll make sure we got our symbols right as well. All right. So from a perspective of just focusing on what we just talked about, looking at Costco, or actually Spider, right here, if we're looking at the hard right edge, our T-Kinson is above our Kijinsen. That means that we're bullish. And we had a primary TK cross signal or a secondary buy signal here, okay? Which would have been a pretty good day to buy. We would have very much considered this because we're actually also breaking above the cloud, but that comes in a second, okay? If I come back a little bit further in the past, we can kind of see there's a T-Kinson down here. We would not have taken that. I'll explain why in the rules, but we've been kind of in a bullish trend here. We went bearish because of some unsettling war news, and then we've been bullish pretty much since right here. Okay, very, very easy. We'll reiterate that on Costco. Costco's been in a very sideways pattern. I haven't looked at it in a long time. It did break a few days ago, though, and you can see it kind of, we had a TK cross signal right here. It shot up. Okay. Let's talk about a couple of more indicators. Okay. Let's talk about more indicators. So the next indicators I want to talk about is the Senku Span A and the Senku Span B, which form the distance between the Senku Span A and the Senku Span B form was called the Kumo. The Kumo means cloud. And I do my best not to say Kumo cloud. It was a terrible habit I'm just saying cloud for the longest time. Kumo means cloud. So I'll either say Kumo or I'll say cloud. The distance between the Senku span A and the Senku span B is, the distance between that is called the Kumo. Okay, which means cloud. All right, if I wanted, now they don't necessarily have to be in order. You can have your Senku span A on bottom and your Senku span B on top. That's indication of bearishness. And you can have your Senku span A above your Senku span B, and that's an indication of bullishness. The Kumo actually has a lot to do with the analysis and kind of what we're looking at. There's a ton of stuff that you can look at. So, but what I want to talk about first is the calculation. When you calculate the Senku span A, what you do is you take the value of the Tenkan-sen, you add it to the value of the Kijun-sen, and you divide it by 2. So you're looking at the midpoint of these two midpoints. That's your Senku span A, the midpoint of the 29 and the 26, right? Your Senku span B, which I'm planning on coming in here and actually adding a proper label to that, but your Senku span B is your longest term midpoint that you're going to look at. It's your highest high value of 52 days and your lowest low value of 52 days. So everything we're talking about is price and midpoints of price when we're looking at the Ichimoku method. Okay, let's talk a little bit about the methodologies that you can use for the interpretation. I love Gemini. This is what I put into Gemini. This is what I got out of Gemini. So in terms of the Ichimoku, or the Kumo helps us determine a trend bias. The relationship of price to the Kumo is very, very important. The Kumo, we anticipate, will act as support and resistance. The direction of the Kumo is going to tell us if the stocks are rising or falling. The current direction is very important, as well as the future direction of the Kumo is very important. And when the Kumo twists, when the Senku span drops down below the Senku span B, the cloud will change color. It's called a Kumo twist, and it indicates a bullishness or bearishness. So let me go ahead and just talk about this on the chart I've already got right here, and we'll look at it in relationship to another couple of charts. Okay. One of the main things that the primary buy signal of the Ichimoku method is if the stock is in the cloud and then closes above the cloud, or if it's below the cloud and then closes above the cloud, that's a primary buy signal. Okay, so that's the first thing that you can kind of look at. Right here, we would have gotten that primary buy signal here, well after we got our Senku span cross or our TK cross. Okay. The fact that we got our buy signal is obviously bullish. We are now above what we treat as support and resistance, which is the Kumo. And as long as we're above support and resistance, we can consider long positions. You don't generally want to trade long when you're down below the cloud. Okay, so that's your primary. Other things that are important is the relationship of the price of the security to the Kumo. If you're trading up above the Kumo, that's going to be bullish. It's going to give you a bullish indication. If you're in the cloud, it's not as bullish. And if you're down below the cloud, it's bearish. Okay. If we're in the cloud and we close down below this cloud, that's also going to give us a primary sell signal. Okay. Other things that are important, we anticipate this Kumo will act as support. Right here, you've kind of have it coming down and testing the support area. If it pops up above that support area, that would give us another primary buy signal. Okay. Other things that are important is the direction of the Kumo. If I'm looking at this Kumo right now, I'm going to say that it's pointed up. I think everybody would agree with that. It's pointed up, which is bullish. Okay. If we're looking into the future and we've got a flat cloud into the future, I'm going to call this flat. I'm going to say that that's not bullish. It's not necessarily bearish either. It's more neutral. If it's headed down in the future, that is bearish. Here we have a Kumo cross where your Senku span A comes down below your Senku span B. That's generally bearish, and that's going to give us a bearish reading. Okay, and these are all things that we kind of score up. Is our future cross that's bearish? Are we trading above the cloud? If we closed up here, we'd be above the cloud. What's the direction of the Kumo currently? Is our Senku span above our Senku span B? Is our Tenkan-sen above our Kijun-sen? These are all things that we would score up and we come up with a bullish and bearish goal. And it is a few things to keep track of. There's a lot of things that are on here, but the software does it for this, and it kind of helps us remind what's going on. And it does such a good job of it. So let me go ahead. Let's look at a different chart real quick. I'm going to go ahead and let's look at this. Oh, this is the wrong symbol. Let me grab the right symbol. There we go. This is an international equities ETF. Okay, we've been a little bit flat. You can kind of see that we're really, really flat because we're kind of just like hugging the cloud on this ETF. But you can see we had some big bullishness when we've been above the cloud for quite some time right now. Right now, we're kind of sideways on it. And that's why you're getting a lot of these weak TK crosses. These are actually defined as weak when they happen sequentially like that, because it's indicative that we're in a flat area. If I saw a chart like this, I'd look for a chart with more trend direction. If this starts to break out of its flat area, you have your TK Kumo cross. If it started to break out of its flat area, it would be a good opportunity to buy. But let's go ahead and look at the expert commentary. I've talked about the expert commentary quite a bit now. I'm going to go ahead and just put this on the very hard right edge. Put the fast forward on, and we can kind of get an idea of what's. It's going to break down all of those criteria that we've talked about so far, and a couple of the ones that we haven't talked about, just to give us an idea of a score. So if I'm looking at the Schwab ETF, SCHYK, I can say, okay, well, the last time we had a Tikas and Kijin cross, it was a bullish cross. It was a neutral. It's either going to be strong, neutral, or weak, but this was a neutral one that happened just yesterday. Okay, so that's bullish. Our price Kumo relationship is bullish because we are currently above the cloud, albeit a little bit. Our current Kumo direction, if we look at where this Kumo's direction is, it's kind of headed down right now, so we give it a bearish reading. Our future Kumo direction, it's kind of saying that it's headed up. Not up dramatically, but maybe it's measuring it from here to here. But it gives us a bullish reading, okay? The next two things that it kind of talks about is the Kumo, or I'm sorry, the Chiku span. So I'm going to jump back into my PowerPoint before we finish this. We'll just talk about the Chiku span real quick. So here we go. If you're familiar with the Ichimoku chart, there is going to be this indicator that plots in the past. You got your Kumo, it goes 26 bars into the future, and then you've got your Chiku span, which is 26 days into the past. And the only thing that it is it's where price is now, but plotted 26 days previous. So it's basically, if you look at this value and you look at the hard right edge of your chart, they should be the same. Okay, it's basically just today's closing price back 26 days. Okay, their Chiku span is designed to kind of give us an idea, not kind of, it's designed to give us an idea of the stability of the trend in two ways. So if our Chiku span is above our cloud, it's bullish. It indicates that we are in a stable bullish trend. That's the first way. If our price right now is where it was 26 days ago, that's neutral. The price has stopped going up. And ideally, what we want to see is we want to see the Chiku span be above price. That would also be bullish. So basically, with the Chiku span, what we're looking at is stability of the trend. Since we're where price was, or even underneath it right here, it's going to give us a bearish reading. Whereas if we're back here, it's going to give us a bullish reading. Does that make sense to everybody? Okay. And then I have a slide that kind of talks about that. Our interpretation is our relationship of the Chiku span to Kumo. If it's above Kumo, it's bullish. If it's above price, it's bullish. If it's down below the Kumo and price, that would be bearish. And those are, again, two different bullish and bearish readings. I want to sum up. Let me go back into the PowerPoint here. Not the PowerPoint, the chart. Our primary entry signal is going to happen when we close above the cloud, which we're doing right now. Okay. The rest of it, in terms of how strong that is as a signal, you've got your are going to be broken down into these criteria, because there are what, 9 criteria right here? 1, 2, 3, 4, 5, 6, 7 criteria. Okay, close. Because of that, I want to be able to see them broken down, because it helps me keep track of them. So if I'm looking at Schwab International Equity ETF, right now we are closing above the cloud. Yesterday we closed above the cloud after being in the cloud, which gave us a primary buy signal. We've got your TK cross, which was bullish. It just happened a day ago. Your price to Kumo relationship is bullish. Your current Kumo direction is bearish. Your future Kumo direction is bullish. The Chico span relationship to the Kumo is neutral because the Chico span, if you look for it right here, it's actually in the cloud. So it's giving us a neutral reading. And then our Chico span relationship to price, right here, it's under price. That's bearish. So out of all of those, our period since our next or previous Kumo twist, we have a bullish one coming up. You can see it right here on the chart. That's bullish. It's going to happen in 20 bars. So that's bullish. So what we're getting here right now is a bit of a score. Bullish, bullish, bearish, bullish, neutral, bullish, bearish. Kind of helps break things down for us. In addition to that, to break down right now, I've got 3 bullish criteria. No, 4 bullish. I've got 2 bearish and a neutral. So I might, from the perspective of this, want to see it become a little bit more bullish before I buy it. There's a lot of negatives here. I'd like to see at least 4 or 5 of them. So it's okay to wait. We can always buy it in a day or two if this starts to get stronger. Okay. This also helps break things down for me. So if we come down in here to the TK signal, I'm just going to skip down a little bit here. In the bottom of this commentary, you'll notice a black part, which is right here, and a blue part. Okay. The first thing it's going to talk about is the TK signal or the TK cross, which is this parameter right here. The black part is going to tell you what I spent time talking about. It's going to say that the Tenkan-Kijun cross is a predominant signal of the Ichimoku trading system, similar to a moving average, but instead it uses midpoints. It compares the general short-term movements to intermediate-term movements. The Kijun acts as short-term support and resistance of price movement. The longer amount, if a time signal has happened, the better it's occurred. Quick multiple occurrences of a signal indicate a choppy trend. So we see all of these crossovers. It just means we're in a chop right now. Okay. The blue part actually dictates what it sees on the chart. The latest Kijun cross signal to occur was a neutral signal that occurred 1 day ago, yesterday. And supports a bullish direction. Neutral signals usually occur in the middle of a trend development, though continual crosses at the Kumo show a ranging or holding position. Now, I'm going to spare you. I'm not going to read the rest of this but it then talks about the Kumo, what the Kumo is looking for and what it's seeing. It's going to talk about the current Kumo direction, what it's looking for, and what it's seeing. All of this stuff is broken down for you, so as you're learning it, you can know, okay, intellectually, this is what it is. In practice, that's what the blue part is for. All of that is broken down, okay? If I'm not quite sure I want to pull the trigger on SCHY because we're not moving up right now, we're very channel, we're getting a lot of crosses, I can wait for a bit of a clearer trend. Okay. What I want to do is I actually want to jump back in here a little bit and look at, let's go ahead and I'm going to pull this expert advisor commentary open again. I didn't mean to close it. I'm going to grab it though, and I'm going to put it right here so that it stays open. I didn't mean to do that. Okay, let me do this again one more time. We're just going to dock it right there. I don't want it to fly away. I want it to be right there. Okay. If I was looking at SCHY right here, let's see what our kind of decision would have been or what it would have told us back here on the chart. Oh, I need to unfast forward. I need to move it. This button right here, if you're familiar with the commentary, it locks it to the last bar so you're not moving it around by clicking on the chart. Very handy, except for when you do want it to move, and I do want it to move right now. If we were looking at this ETF back here and we wanted to get an assessment, the reason I chose this data is because we went from down below the cloud to in the cloud to above the cloud, give us a primary buy signal. We can look at it and say, okay, our TK cross is bullish. We had a strong TK cross this time. Our price relationship to the Kumo is bullish. That's why we closed above it right now. Our current Kumo direction is bullish. Our future Kumo direction, it's headed up, right? everything is bullish. Our Chiku span relationship to price is neutral, and that just means we're in the same range that we were 26 bars ago. Our period since the last Kumo twist bullish. Okay, notice right here it says trade entry not recommended. Okay, that's because we're not moving higher. One of the things that I think is a valuable lesson, maybe one of the more valuable lessons that I've learned, is like it's okay to buy it when it starts to break out, because if it's just been range bound, we don't want to buy it then. You know, I think it was, oh, what was his name? It doesn't matter. It's a technical analysis. Wells Wilder. He talked about how technical analysis worked a good 60% of the time, and the other 40% of the time it didn't. And you're just range bound, and it was kind of random. That's why a lot of the work he did over the years was to avoid sideways markets and avoid those whipsaw times where the bulls aren't really in charge, the bears aren't really in charge, nobody's making money. It's just going back and forth and back and forth and back and forth. All right. So if I wanted to take that and I just, hey, I don't want to take a trade based on that, even though we're completely bullish and the stock ends up going up, I can wait a little bit, right? There's nothing that makes me buy right now. I think trading is a patient game. But if we look here and we just wait like a few days, let's see what it says right here. Then we're all bullish. Okay, so we can wait until we're starting to break up above this range and we're starting to get more bullish signals. So that's really generally all of the indicators that are involved in Ichimoku. Now, one thing that I want to talk about is stops. With Goichi Hasada and Ichimoku Sanjin, he really didn't develop stops into this. So let's say we decided to get long somewhere in here between when it went bearish or bullish. How could you manage a stop? Okay. There's certainly a lot of different ways you can look at it. Since this Tenkan and Kijin-sen, you could use those as stop prices. You could wait until there's a bearish cross, until one crosses below the other one. We can also use the cloud. Since the Kumo, we're treating that as support and resistance, you could use either the Senku span A or the Senku span B. Because if we ever come down below the cloud and close, we're going to start treating that instead of support, we're going to start treating it as resistance, right? And so when Robert put this together, he just reminds us what our stops could be. We're looking at this day. So he gives us our support values, 27.95. Our Senku span A support is 28.23, 27.74. He tells us where the support and resistance breaks down. And if we look at stops, he gives us some recommended stops as well. If you want a medium stop, you could use the next period Senku span A, which would be 28.23. And you could also use the next period Senku span B, which would be 27.74. George says, although SCHD and SCHY might present good cover call opportunities. Thanks for the comment. All right. Well, let's look at DPST real quick, too, just to see. I would say here we had some really good trades. We've been a little bit whipsawed. But if we follow the rules, we can avoid some of that whipsaw. Not all of it. Okay. How's my time doing? 7? Ooh. Let's look at this real quickly. Okay. This one is just, this is probably not one I would be interested in trading. When I look at this, it's just very volatile and very range bound. I don't think this would work well with Ichimoku. And certainly, we say in the forum, I wouldn't trade this with so-and-so's money. I won't trade this with your money. I won't trade this with Maverick's money. All right. All right. Let me show you how the scan works real quick. I've got to kind of wrap up. I'm going to go into the scanner. There is a test for this, so you can actually test buying the Ichimoku methods with tie stops and loose stops, and there's all kinds of testing that you can do. And it tests very well. What I want to do right now, though, is I want to go into Ichimoku, and we'll just show you how to run a scan. Okay, so this is the signal scan. I should have started this a second ago, just so we could have played with it a little bit more. I'm debating. Okay, well, let's just run it. Let me go ahead and unselect all of them. We'll just select this one. Okay, and I'll run it against the S&P 500. And I may not let it complete, but we'll let this run. I usually run it in advance just so that we're not watching it run. But you'll notice it's already starting to get hits back. We're going through the whole S&P 500. Not only is it identifying which have long opportunities, also short opportunities. And it's also giving us a bullish or bearish score on it. Generally runs a little bit faster when I'm not broadcasting audio and video and face and all that kind of stuff. But it's running pretty fast still. We're at about 29 seconds into the scan. I'll probably let it go for about a minute so I can just show you the reports, and then we could kind of talk a little bit about how those work. So, yeah, that's good. We'll show it up to about 116. We've got some columns that are going to show up, and I just canceled it a little bit early. When you do that, it will give you what it got to before you told it to stop. Over here, we've got the instrument names. We went through about 123, 124 stocks there. 117 were rejected, meaning they don't have a buy or a sell opportunity. And then 12 were. Again, what we want to be able to do is focus on what works and what works for us. I love the scanner. Okay. Over here, we've got a signal column. The signal is going to give us one of four numbers: -2, -1, +1, +2. +1. We're going to start with the pluses. +2 means that the price is above the cloud and you had a TK cross. Because remember, we don't want to take the TK crosses when they're below the cloud. So you got a secondary buy signal, a number 2, and it's above the cloud. That is what a number 2 means. 1, I'm going to sort of buy a signal 2 as well. We don't have any 1s here, but 1 would mean that was in the cloud or below the cloud yesterday and closed above the cloud today. -1 is exactly the opposite of that. It was above the cloud or in the cloud and traded below the cloud. It's a short. -2 would be the TK cross while you're below the cloud. Hopefully that makes sense. So what we're looking at here is all the stocks that have an opportunity out of those 100 and something that we got. Okay. This one's a 2. We don't have any ones that actually give us a +1. This one's a 2, meaning it's up above the cloud, but it gave us a TK cross signal. The Dickinson crossed above the Kijinsen. It's a -2, which means it's a neutral signal. Then it gives us a score. You've got your your close versus your Kumo. Is your close above or below the Kumo? Remember, that's bullish or bearish. That gives us a 1 because it's above. Our current Kumo direction is pointed up. I don't have to open up the chart. I can kind of see what's going on with the chart just from this report. Our current Kumo is headed up, but our future Kumo is headed down. Our Chiku span relationship to Kumo is above, so it's giving us a 1. It's also above price, which is giving us a 1. So out of all of the scoring mechanics, this is giving us a SPY signal, but it's only giving us a 2. And if I opened up the chart, we probably wouldn't be that impressed by it because it's a 2. What we typically want to look for is like 4s and 5s and 6s on the score. And actually, Robert was pretty interesting. So we did close above the Kumo, but you can see why we're getting a 2. You can just look at this chart and see why we're getting a 2. We've been sideways for a while. We've got a lot of back and forth. We've got a weak Kumo cross. It's just this chart isn't indecisive. Understanding Ichimoku will help us trade decisively and not indecisively. When we broke up here on CB, that was a pretty good trade. Okay, but right now we're kind of in an area of consolidation, which is the bane of trade and following systems, right? So that's what we're looking at. Ideally, what we want to do when we run that expiration is find a 4 or a 5. So I want to reiterate a few things. I hope that was helpful for you. That's one system in methodology and Metastock. It's very, very popular. It was released to the public in the 1960s. And then here's some of the uses for it, right? Buy and sell indications, bullishness, bearishness. There's a reason that it's been so popular and so many different mentors look for particular aspects of that, like crossing above the cloud or using the cloud as support and resistance. It's time tested. It's also one of about 200 or 300 different methodologies that are actually in Metastock. We got really specific today, okay? And it's a good method. There's also experts that'll show you the MACD, the candlesticks, as we talked about. One of the things I love about Metastock, you can come in here and you can test it. You can say, okay, if I traded Ichimoku, how would that work? How would that compare? And in the demo Kelly did on Monday, he talked about what you should look at when you're comparing methodologies in Metastock. So that's one of the reasons I love Metastock. I like the idea of, if you're new to trading, like I was very new when I started, I like the idea of saying, okay, well, what works? There's 400 or 500 different indicators that exist out there. Which ones are actually going to help me with my profit and loss? Because those are the ones that I want to learn about. If it's Ichimoku, great. If it's MACD, great. Let's focus on what works, and then that way the system test will do it. Once you find something that works and you can learn about it with the expert advisor and the commentary, Robert did a hell of a good job with the commentary when he put that together. And then for me, as somebody that's been using Metastock for 30 years, that ability to go in and within about a minute, find the opportunities and say, these are the ones we should focus on. That, I think, right there is the reason that Metastock's been rated number one in its price category for 33 years in a row. Still need to fix this. 33 years in a row. So just a little bit of a lesson in terms of what this is for you, what it's going to do for you. 33 years in a row. Again, it's a huge toolbox. You can use it to scan the markets, test trading ideas. You can use a forecaster that Scott talked about yesterday. There is a reason we have customers that have been with us for decades. There's a reason that those customers vote for us to be number one every single year, year in and year out. And I think that's because it's helpful for them. I certainly love it. I've used it every day. I also just get to represent it as well, which is kind of fun too. So in terms of pricing, I want to break down what the pricing is for Metastock so you have a clear understanding of what it is. Everything I showed you today, you can do in either version of Metastock. All the technical stuff that we've been talking about pretty much all week, you can do in either version of Metastock. We have two versions of Metastock. We have a real-time and we have a daily charts version. With the real-time, you can go full real-time. It also includes a news service and a data service that's provided by London Stock Exchange Group. They bought it from Blackstone, who brought it from Reuters. If you know anything about institutional data feeds, they spent over $1 billion creating it. It's supported by a competitor to Bloomberg. And to give you some ideas on Bloomberg costs about $27,000 a year, I think, somewhere in that neighborhood. We have a very, very institutional platform. It's not Bloomberg. We call it Zenith, but it offers all the news and information and data that you would have access to if you were literally a bank or a hedge fund subscribed to the service. So also includes Metastock at that price, $265, everything that you need to get started. If you're not as into the news and you just want a delayed chart, you want to be able to run a scan during the day, want to look at your charts, we have a version that doesn't have that news. It's a lot cheaper because we don't have to pay for that news. $75 per month. So that'll include a global delayed feed for the entire world. It will include all the Ichimoku, all the different methodologies we've talked about, the system tester, everything that's helped Metastock be rated the number one price. And it's the number one rated software in its price category for the last 33 years in a row. Okay. A couple things, like I just put a list of a few things. A lot of people like to talk about their bonuses. There's so many different things that have been included in Metastock over the years that could make 100 sites like this. There's literally 300 different methodologies similar to Ichimoku that are already written in. There's the ability to test for it. There's the ability to find them. Again, you're not talking about a software that they developed a couple years ago. This is a software that's been created, worked on painstakingly and lovingly since the 80s. Here's a gap identification system. There's another system called MicroMurmur. People really like it. Maybe I'll do a class on it. Jake Bernstein, good friend of mine, came in and talked a little bit earlier with Brian Lotta. He does have his new expansion contraction levels in here. We want you to use Metastock. We want it to be part of your daily routine. We want you to be a customer that's been using Metastock for years. So as part of your initial setup, we're going to give you a white glove setup. They'll install the program. They'll walk you through it. They'll answer any questions you've got. We're going to give you unlimited access to our training videos called the Unleash the Power of Metastock, which includes, here's how you open up charts, here's how you do tests, here's how you use the tools, because it is a toolbox. It's going to work as good as a toolbox for you. And one of the things I'm really proud of is the people here at Metastock. If you ever have any questions, you can call our support team. They'll help you. They do a great job. So the offer basically is if you buy a month, we'll give you the second and third month for free. We'll give you that white glove installation. Hey, I can hear somebody. As a heads up.
All right, I'm here.
All right. Well, I'll be right with you, Fausto.
No problem. Let me know.
All right. Cool. Where was I? Okay, yeah. If you set up, you pay for that first month, we'll give you the second month, third month for free. That's like $25 a month. You can do that if you go to metastock.com/conf promo. You can do that if you give us get in touch with us by chat at metastock.com/sales chat. You can do that if you give us a call at 800-882-3040. However you want. I would say, just to reiterate, this is a software I wouldn't trade without. I use it every day. I love how easy it makes it to find those opportunities and to execute them. I love how even after 30 years, I'm still learning new things about the platform. It's not something you're going to outgrow. Hopefully, you like the Ichimoku and you can use that, and it's going to be helpful for you. So, metastock.com/conf promo, metastock.com/sales chat, or 800-882-3040. All of those will be a way to get through to us. All right, give me a second. It's a lot of myself talking. I'll leave this side up for now. All right, cool. Do want to say thanks to Stocks and Commodities Magazine. I appreciate them being supporters of the conference we've done for a number of years. Also want to encourage you, if you haven't yet, join the Traders Forum. The Traders Forum is a great community of traders. I've personally learned stuff as being part of the Traders Forum. We do weekly lessons where we talk about indicators. We bring in guest speakers. We do podcasts. We also talk an unhealthy amount about Costco and their hot dogs. So if that sounds like something that you'd want to be part of, you can join for free, thetradersforum.com. There's never a charge to be a member, and you'll get notified of all of the events that we do. You can chat with traders. It's a growing community. We've got about 1,500 people in there, and we would love to invite you in there. Thetradersforum.com. All right. Oh, Fausto, now it's your turn. You okay starting a few minutes early? Maybe you went to the bathroom.
Yeah, I'm good. Whenever you guys are ready. Good to see you.
All right. So I'll give you a fair introduction. This is Fausto Pugliese, the one and only. Fausto, I don't know, what story should I tell? Should I tell the story about how you did a webinar right before your wife gave birth again? Or, I mean, he is a hard worker. Or should I tell you about everybody how you're voted the sexiest man at that one cruise?
I don't know.
I can pick? Okay. I think I told both of those stories just now. Fausto is the person that you can go to if you want to learn about level 2 and level 3. He's very, very good at it. He's done his whole career talking about order flows, finding out where the money lines up, all of that kind of stuff. Fausto, let's get you started. I'm going to go ahead and make you the presenter.
That would help. Yep. Let me get to share my screen.
Yep. Should ask you now.
All right, perfect. Screen 2. There we go. All right, perfect.
All right. Why don't I get out of the way? Go. It's your turn. I've been talking for an hour.
Yeah, let's see. Is the chat working? Everybody can hear me? Can everyone hear me okay? Just want to see if it's private. Okay, hold on. Organizer.
I got it. I can hear you just fine too.
Oh, okay. All right. Just
Yeah.
want to make sure who's
You
in.
should
Okay.
be coming through, and audio's been working great today. So I'm gonna get out of the way. I promise.
Okay.
This time for sure.
So let's talk a little bit about trading, ladies and gentlemen. First of all, I wanted to change something up a little bit. Last minute, I don't know if anyone here knows about the pattern day trading rule, but there's been some great news that came out. This is great for Metastock and everybody because, I want to kind of just cover this before I talk about the strategy behind what we do at Cybertrade University, where, this has been a thorn for us traders for a long time, the pattern day trading rule, because I've been teaching for over 35 years, I believe right now. And, this rule came in and really kind of hurt the whole industry, and it hurt people like you. But now with the new rule change, I just want to cover it really quick, and then I want to teach you the style, what we teach at Cyber Trading University. So first of all, I'd like to thank Metastock and everyone at the staff at Metastock. I've known them for many years. Like he said, we've done so many events together, and Jeff, you do a great job, and Metastock is, probably, like I said, one of the best platforms out there. So keep it going. And listen, if you're around this long, I always tell everyone, you're obviously doing something right. Quick little disclaimer. Just want to tell everybody that I'm not going to make any promises or guarantees that everything I say is going to work for everybody. There's a very high risk in trading. And, always like to tell everybody, don't go out there and risk what you really can't afford. Okay. Now, these are the things that we're going to cover today. We're going to talk about the money flow. We're going to talk about what actually makes these stocks go up and go down, who runs them, understanding basic buying and selling, which are support and resistance levels. What makes a support? What makes a resistance? I'm going to show you. I'm going to show you some real live trading in the market, and also how to find those stocks, because it's very important to know with the Metastock platform. People always ask me, I follow you, Fausto, but how did you find it before everyone else? We're going to talk a little bit about that. Now, before we move forward, I want to give everybody a free gift for being here and listening in. I want to give you my book. So if you got a phone, you could scan that QR code right now on the right-hand side, or what you could do is open up your inbox right now and just send me an email. Right there, you can see it right there, that email sent to Fausto at ctutrading.com, and just write book right there, and or scan the QR code. And what I'll do is you could pay me $60 on Amazon, but I'll give it to you for free. It's a great book. It's a fast read. It's colored, and it's basically going to give you everything that I talked about. Let me tell you something. I've been doing this for over 30 years. The technology I'm about to show you right now is getting bigger and better, okay? This has been around about 50 years, this technology. Nothing has changed. This is exactly how market makers trade. When I got started, I thought I was too late. It's never too late. Nothing has changed. But so the book is going to show you a lot of what we covered, even though the book's been around for a while. It really hasn't changed that much. So just go in your inbox, just hit send, and I'll get it to you right when I'm done today. All right. So let's talk really quick. I want to throw this quick slide in there before I move forward about the pattern day trading rule, because this is great news. I know, Jeff is probably super excited too about it. But basically, when I started back in '94, you had to be licensed to do what we do. You had to work for a brokerage firm. You kind of had to live here in New York, the financial capital of the world, which I still live here today. And it started getting very popular, and they started getting relaxing on the rules. You didn't have to be licensed anymore, and everybody wanted to get into trading. Well, apparently, what happened back in 2000, we had this internet bubble, and a lot of people lost a lot of money. Not even a lot of money. People killed themselves. There was a shooting down in Georgia, at one of a day trading facility. It was pretty ugly, and they figure that, what, the U.S. government decided and said, the SEC decided, what, you really can't afford to trade, okay? And you got to have a minimum of 25,000. So that's where the pattern day trading rule came in. Well, after all this lobbying going on and everything, you're going to have Liberation Day, what I like to call. You're going to have a Independence Day for day traders on June 4th. It's coming up. So they changed it. Now you don't have to have 25,000. You could now day trade for $2,000 in your account. So they finally got rid of this 25,000. This is great news for Metastock. This is great news for TradeStation, Thinkorswim, Fausto, Pugliese, Cyber Trading University, you, Mike, Bill, everybody in here. You should be super excited, because now you don't have to. Because you know what happens? Sometimes you don't need that much money in the account. You don't need all that buying power, but they force you into it, and then now you don't have to worry about the one-day trading rule, everything else. As long as you're in and out the same day, you will always have your buying power. So this is great news. I don't want to spend too much time on the rules and the regulations and everything there. But just on layman, just in very simple terms, they brought it down from 25,000 to 2,000. Now go up there, do a search on Google when you get a chance. You can read it on FINRA, and they'll tell you what the rules are if you're not familiar with it. But that's about it. So I got that out of the way. I was just super excited. I've been talking about it for a year now, but they never gave us an official date, but it finally came out. Now, let's go to the live markets. Okay, so now that everyone here could personally day trade. And and listen, we just don't day trade. We swing trade, we invest, we trade options, but it all starts over the course of the day, what happens. So I want to talk about some stocks that we traded today. I don't know if anyone here looked at a couple of stocks that are moving in the market. I like to start off with this stock right here, which is TE was a good one. Or NVIDIA. Let's look at NVIDIA, actually. Let's look at NVIDIA. NVIDIA had earnings, okay? So NVIDIA, you could see here, let me move up 2-day chart here. So you can see how the stock hit some resistance levels right around up here. And the big thing is this. It took a really big dive today, okay? It took a dive, and if you look right here, let me draw. I like my drawings. Hold on. Get my drawings. How do I use these crayons? Okay, I think this is it. So you can see how the stock basically hit its support levels here and, right around here too. See that right there? Now, the question you have to ask yourself is what makes a stock go up and down? Buyers and sellers. So what you had over here must have been sellers. And what you had probably down here were buyers. Now, how would you have known when the stock came down it was going to stop here? And now it's starting to go back up. Why did it stop there? What made the stock stop specifically at that number? Well, very simple. Buyers. So I want to bring over here something that's called level 4. And we're looking at the video right here. Okay, so let me go back a little bit further. All right, so right here is 9:30. This is when the market opened up. And you could see these red lines right here? This is called program trading. Okay, and if you follow that line, you go all the way to here. These are orders out there, 200,000, 180,000. And you could see right here, obviously that is resistance. And these are supports. And what happened over here, there was a big buyer out there, but it looks like somebody executed him. But there was a new order here, and there's a new order here. So those orders you'll see right here, that was 218. So when the stock came down to 218, look what happened. It hit it, it went up. It hit it, it went up. It hit it, went up. Hit it, went up. It hit it, now it's going up. See how it's going up? See, it never wanted to break this number right here. That number is 182,000 shares. The reason why the stock never went past 270, 227 is because of those big sellers out there. Now, let's get back to what I said in basic trading. How do stocks go up and go down? Buyers and sellers. What do you have over here? Buyers. What do you have up here? Sellers. So when you want to know where the support and resistance levels are, that's what makes support and resistance. This is called the right side of the chart. This is how we read the right side, where a lot of people like to look at the left. The problem with the left is that that's the past. The past is not always indicative of the future. Now, this is day trading. Now, let me tell you, we can do this on swing trading. We can do this on options trading. You can go back in time. You go further. You want to look at major resistance levels? Well, if I go back, you could see here that we have a lot of sellers right around here, around 250. Look at all the sellers out here. So if you're wondering why the stock is having a tough time getting past, this, we're at 220. We're not too far from 250. There's a lot of sellers out there. There's not a lot of buyers. There's a lot of sellers. Now, when I go to the actual market, you'll see that you're not going to see the resistance. You're not going to see the sellers out here at 250, right? The only last time the stock was here. That was right around 235. So you see how the stock is going up and starting to trend down. So it kind of looks more weak than has more strength. So would you want to own the stock right now? I mean, listen, it's got a great story. It's got a good PE ratio. Everything is great. The stock is, it's one of the fabulous sevens. Everyone's talking about it. It's got a good move. But for the stock to go higher, we got to get through those sellers first. So being a good trader, you got to have a game plan. And the game plan is, I'm just an ant. I'm just trying to get the crumbs. Where are the institutions? Where are the high frequency trades? Where's Goldman? Where's Merrill? Where's BlackRock? Well, you just seen him. Where are those dark pools? Where everything? Where's the boogeyman? He's right there. And that's what trading is all about. So how do I know this? And why should I be listening to Fausto Pugliese? Well, let me tell you something. I've been doing this for over 30 years. Okay, I'm a 12-time champion at the Money Show. I competed against every school in the industry. I beat them all. And the reason why is because most people are out there were never a market maker on the floor of the exchange. They might look good. They might sound good. They might have a great looking indicator. Might make perfect sense. But some of them never worked on the floor like I did. Okay. And if you look at the left-hand side, that image right there, I love this image because if you look at that monitor, right, it almost looks exactly the same like we use today. We just look at orders. And that actually was an article that was written up on people like myself. That's actually a friend of mine right there. A bunch of kids tormenting Wall Street. I was one of those kids. I'm not a kid anymore, but I was then, you know. And if you read any old books, I'm one of the original So's bandits. They call this day traders So's bandits. All right. So that was the great part about trading. I love trading. I love teaching people like you. I hate see people losing money. Okay. There's no reason for it. And the reason why people lose is because they let the stock dictate and tell them where it's going. You should know where it's going before it gets there. And that's the power of trading. Now, I've been featured on so many different stations. NASDAQ is one of them. There's a lot of videos on me and they're on NASDAQ because the exchanges want you to realize that they're the ones that passed the pattern day trading rule and they got rid of it. Okay. They're the ones that got rid of the market makers. So they want people like me to tell you, say, hey, Mike, Bill, John, Zamir, everyone here, they want you to know that you have a seat on the exchange. You can go out there and trade on your own. You don't need to spend all this, follow these people and tell you where to buy and sell. You can actually learn and do it yourself. And that's the power of trading. So my goal today is this. I'm not here to talk about myself, about the great career and the great cars and this and that. I'm not an egotistical person. Maybe when I was 25. Okay. I'm 54. I got 3 boys. I've been married for 28 years with my lovely wife, Debbie, and which, Jeff knows her very well. And I believe that the reason why I've had a very successful career is because I love a great marriage and a great family, is because I do great in trading. And I want you guys to do the same. There's a lot of you out there between the age of 50 and 90, had to retire. AI is taking over your job. Can't afford Social Security. It's not going to pay enough. Well, guess what? You're like, I got to make supplemental income. You have time. You have a chance to trade your own account. Why give to somebody else and pay you 5%? You could do 5% a day. So this is about you. So let me tell you exactly what trading and how it works. Here at Cyber Trade University, listen, there's a lot of stocks, that are moving. Like this past week, RDW went from 10 to 15 in one day. TE up 70% in one day. That's the one I just showed you right now, and it's still going. Okay, let's look at NVIDIA. NVIDIA had a good run up not too long ago. You know what I mean? Easy breakouts, all these things. But the thing is this, it's not about the winners. It's about the losers. And that's what I want to focus on. I'm not here to brag about the winners. Everybody's issue is it's the losers that kill them. They're like, I made money in this, but nobody likes to talk about the losers. 80% of our education that we teach at Cyber Trade University is the same education that I was taught 30 years ago. I was hired to be a trader for a firm. They hired me because they did their due diligence because they think I could make money. But they had a job. Their job is to teach me not to get in trouble. Their job is to say, listen, I think you're capable of making money, but let me teach you what not to do. And when you do it, you got to learn from it because you're going to lose in trading, and that's okay. Losing, it's like getting into a car. You're going to get into an accident. Sometime in our life, we're going to get into an accident. Okay, just hopefully it's not a bad one. And remember, they teach you how to drive. Well, I'm here to teach you how to trade. So let's stop worrying about going backwards. Let's focus on going forward, and forward is following the money. Now, the first thing we need to follow the money is this. We got 3 tools that we use, and you can get them with Metastock. Okay, you get the scanner, the chart, and I want to talk about where you get the level 3. Okay, listen, finding the stocks are very easy. Okay, we kind of just work off our big percentage gainers and losers. It's pretty easy enough. Yeah, the thing is this. You're probably asking, like which one to follow, which one not to follow. Well, I got some great news. When I'm done today, in the next 30 minutes, I'm going to show you exactly how we find these stocks and how to pick the one that is going to give you the least amount of risk with the high amount of reward. That's the key. And then we're going to talk about, how do we scan them? Listen, there's news, there's earnings, whatever it may be. But the thing is this, which one could I risk the least amount without going out there and thinking like I have to spend all this money because I can't afford it? And that's the reason why a lot of people go out there and trade options and everything else. And you don't have to do that. Now, at Cybertrade University, we're live every day. Okay, we're live every morning. I have a pre-show. We do a lot of pre-market trading. We're trading all live every day. So everybody here is going to be invited. Okay, we practice what we preach. So if you've been following me for the past 30 years, I'm not here sending out newsletters and buy my class, this and that. This is why I beat every school in the industry, because I admit when I'm right and I talk about when I lose. And the big thing that you're going to learn about losing is that I have good losses. You're like, what the hell's a good loss? Like, nobody likes losing, right? Yeah, no. Losing is that you wish you sold it sooner, because if you didn't, you'd be like, oh my God, and now you get married to a stock. And you know what? Getting married to a stock, divorce can get quite expensive. And you want to make sure you married the right one. And trading's the same thing. Because listen, if you listen, we all have dated, and we all said she wants to get, might not be the right one. And that could happen. Okay? Because you got to date to know, right? And I like to compare it to trading. You got to trade to know if you're right and wrong. And you know what? There's going to be time you're going to make a mistake, and you just got to know how to cut your losses and say, you know what? I bought it too soon. I chased it, whatever it is. So losing is a good thing. And that's the key. So how do we control our losers? First of all, you got to have the right tools. Okay. And I want to start off with a tool that is very popular today that everyone has. It's called Level 2. Now, Level 2, let me explain to you what it is and how it works, because a lot of people have it and they're like, I don't know what to do. Like it moves so fast, whatever it is. So basically what it is you get to see every buyer and you get to see every seller. And over here on the right here, this is called a market maker ID. This is every exchange. So you're seeing the stock scan disk, what it's trading at every exchange. NASDAQ, New York, ARCA, BATS, all of them. Remember, there's a lot of exchanges around the world. Okay, it's not just the New York Stock Exchange. And a stock it doesn't just trade at one specific exchange. It trades on all different exchanges. Now, the problem with this is that it doesn't give you the full depth book. Okay, you're just seeing what the stock is trading there at the best price. And that is obviously a waste of time. Okay, that's why most people don't pay attention to it. By the way, this has been outdated since the 90s. Okay, I don't even know why they still even have it. But it's free. They like it. It's glittery. It moves. It's real time. I guess that's why they have it, right? But there is something that a lot of you are not very familiar with, which is called NASDAQ Total View. Now, I'm going to show you everyone where to get it. Now, this is where you need to pay attention, because what I'm about to show you right now is you're going to realize that you've been trading blind your whole life. I'm going to teach you the right side of the chart. I'm going to show you where all the big high frequency trades, all the dark pools, all the Goldman Sachs's and Merrill Lynch's, with what they're doing, you're going to see 70% of where the volume is in a stock. Now, I don't know if you think that's important to you, because if it's not, then you should be listening to me. Okay. And I'm just being very honest with you, because I don't give trophy for last place. You lose, you make or you lose. You're on the winning team or on the losing team. I preferably like to be on the winning team. Okay. And the winning team is who's the big guy out there. And you all know there are big guys out there. So what you're seeing here, fellow traders, is this. Let me give you a little quick breakdown, and then we're going to go into the market and I'm going to show you. You're seeing every single buyer in the entire world that wants to trade Amazon, who wants to pay the most and who wants to sell for the least. You're seeing every seller around the entire world who wants to sell for the least amount of money and who wants to sell for the most amount of money. So you're getting to see every single order around the entire world at every single price level. So this is called the order book. You're seeing the book of the chart. Let's compare it to, like, I don't know. You want to look at someone's inventory and you just want a good deal. You just don't want to pay a lot of money for it. Wouldn't it be nice to know what that person paid for it so you could just basically buy it at that price? How many times have you bought a car and you'd be like, felt you got ripped off? And be like, why do I feel like I paid so much money for it? Well, did you know what he sold it to you for? How much money he made? Because you probably could have got it cheaper. He just basically threw a number and you agreed to it. You know what I mean? How many people feel that way? I felt that. I learned pretty quickly. And let me tell you something. It didn't happen again. Well, you know what? There's people out there like you that are having it happen again and again and again and again. And we're going to stop it today. So let me show you how the trading market works. Stocks go up and go down due to buyers and sellers, not due to support and resistance. That's a big mistake. And I'll tell you why. You can't have a support level unless you have the buyers out there. You can't have a resistance level unless you have the sellers out there. So looking at a stock right here, OXY, and you could see how it went all the way down and it decided to stop right here. Why did it pick this number 52 and went up to 54? What made 52 so special? Well, when you look at the buy side and you work your way down, I know it's a little difficult to see, but if you up here, there was a 115,000 share buyer out there, and there were 15 orders that made up that order at 52. Now, is that a lot of money? Is that a lot of shares? Well, when you look at all the other shares out there, there are 300 shares, 700 shares, 1,000 shares. The real big order out there was sitting at 52, not at 53, not at 51. It's at 52. That's what makes a support level. Not, some VWAP or MACD. Well, actually, VWAP works off it. But this is the raw data that you're looking for. Now, don't trust me. I'm going to tell you in the next few moments where to get this. Not through the Fausto indicator. I'm going to send you right to NASDAQ. Everybody has access to this, by the way. Everyone has full access. And you know what's crazy about this whole thing? When I started, and someone showed this to me, I was like, how does anyone, first of all, why would anybody not want to know this? Why would nobody want to not have this tool? If the exchange is giving it to you, why wouldn't you want to take it? Why wouldn't you not want to know that there's 180,000 share seller out there, at 266? And here you have the stock at 257. And you're like, damn it, why didn't I sell that stock? Now it's at 263. I could have got 266. I mean, granted, I'm still making money, but why can I sell at 266? How would I have not known? Well, if you knew you had 339 orders out there that made 180,000 shares out there, you probably would have got out. You probably would have sold it. But once again, what are you trading off? Are you looking at the raw data? Are you going to the exchange? I mean, who here ever been to New York? Okay, ever do a tour? Wouldn't it be so cool to have access to walk in the New York Stock Exchange floor and see all those traders, what they're looking at, what they're buying and selling? Well, guess what? You don't have to. You got it right here. They got rid of them all. There's nobody down there. They bought them all out. They took that technology and they said, you know what? We don't want to deal with specialists anymore. We don't like this private club. We want a free market system. Who likes a free market system? You want a communist system or would you want a free market system? Because it was a communist type of market before. Okay. It was a very, that's basically what it was. It was controlled by a group of traders, and it was up to them to dictate where they want to buy and sell it. Well, today the exchange is like, screw you. We got rid of them 20 years ago, and they gave you access to it. So here's your chance. Now you have a seat on the exchange. So you don't have to worry about getting a job in New York anymore. None of that stuff. So let me move on here. Let me show you another example. Let's look at some stocks that we traded this week. So Tesla, for example, Tesla reacting to the war, the news, yada, yada, yada. Okay, big deal. All right. So anyway, the thing is this. You ever own a stock and like, okay, well, it's going down. I don't want to lose money. That's okay. That happens. Got to find the support. Every stock has support levels. Okay. And it's not the past that's going to tell you that. It's the future orders that are out there. So if you notice that Tesla was going down, you know that there's somebody out there who wants to buy a lot of shares. So if you go directly to the exchange and you work your way down, you'll notice that there is a 500,000 share buyer sitting here at 422. And there are 392 orders that make that up. Now listen, without looking at any indicator or news article or anything else, I don't care what you think. Oh, the stock's going lower. I heard the bad news. That's great, but you got one problem. You got close to about $400 million of stock sitting there, or 200 million to be exact. Okay. And you know what happens when you hit that 200 million share buyer? Stock goes up. Because what makes stocks go up? Buyers. What makes stocks go down? Sellers. So if you're not out there and you know that these sellers do exist and they're out there and you're not watching them, guess what? You're going to be guessing every time. And that's why I've been here so many times with Metastock. I have such a great relationship with Metastock. I've been with them so long. They know this is basically what I preach. They actually see me so many times do traders challenges. They watch me compete against all these people and beat them all. And it all comes down to this. And people raise their hand. How did you know, Fausto, how to get out of that trade? Because now it's going down. How did you know to get out before it went up? I said, I just follow the orders. I'm just an ant, just trying to catch some crumbs on the floor. I'm not moving $200 million worth of stock. I want to know where the 200 million share buyer is. Okay. Think I want to compete with that guy? I don't have $200 million. Do you? So if you can't beat him, like my fellow mentor, Frank Farrar always told me, just join him. Same thing what happens with resistance levels. HIMS had great news. FDA approval, the peptides, all this stuff. You ever own a stock and the stock is running, it's doing great, making so much money, but your biggest fear is like you don't want to sell too soon. If you looked at HIMS like, oh yeah, I remember HIMS was at $100. Maybe is this the chance? Maybe it's going back to 100. This is the chance. That could happen. That could happen. It can go back to 100, but there's one problem. Sometimes they don't. Sometimes you might have to sell sooner than later. Even in the greatest of the greatest news. I mean, look at NVIDIA, for example, yesterday. They had great news. They did a buyback. $50 billion. The best news, better than earnings. And the stock went down. And he's trying to figure it out. Like, I don't understand. Who buys $50 billion worth of their stock and the stock goes down? I mean, the only reason why you're buying it because you think you're undervalued. If there's any better investment, it's in yourself, right? If you knew you were too cheap, listen, if you had a house that was $1 million and the market crashed and it went to 100,000 and you could buy your house for 100,000, what, are you not going to buy it? Like, my house ain't worth 100 grand. My house is worth a hell of a lot more than that. I'll buy it for 100 grand. I'll buy 10 houses at $100,000, at that price. I know what my house is worth. Okay. I could burn it down and my insurance company will pay me $1 million. You want to pay? It's worth 100? No problem. Give me another one. Okay. Well, no different than the stock market, but to be smart, you got to follow that order. And we got one problem. For it to get back to that $30, $50 price range, whatever you're looking at, because I know you think you got a good deal. Well, good deals don't mean anything until you sell it. I always tell all my traders, you didn't make a single dollar until you sell that stock. Okay? You can look at that all day long. Oh, look, my account's up, $3,000 today. Well, great. Did you sell it? No, not yet, because I think it's going to 6. I'm going to have 6,000 tomorrow. Okay, great. Well, there's one problem. You got that big seller out there. And if you didn't get out there with that $3,000 profit, that $3,000 profit ends up becoming back a zero. You're like, oh, I don't understand. Why did I lose money on that trade? Well, did you see the big seller was out there? Because obviously nobody took him out. And that's why the stock went down. So next time you do your trade, always remember Fausto Pugliese, and always remember what you've learned here listening to me, because I'm going to hopefully change the way you look at trading in just the next few moments, because I'm going to invite all of you guys to come and see this stuff live. Okay, because we do practice what we preach. We just don't give out a couple of videos and say, here, pay me $10,000 and go out there. We actually want to bring all of you here, and we want you to see it and say, wait a minute, this sounds amazing. How could I see it more and more? Well, I'm going to show you. So here's the stock, big resistance, 77,000 shares. Don't get caught up in it. Now, there is a time when stocks do break supports and resistance levels. That could happen. We see stocks like, hey, Fausto, but why does the stock keep going higher? Look at SanDisk, right? Stock goes from 40 to 1,500. What happened? Oh, short squeeze. Listen, regardless of what all that stuff means, don't worry about that. Okay? Let's look at Apple, for example. Apple was breaking all-time highs. All right? Now, everyone's worried about like, oh, you know what? I own it at 91. It's at 94. I think it's too much money. I got to sell it. Stock keeps hitting it. Like I just did an event before. Someone says, oh, it's a double top. You know what I mean? It's got the 2 red candlesticks. That's not a good sign. Whatever it may be. Okay, great. You could use all this, traders talk that you've been talking about. I could tell you the only thing that you need to understand is that you got to follow the money. Now, you could see here, and I would agree that we're at resistance because we got a big seller out there of 93,000 shares. And not only that, but it's not just 93. There are 1,700 orders out there that make up that 93,000. So that's a lot of shares out there. A lot of shares. So stock went to 300. What happened? Well, what happened was this. The stock hit that 295, came back down, hit it, 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 hit it, hit it, hit it, hit it. This is something we call a Fausto flag, which we'll teach you in our trading room. But it's also called consolidation. In layman terms, I'll tell you exactly what happened here. The seller is out there, and over time, someone kept buying it, and they bought more, and they bought more. So 93 dropped down to 80, 70, 60, 20, 10. Well, eventually there was no more shares there. And when there's no more shares, that's where you get those big spikes. And because there was no money out there to sell it, because all the so you went from 90 maybe down to 0, went from 90. Maybe from here you drop down to like maybe 50. And then from here, probably that trade down to 20. And then went down to 0. So that number kept dropping. They kept buying it from him. Well, remember, if the sellers are not there anymore, there's no more resistance. And that's how you had the stock do a breakout. So you could say, oh, I was right. It was a great company. They broke earnings. No, what happened was somebody bought it from them, and that's why it broke out. And and I know, what I'm talking about. Okay? And I know stocks go up due to supply and demand by buying and selling. And by those buying and selling, those are obviously orders that are out there. And that's what we call the right side of the chart. This is the right, and this is the left. The left is the past. The right is the future. And it's the future is going to help you become a better trader. So this is what we call iceberg orders. And the reason why I call it an iceberg order is this. Anyone familiar with the Titanic? We all know what happened to Titanic, right? So it's not what's on the top of the water, it's what's at the bottom of the water. And what happens is he's thinking like, oh, we got plenty of room. Well, not really. And that's what sunk the ship. Because an iceberg order is not big up on top, it's humongous on the bottom. So I came up with the word iceberg orders after watching the movie Titanic, and I said, you know what, this makes great sense. Most people don't have the right technology. They keep looking on top. They don't want to pay the money for what's on bottom. And you know what? Didn't work out too well for the Titanic and those poor people, and they all died. Well, in my situation, I don't want you to be one of those people that go out there and trade and blow up your account, because trading is they say 80, I even say maybe 90. It's a 90% failure rate. Would you give your money to someone that has a 90% failure rate? So why do people fail? Because no one ever taught them the right way how to trade. And that's where it comes down to it. Now, how do I know this? Once again, like I told some of you here, I was a market maker. I worked on Wall Street. When I was you 35 years ago and I sat in a room just like this, the first thing I asked somebody is like, how in the hell does anyone even have an absolute chance of being successful without paying for this technology? So, and it was a great answer. It was a great answer. My mentor told me it cost about $1,000 a month for the technology. Now, 30 years ago, asking a 22-year-old to come up with $1,000 a month, it was like telling you to come up with $4,000 today. Well, let me tell you why there wasn't too many of us. 99% of the people walked out of the room and says, I don't have $1,000 to spend. They're like, okay, well, have a great day. See ya. Good luck with your trade. Don't let the door kick you when you lose all your money, And sure enough, all of them did. And you know who that 1-2% was? Me. Because when you saw firsthand and you saw how much money these people are making, and be like, how you make so much money? Like, it's part of doing business. Well, I got news for all of you. It doesn't cost $1,000 anymore. It doesn't even cost $100. You know what it costs? $15 a month for having a seat on the exchange. Now, for me, if no one here is willing to spend $15 to have a seat on the exchange, you really don't deserve to trade. You really don't. Why would you not want it? So this is what I want you to do. Just turn on your phone. You could scan that QR code, or just basically send me an email. Open up your email. There's my email address, Fausto at C2 Trading. Just email me, and I'll send you the link. What I want to send you is 2 videos. And in those videos, I'm going to show you, they're 5 minutes long. I'll show you where to get it, and I'll help you set up the defaults. You can go to NASDAQ's website and get it now. You could check your brokerage firm. They all offer it. NASDAQ Total View. Ask them, can I have Total View? You're not going to know how to read it, okay? Let me show you and send you a quick 5-minute video, how to set the defaults, and go from there. So this is Fausto C2 Trading, and just type in NASDAQ. And, oops, I spelled it wrong. So I know exactly which one it is. Hit send, and I'll get it from you. All right? So, yeah, send that over to me. Use your phone. You could scan it if you don't want to, I don't know if you have a monitor or whatever, but you could do that, or you could just send it to me. And let me tell you, what you saw right now, and you see this live in the market, you're going to be like, first of all, how does anyone have a chance to compete without knowing it? Why would you not want to know where the orders are in the future? Especially now with some of you here with the pattern day trading rule, some of you are now going to be like, oh, now I have access to do the way I can trade. Well, you want to know why most of the people blow up their accounts back then? Because they didn't want to pay the money for Total View, because back then it was $1,000. That's why a lot of people lost money back in 2000. They just traded right off level 2. And, they're like, let me try and see how it works. And I'm like, okay, great, no problem. Let me know how that works out for you. And, and I'm here because I really don't want this to happen to anybody. All right. I really care about you. Listen, I was just up in Toronto. We just did a joint venture with Mumu, another big brokerage firm. By the way, Cybertrade University has been endorsed by more brokerage firms than anyone in the industry. And Mumu is our new one. And let me tell you, it was standing room only. We were at their York store. Had to have been maybe 50, 100 people in the room. And, you know, they have it, you know, but I told everyone before you play with it, make sure you know how to use it. Actually, I even have it on my app right here. I don't know if anybody here. Let me turn it on. I got it right here. I'll just show you really quick. This is the Mumu app. They also have it on TradeStation, everything else. You have it right here. You can see everything. You can look up a stock. Like, let me look at NVIDIA. I turn on NVIDIA. Does everybody see that? And if I scroll down, look, there it is. See it right there? See it right there? There's NASDAQ total view. See all the orders out there. It's 2,000 shares are going to be bought at 221. Now the question is the strategy, you know? So a lot of brokerage firms offer it. Or you can get it right through the exchange. You can go right to the exchange. All right. So there's one more level I want to talk about, which is called level 4. And it's a little bit more advanced. So I think some of you here are probably qualified. And it's right here. So basically what you're seeing here, this is NASDAQ total view. But now what you're seeing it is on a heat map. See it on a heat map right here. So now you're seeing exactly where the orders are, and you could see it right from there. Now, I can't see the chat, but does anyone here have a stock you want me to look up? I don't know if I have time to do some fun here, but if anybody wants to look at a stock, I would be happy to bring up a stock and show you what's moving. How's my VCX doing? Oh yeah, doing pretty good on that one. $30. Rigetti, we go look at Rigetti. That was a good one this morning. That one obviously had a really, really big move this morning. Do I have Rigetti here? Yeah, we do. So here's Rigetti. And Rigetti, they got this big contract. And you could see right here that it took off this morning. Here's 9:30 in the morning. And you see how the stock just went up. There was an order. This is program trading. See when it kicks in at 9:30? All these orders showed up. Okay, so you got a lot of orders right here. Now, if you notice here, this is called consolidation, like I was just showing you on one of the slides. But you can see right here how it hit this resistance levels right here. You see that right there? See, I went up to this price right around 21.50. And you have all these orders. Look at these orders out here. Now, what's nice about this guy was here, he canceled. So you could see that. And, you know, and there was an order here. But this order right here just got filled. You see the line disappeared? See, now it looks like the next biggest seller is at 22. So like it or not, it's going to probably go to 22. And if I zoom in here a little bit closer, looks a little bit clearer. You see how that big order, you see that big green ball? That big green ball tells me that whoever was there just got executed. Hide with my screen.
Hey, Fausto, I don't know if you can see the chat, so I'm going to jump in and help.
Yeah, no problem. Yeah, I can't see the chat.
Elizabeth says, can you look at CLS?
Oh, yeah, hold on a second. Let's bring that up. CLS? This stock
yes,
right here?
Yep.
Okay. So the problem with CLS, why I wouldn't personally train it, is first of all, the stock's not going anywhere. You could see the spread right here is pretty big. It's expensive. It's got very low volume. So this stock, you won't see that many orders out there. There's not a lot of people trading it. It's been a really good swing trade since April of last year. I mean, it had a really good run here. You can see how it's downtrending. I could check and see if there's any orders out there for you. Let me look it up really quick. CLS. It's not something I would trade. See what's out there. Oh, you might be in luck. Yeah, no, we got some orders out there. Yeah, so there's a stack load of orders out here. Let me go back a little bit further. Let me go 3 hours. So this is very interesting. So this is actually a pretty good one. So you could see here at, let me just load this up a little bit further. We got to go back a little further. Go 6 hours. So you could see here around 10:30, 10 o'clock in the morning down here at the bottom, there was all these orders hovering here around $3, 360, whatever. And they were here from up until about 12 o'clock. And then what happened, the stock started going down. So they changed their mind and they lowered their bid. So they went from 360, now they went to 356. And then they're like, you know what, I'm not interested. They lowered their bid. So you see how the light, see when it changed right there? See, they're not there anymore. Those orders ain't there. So what happened, they went out there and they lowered their bid. And now they dropped their prices. And here they are right here. They're right there. There's a stack of them right there. So they started from up here and they decided, well, I'm not going to be able to sell it. I got to lower my offer. They dropped down here and now they're down here. So now you can see the stock is trying to go up, but it won't go up until it takes those sellers out. That's what you have to understand. So you could see they're out there. And if I go back a little bit further in history, the really big sellers at 380. There's 3,000 shares. So you could see it pretty clear, you know, when you kind of like, it gets a little more blurrier when you try to zoom in, but you could see here that you got a big issue with a big seller out there. There's no buyers, but the sellers are out there. So you got 380 and right around here around this 350 price. Let me go back to the chart and see what we got there. We said, what did we say? Right there. So it's 380. And if I draw a trend line, there's 380. That's that resistance levels right there. Going back, you can see the resistance levels there. And then 350. So that support level right there, that low is now the new resistance. So you can see how the past history is indicative of the future. So there's your game plan. So for the stock to go any higher, which it probably looks like it is trying to, I personally wouldn't want to deal with a big seller out there. And there's not as many, like I said, because there's not that many shares out there trading. Is there another stock out there anybody wants to see?
Francisco wants to know if what platforms support level 4 charting.
Well, I'm gonna actually, when I'm done with you, I'm gonna be on a company called Bookmap. They have it, but a lot of brokerage firms do have it. You know, I wouldn't really worry about this right now. What I would worry about is this current order book, because the thing is this, and you know this with you know, Jeff, with everyone else, when you start dealing with other technology like this, it does start getting a little expensive. Like right off the bat, I'll tell you this right now. I don't know how many people are in here. I guess probably a few hundred. I probably only see probably about 10 of you that emailed me that interested in NASDAQ Total View. Total View costs $15. If you can't afford 15, why would you spend 100, right? So before you go out there and worry about paying $100, $200 for a platform, I'm just showing you like, wow, this looks a little bit more clear. But you won't even go out there and spend the 15. Start out with the 15, then start worrying about the 0. Because right now, you know, when you have 90% of you that are still not willing to spend the 15, you're never going to spend the 150. But I'm just showing you how good the technology gets. Remember, you're here to make money. And to make money, you have to spend money. And to spend money is you got to know how to trade. Now, I know I'm almost out of time. I want to do another one. But before I do that, I just got one last thing I want to show everybody. Because if anyone here wants to follow me, because I'm almost out of time here, you can follow me on social media. I have over 4,000 videos that I've done. I'm on Instagram, TikTok, YouTube. You can just do a search for Cyber Trading University. You'll find me there. But what I like to do better than that is I would like to invite you guys into my trading floor, because we do practice what we preach. So for some of you here, like, hey, Fausto, you know what? I know we're out of time, but can we see more of this stuff? Absolutely. This is what you got to do. Take your phone, scan the QR code, or Jeff, you can post that link right there. Just sign me up at ctu.co/trial. And for $9, that's it. It's cheaper. You only have to go through the NASDAQ. You know what? You could just pay $9 now, sample it through us, and this is what you're going to get for $9. You're going to have access to our live trading floor where you're going to meet me and all the instructors. You're going to see all the trades that we do, how we find them. We start actually at 7:30 in the morning and we run up until 4:30 in the afternoon because we have a lot of earnings that come out after hours. So we here all day long. And you'll get to meet, we have hundreds of traders, over 1,000 traders are in our room. So you'll get to see, not judge us on the winners, but judge them on their winners. See how they think for themselves. Also, we're probably the only school you'll find that has a 5-star rating after 30 years. Read the reviews. The people are happy to tell you what they were just you when they first got started. So you're going to be getting all this. We're going to send you alerts. We're going to show you entries and exits. We're going to show you how we find these stocks, all these great things, everything that you see here for only $9. That's it. So if you want to join the team and you want to see what it's like, here's the team. I'll show you right here. Oh, that's not the team. Here's our floor. What are they looking at? There's the floor right here. And yeah, right now they're looking at the stock TT. And, here's our alerts up here on top. Everyone has access to it. It's connected to X. Here's all instructors. There's no audio commentary right now. We only do it here in the first hour and the last hour. And look, look at all these people from all over the world. Canada, Ontario, Florida, Virginia, Ohio, California, Canada, all over the world. I mean, the list goes on and on and on. Look at all these people from all over the world in the trading room. And you get to meet them and you'll see them. I mean, it's kind of quiet now in the middle of the day, but you'll get to see like why Irma and Roger, asking us, what do you think of this stock? What's happening with Intel, whatever it may be. And it's all for $9. You're going to get everything for that. And not only that, I'm going to throw a bonus too on top of it. If you guys do register now, I will actually personally talk to you on the phone. So, and the reason why I do that is because, there comes a point that you might have questions to ask. And, I'm not an email person. I'm more of a personal. I'm a little old-fashioned Italian. I'm like, listen, you don't like my food, don't pay me. So, and sometimes people are a little shy to ask questions, maybe not a good typer. So listen, if you're in the trading room, you take it seriously. A couple of days later, after you're in the room, we'll have a conversation and we'll kind of make that decision and see if trading's for you or not. All right. Once again, it's all for $9. All right. So with that said, Jeff, I really don't have that much more to say. Like I see a bunch of people registering now. I'd like to thank you all. By the way, make sure you book your appointment as soon as possible. Probably like Wednesday, Thursday. Actually, Thursday. I will be back on Thursday. Thursday, Friday is usually the best. So at least you get like 2-3 days in the room, and then you get to watch those videos and go from there. And by the way, everyone here is going to be able to talk to my staff. So we're really, really, really big when it comes to customer service. Listen, we want you to make the right decision. Trading is not for everybody, and Jeff will tell you that, and that's okay. You know what I mean? But don't go out there and be these type of people that, let me try it. Let me see how it goes. If I like it, then I'll go out there and I'll buy the meta stock platform. I'll try Fausto. No, that's the worst thing you could do, because last thing you want to do is get involved in a stock. The thing crashes on you and you blow up your account and you're out of business. It's cheaper to be in the business than be out of business pretty quickly. This market will eat you up, spit you alive, and don't even care. All right? This is a game. And when you're on a team, we play to win. And you want to be on a winning team. You want to be on a losing team. It really sucks. I can tell you that. Especially a guy from me being a Jet fan, if you know what I'm talking about. All right, guys. Thank you so much. Jeff, listen, thanks for having us again. I love you, Jeff. You guys are the best there at Metastock. You guys are doing a fabulous job. Keep up the great work. Your platform is amazing. Everyone, hopefully you're enjoying it. Now let's put the Metastock platform to work and see in the real markets at Cyber Trade University. So thanks, everybody, for listening. Enjoy the rest of your event. Everyone got some great speakers in here. Listen to everyone. Buy a little bit of everyone's stuff. And, listen, the more you learn from that, listen to the speakers, the more you're going to learn what's for you and what's not for you. All right? But don't go out there and try to do it yourself. Because you think education's expensive, try ignorance. Thanks, everybody.
Get that again if you just go to ctu.co.trial. I put the links in the thing. Big thank you, Pastor. Thanks for coming in, joining us, and spending a little bit of time with us. We're going to run over here. We'll drop to their next screen. And let's change this a little bit. Oh, there should be a PowerPoint right here. There isn't. Where did it go? Let's play that game. All right, let's go ahead and go up here a little bit. Let me find where I'm going. Right here. If you haven't yet, join the community. You can join the community at thetradersforum.com, www.thetradersforum.com. You can chat with other traders, learn about the markets. It's a community of traders designed to help other traders. It's a great resource. We talk about metastock formulas up there. We talk about trading patterns. We talk about stocks that we like. We talk about the markets. We talk about Costco. Thetradersforum.com. Join us there. Elizabeth says, thank you very much for the both. There is 2 Elizabeths in the chat right now. Both of them said thanks. Thank you for being here, both of you. All right. Go ahead and get in here. We have talked extensively about the metastock, the extended trial. Talked about how it can help you scan the markets. We talked about the Ichimoku system today, the forecaster yesterday, the system tester the day before that, and some other tips and tricks. It's a very, very robust product that's designed to help you make better trades. And as a result, it's been rated the best, the highest rated software in its price category for 32 years in a row. It's been rated that by the readers of Stocks and Commodities magazine. The offer that we're doing today is if you buy a month, we'll give you the second and the third month for free. That brings your per month cost to about $25. You can do that at metastock.com/conf promo. You can do that at metastock.com/saleschat. You can give us a call at 800-882-3040. Have any question in the chat? Oh, Elizabeth. Elizabeth S. says, thanks, Jeff. You're welcome, Elizabeth. Thank you for being here. Okay. Metastock.com/conf promo, metastock.com/saleschat, or 800-882-3040. All great ways to get a hold of us. The next speaker that we have is Buff Dormeier. Buff is a great speaker. He does a lot of volume analysis. He likes to talk quite a bit about volume analysis. He's got a Dow Award under his belt from the CMT Association, and he's going to talk about using volume analysis. So, Buff, before I get you started, I want to enlist your help a little bit. Would that be
sure?
Okay?
Yeah, absolutely. No more jokes, right?
Well, do you want to joke?
Go ahead.
Oh.
I'm all up for it.
All right. Let's see. Let me think of one. What? Why should you never trust an atom?
Why should you never trust a what?
An atom.
An atom.
ATAM, not an atom, not a person's name. An atom.
It could go nuclear.
Only when they split. I just find they make up everything.
That's true.
All right, Buff, what I'm going to have you do is I'm going to have you help me give away a prize real quick. So a lot of the viewers we have are on YouTube. If you're going to GoToWebinar, you really don't need to worry about this. You're registered. You could win a prize right now. But if you're watching us on YouTube, you should like and subscribe. It helps a great deal. We really appreciate it. Like, I hear it's good karma too. If you're on YouTube, there's a pinned comment at the very bottom of the chat. And if you click on that, it's going to take you to a registration form. If you fill out that registration form, you could win a prize. Now, what I'm going to have Buff do is actually give me a number that correlates to somebody on our list. So the giveaway that we're going to give next is a Larry McMillan's home study course. It's a $500 course. Larry McMillan wrote the, why did the stock or options as a strategic
options investment. There you go.
Yes. It's been a long week for me, but he's got a home study course which has over 20 hours of educational materials. It has 14 different topics. It's the perfect learning tool for traders at any level. It has a novice, intermediate, and advanced section. All right, what I need from you, Buff, to help give away this prize is a number, and that number can be anywhere between 2 and 5,319.
Well, let's say 1,591.
And that would be Michael M. with a Gmail account in the US. So if your name's Michael M, you might have just won. There's probably a few on my list, but
Yeah. Larry literally wrote the Bible on option analysis.
oh yeah, very,
And
very, very much considered the Bible by about options analysis.
Mhm.
All right, Buff, I'm going to send you the screen.
All right. Okay. All right.
All
Yeah.
right.
We all ready to roll?
I can see it. I can see you. I can get out of the way. Your turn. Go.
All right. Well, thanks everyone for joining me today and your interest in my topic. Today we'll discuss how to utilize volume via my volume factor. And so my goal for today is that you find this content to be more than just pencil sharpening, but a catalyst to your trading and investing. So a little bit about me. I'm Buff Dormeier, Chartered Market Technician. I'm the Chief Technical Analyst for Kingsview Investment Management and an Index Specialist at Monarch Fund ETFs. So we're going to start today by following the money. We're going to follow the money to build a prolific offense by utilizing volume momentum. And as the song says, you got to know when to hold them. And that's price momentum. But in volume analysis, we're going to take this an extra step. You got to know which ones to throw away and which ones to keep. And we want to throw away the securities containing momentum but lack capital conviction and own the securities whose capital conviction outweighs their price momentum. So before we talk about the how, let's first discuss the why, and that's volume analysis theory. So what is volume? Volume is the number of shares traded over a given period of time. It's a measurement of participation, interest, and enthusiasm. And I like you to think about volume in this way. Volume is synonymous with force, okay? And so if you were to look up in the dictionary, what is force? Webster's may say force is a power operative against support and resistance. Well, in market analysis, those are two very important words. And what is support? Support is an area where the buyers reside. And what is resistance? Resistance is an area where the sellers reside. And then we can expound upon that. What's an uptrend? It's a rising support line. What is a downtrend? It's a falling resistance line. Okay, and this is the part that people miss. Volume is that force that is required to sustain those trends. Okay, now we're going to flip it and we're going to open up the physics dictionary. We're going to talk a lot of physics today. And in the physics dictionary, force is a vector quantity that tends to produce an acceleration. And this confirms a major tenet of technical analysis going back all the way to the days of Charles Dow over a century ago. And that is that volume leads price, meaning that significant changes in volume often precede major price movements. And if you think about it, that only makes sense because price is the result of trading activity. Since volume leads price, and volume drives acceleration, should we not be utilizing volume in our analysis? So I want you to think about it this way. Let's go back to Star Wars. And what did Yoda say before he engaged or sending someone out for an important mission? What did he say? He'd say, "May the force be with you." Volume, my friends, is the force in the exchange market. If you take one thing out of my session today, remember, volume is the force. And you, as the investor, want to make sure you're on the right side of it. Okay, so I said we're going to get into some physics, and we're going to go through the laws of Newtonian physics via volume analysis and volume's role in momentum analysis. Okay, so what is the first law of Newton's first law? An object at rest remains at rest. An object in motion remains in motion at a constant speed and in a straight line unless acted upon by what? An unbalanced force. So we could rewrite it to look like this. A trend in motion or momentum tends to remain in motion at a constant speed and a straight line unless acted upon by unbalanced volume. My old friend referred to this as on balance. My old friend is Joe Granville. But I believe it is better defined from this physics vantage point as unbalanced volume or force. And speaking of Joe Granville, anybody remember him? Joe Granville was a volume guy. And so you probably, if you're old enough, you may remember or heard of those E.F. Hutton commercials and what they say, E.F. Hutton talks, people listen. Well, guess who E.F. Hutton's chief strategist was? Yeah, it was Joe Granville. In the 1980s, Joe went on publishing the Granville Letter. And at his peak, he was thought to have more influence on the market in the 80s than the Federal Reserve Chair. Can you imagine that today? So in the 1980s, because he had this letter, co-location was how close your mailbox was from Joe's post office. So, and Joe had this saying, volume is the cause, price is just the effect. Yet most all momentum analysis focuses strictly on the effects and ignores its cause. So shouldn't we consider its cause or volume? So the analogy here is this. Volume is the unbalanced force causing price change. So we're going to focus on volume, but first, before we get into that, let's look at some momentum indicators void of volume. So Newton's first law suggests that momentum and trends continue until the volume changes. Now, there are two primary types of momentum. One is internal momentum. That is momentum relative to itself, like how much faster the stock is moving compared to what it used to move. And then there's external momentum, and that is how is the security moving relative to something else like the S&P. So let's start here with internal momentum, okay? And perhaps the most popular momentum indicator, and particularly the internal momentum indicator, is RSI, okay? And so if you look at the chart with me here, this chart is from Richard Tortello's book, Quantitative Strategies to Produce Alpha. Now, Tortello is a research analyst at Standard & Poor's, so for S&P. And so he has a front row seat in testing strategy. Now, wouldn't that be a fun job? I'd like that. So that's what he does for S&P. He tests all these different strategies. So he wrote a book about it. And in his book, he tested 1,200 indicators from 1992 to 2007 to see which ones, if any, produced alpha. And the vast majority of these indicators were fundamentally driven, like PE ratios, return on equity, those type of things. But he did test just a few handful of the technical indicators, and one of these was RSI. And of the 1,200 indicators he tested, do you want to guess which one produced the highest alpha? You betcha, it's RSI, the relative strength index. So RSI is probably the most popular internal momentum indicator. Okay, and Wells Wilder developed RSI. I think that goes back into the early 70s. Okay, and so what Tortello did is he broke down the RSI into quintiles. Stocks that had the highest RSI, or the top quintile, produced actually exceeded 6% of alpha. And those with the least amount of the lowest RSI scores, or the least momentum, produced the weakest performance and underperformed by about 3%. Okay. Now, so one of the things you have to know about me is I don't take anybody's word for it. I have to dig in and do my own research. And so I did my own study, not over the same period of time, but more recently. And that study was from 2002 to 2023. And I tested the Russell 3000 index members, and you can see the results via this slide. And unlike Tortello's research, it was actually high RSI underperformed, whereas the low RSI actually outperformed. And so what can we learn from this? The momentum works, but momentum analysis is fickle. Sometimes it works well, sometimes it goes out of favor, sometimes it works differently. So sometimes overbought is what you want to do, sometimes oversold is what you want to do. But what if there was a tool that revealed when momentum had the fuel to continue, or in other words, when RSI was fueled versus RSI when it was gassed and likely to fail? Wouldn't that be an important tool for you? Okay, next let's look at RS, or relative strength, which compares a security's momentum to something else like the S&P 500. RS is generally the tool when you see like these ETFs that have like the momentum factor, or you see anything momentum. When you hear the momentum factor, they're usually referring to this RS. How is a security performing relative to a benchmark such as the S&P 500? And as an investors, we should not be surprised that RS, relative strength, was also one of the very top producers of alpha, easily in the top 1% of that of those 1,200 different tests that Tortello ran. And so from 92 to 2007, the stocks with the highest RS produced about 3% of alpha. Okay, whereas the stocks with the lowest relative strength underperformed by 3%. And so guess what I did again? I had to test it myself. And guess what? This time I found confirmation. Okay, that stocks with the highest RS did outperform. Okay, but also the stocks that were the most oversold also outperformed by this one was by the top quintile was 4, and the bottom quintile was 5. Now, let's look at Newton's second law of motion, momentum or force. Okay, so this Newton's second law states the acceleration of an object depends on the mass of the object and the amount of force applied. So think about it this way: the more volume or force being applied to price, or the stronger the expectation of momentum. So think about it like this. It's a formula. how much momentum or force or volume is required to move a security a given distance or price change at a particular speed. That's the momentum. Okay. So the analogy here is that price acceleration or momentum is powered through volume. So in this way, volume or capital is the fuel of the stock market. Okay. So with this thought in mind, what would happen if we took that RSI and infused volume data into it? And there's already an indicator that does that. And it's actually one of the tools in Metastocks or my volume analysis toolkit inside of Metastock. Okay. This is an indicator. It's called the money flow indicator. And it's been around, I think, since the late 70s. Okay. And essentially all it is RSI volume weighted. Okay. So notice that when we infuse RSI with this volume data, we take a portfolio or a strategy that underperformed by 2% and we make it outperform by about 2% just by adding the volume data. Okay, so overall, most people don't utilize volume, especially in momentum trading, but those that do stopped there. Okay, they stopped at the second law. The third law is by far the most significant law, and it is the one that everyone misses. Newton's third law of motion is the action of the law of action and reaction. I like to think of it as price volume asymmetry. Every action has an equal and opposite reaction. That's Newton's third law. And so the analogy here, the difference or reaction between price momentum and volume exposes an asymmetry between price and volume. Okay. So it's not price momentum and it's not just volume. It's the reaction or the asymmetry, the difference between the two. Okay. So the reaction is measured by the delta between price trend or price momentum and its volume. Okay. So think about it this way. Demand pushes and supply pushes back. And that delta, we could call that the delta force or the volume factor. So this is what we see here is the results of a test of one of my proprietary indicators that is embedded inside my Metastock toolbox. And this is the volume price confirmation indicator. Okay. So this first illustration of the VPCI, the volume price confirmation indicator, what it does is exposes that asymmetry or that delta between a price trend and a volume weighted price trend. Okay. So the goal of VPCI is to verify and validate the trend by looking at that asymmetry between price and volume through trend analysis. Okay. And so what did we here do? Does this study show? Okay, so we have a red line and a blue line. The blue line is the S&P 500, and the red line is looking at the stocks with the top decile VPCI. And so you can see that over the last 2 decades, owning the stocks that had the highest VPCI scores produced 3% of alpha over the last 2 decades. Okay. Next, we're going to look at the same thing, except we're going to look at the delta as opposed to price trend. We're going to look at it through the delta between price and volume through momentum. Okay. And this is my volume momentum indicator, also available in the Metastock toolbox. Okay. This should be your go-to indicator, the VMI. And it again is the difference or the delta. And it's the delta between specifically the MFI, the money flow index, and the RSI. And that difference exposes volume momentum asymmetry. Again, you can find it, and it's one of the few places you can find it is in my Metastock toolbox. So stocks with the highest BMI produced nearly 7% of alpha. Okay, so again, same study that we looked at before, going back from 2002 to 2023, and the stocks with the highest BMI scores produced 7% of alpha. Okay, BMI illustrates how much stock momentum is being confirmed by its volume. And so the stocks with the strongest volume asymmetry, as indicated by the BMI, yielded these remarkable results. So let's just review our three laws. Newton's first law of motion. An object at rest remains at rest. An object in motion remains at a motion at a constant speed in a straight line unless occupied by an unbalanced force. In other words, volume is the unbalanced force causing price change. Newton's second law. Price acceleration or momentum is powered through and via volume. And Newton's third law of motion is the difference between momentum and volume adjustable momentum that exposes this asymmetry between price momentum or price trends and its volume. Okay, so price is the effect, volume is the cause. So what we want to do is study these effects, okay, and understand not so much the effects, but we want to understand the underlying cause, which leads us to volume analysis, or specifically the volume factor. Okay, so next thing we're going to do something a little wild. We remember the things that we just went over. Essentially, we had three winning factor strategies. One, where did I go? I lost it. Let's see if we get back. One was relative strength. Okay, so what we're going to do here is relative strength actually had two winners. It was top decile and bottom decile. Both of these were the outliers. Didn't matter if they were overbought or oversold. They were both winners. We just didn't want to be in the middle. So what we can do is we can capture both the top decile and the bottom decile by flipping RS into absolute relative strength. Absolute, remember that in math, absolute numbers? So we're going to look at the absolute RS, which incorporates the top decile stocks and the bottom decile stocks. Okay. Next, what we're going to do is we're going to then add the VPCI, or the delta force of price trends, and then we're going to add in again the volume factor momentum, or the VMI, which again is the delta between price momentum and its volume. Okay, so we're going to add all three of these together to create a system, and we're going to own the stocks that show the strongest characteristics of these three factors combined into one. And doing that, over this period of time, the Russell 3000 produced just under a 12.6% return. But owning the top factors of those three components together produced a 24.5% annualized return, almost doubling this benchmark. Now, one thing to note, if you were to look back at this Russell 3000, this does have survivor bias, meaning that there were some stocks over this course of time that fell out of the index, and we only used the stocks that were still in the index when we tested in 2023. Okay, in financial terms, if you were to invest in this strategy over the last 2 decades, $10,000 in that benchmark, the Russell 3000. Again, that was the Russell 3000 with survivor bias. It would have, that 10,000 over those 2 decades would grew to 123,000. That same 10,000 invested in that strategy would have produced over $1 million. And you can see here's the year by year returns. Okay, so our Metastock toolbox has the stock screens to identify stocks with these types of characteristics. It's not the exact screen that I just showed, but it's specifically formulated to pick out stocks with these characteristics. Okay, I'm just going to show you a couple examples of stocks that we still own that had good signals. Whenever you see this green here, that's that means it's a buy signal. This is Rocket Labs. That was signaled about a year ago. And then let's look at another one signaled about 13, 14 months ago. This is STX, Seagate, another one that broke out. So what we're looking at here is you see this red means sell, green up arrow means buy. These are some proprietary indicators. My trend thrust indicator, which beats the snot out of MACD. The VPCI, which we already discussed, the asymmetry of price trends, and the VMI, the asymmetry of volume momentum. And then here you can see we got these colored bars here that correspond to volume flow analysis. And then next thing we're going to talk about is defense. And one of the things that you'll get is these red dots. Okay, these red dots are anti-volume stop loss, which forms our risk management policy or our defense. So let's just get into defense. So now that we have the volume factor and offense installed, now let's move into the volume factor defense. And what do the people say about defense? Defense wins championships. Okay. Because if you have a strong defense, you're always in the game. And you always want to be in the game. Okay. You don't want to get knocked out. That's rule number one. Have a risk management policy so that you're always in the game. Capital is precious, and you need to have a plan to protect it. And if you do, you're always going to be in the game and have another shot at it. Okay, you just don't want to get knocked out. Okay, so why do you want to have a good defense? It's not it's about survivorship. Okay, but it's also is math. Okay, so if you lose 10%, you need 11% to get back to even. You lose 25%, you need almost a 35% to get back to even. If you lose half your money, you gotta double it. Okay. So if you don't respect the laws of math, you will not be a good trader. Okay. Profits take care of themselves, but losers, they never do. Okay. So now the key is it's an art of survival, the art of survival. Okay. And what we want to do is we want to make sure that we try to avoid the corrections, but what we can't do is go through a bear market, because bear markets destroy your investment plan. Okay. Now, one of the most effective and common tactics to avoid bear markets is following the trends, like the moving averages. Okay, so this shows here some research done from 1928 to December 2020 on the S&P 500, and looks like at 5 different moving average strategies. And notice that all 5 of them, following the trend, where you follow the 10-day to the 200-day, they all beat buy and hold. But more importantly, they all do it with lower volatility. Okay, so but there are a couple drawbacks by following the trend. Okay, one is by following the trend, you're never going to get out on the top. That's not so important. Okay, but if we look down here, average trades per year, this is whipsaws. Okay, you have a lot, and most people follow this 200 because it has the least amount of trading. So you have more trading by following the trend, and you're going to get whipsaws. Matter of fact, only about a third of these trades on average are profitable. So 2/3 of the time you're wrong following the trend. But when you're right, you make big money, and when you lose, you generally lose smaller amounts. Okay, it's not about how much you win or lose. It's about making money or losing money. Okay. The other problem is we mentioned you're not going to get on top, but you're not going to get on the bottom, and that's a bigger problem because bull markets are usually born in optimism or in pessimism, and it's the initial run up, which is generally the strongest move of the market. So think about all the bottoms that you've seen. Generally, when the market rebounds, it doesn't do it slow. It doesn't U bottom. It V bottoms. And if you miss out on that initial that bottom, you're leaving a lot on the table. And so that's where it comes back. What have you done for me lately? And what this shows here is following the S&P, the red line, versus following the 200-day moving average. And since 2000, which is probably many of you, is probably, precedes most of you when you're investing. So for most of your investment career, it has not worked out. The S&P has returned 6.3%, and following the 200-day moving average only returned 4.2. So it hasn't worked. Following the 200-day moving average has not worked. You've underperformed by 2% over the last 2.5 decades. But it did lower the risk. So that is but not enough to produce a positive return. So the volume factor is used to solve the price of following to solve the problems of following price trends. Okay, it is often thought that price is the market's discounting mechanism. My hypothesis is not. Okay, so think about it like this: you are the pilot of this plane, and you're flying along, and you suddenly need that plane to go higher. So what are you going to do? You're going to change the trajectory of the plane by pulling up on that yoke, and you aim it higher. And if you did this and you did nothing else, you know what direction that plane would go? You going to answer, Jeff? It's not going to go up. It's going to go down. Why? Because if you don't give it capital, if you don't give it thrust or fuel to compensate for that change, the plane's going to stall. Okay, so think about it this way: what is the fuel of the stock market? It's capital. It takes more and more people willing to provide capital or fuel at ever increasing prices to keep the proverbial plane ascending. So if the market's moving higher with fewer and fewer capital, the market lacks the fuel and may likely stall. That scenario has been happening since the April rally. So again, I went just reflect. Remember, following the 200-day moving average, underperformed underperformed the market by 2%. Now what we're going to do, as opposed to following the trend of capital, we're going to follow the flow of volume. So as opposed to underperforming the market by 2%, when we follow the trend of volume, we outperform by 2% and maintain that lower risk posture that by following the trend. And thereby producing significantly higher risk-adjusted rates of return. Okay, so let's take a look at the most recent trend failure. This is a little over a year ago. This is 3 strategies. One is the spider representing the S&P 500 in purple, the Pacer Trends Pilot, which follows the 200-day moving average, and one of my strategies, one of my ETFs that uses volume as it follows the trend of volume as its risk overlay. And so notice that when the tariff tantrum hit, there was quite a bit of difference between following the S&P, following the price trend, and following the volume trend. So there's another reason that trend systems fail. And we hinted about this earlier, that it can't re-enter until the market's already moved up. And so for this reason, we're going to add to our offense, add to our defense, a special teams unit. And special teams is the transition from defense back to offense. Okay, and this is important because the most powerful segment of the market is birth. Okay, and so we solve this problem not by following the trend of smart money, but we're going to use volume, asymmetry, and in a way, volume sentiment. Okay, so let's illustrate it like this. Do you think about it in your mind? Do you know anybody who's always right? You probably don't, but you probably do know several people who have a knack of doing the wrong thing at precisely the wrong time. So as opposed to following the smart money, we're going to try to find these people. And these people generally congregate in another ETF, and that is the spider and the Qs. Okay, this is where the retail trade tends to congregate. Okay, and so what we're going to do is not look at the volume of the S&P, but we're going to look at the volume of the spider. Okay, because that gives us a proxy for these retail traders who buy on the fear of missing out and sell on fear. And so what we're going to look for is the volume is for the price to drop something more than 10%. And as it drops rapidly, what happens generally in a capitulation setup, the volume is going to spike 25%, 50%, 100%, 200% or more, okay, while price goes down. And so what we're going to do is we're going to look at the asymmetry again using the VPCI, the volume price confirmation. When that asymmetry gets expanded significantly, and then it turns back up again like it did right here on March 9th, or excuse me, April 9th, 2009. It was a perfect time to buy. Anybody else buy the very bottom of March 2009? I still hold some of those positions in my account just as trophies because we got the signal and we took it. Okay, what about the pandemic? Same thing. This is the VPCI V bottom 2 days before the actual bottom. So we're a couple days early on this one. Okay, and so now what we're going to do is we're going to combine what we looked at before, following the trend. This is similar to that anti-volume stop loss that we looked on stocks, but this is capital weighted volume on indexes. Okay, we're going to look at combining this with the V bottoms, and what we do is we increase the alpha, with slightly only taking on slightly more downside risk. Okay. And our most recent, we talked about getting out before. Now we got to get it back in. We got in 2 days after the bottom, during the tariff tantrum, which meant if you held the trade until the end of the month, the pacer was actually that used the 200-day moving average was still down, The market was still down, and utilizing the VPCI V bottom within our ETF, we produced a positive return. And this is just bringing it up more up to date. So one of the things you can do inside of the toolbox is you can run stock screens. And so this is today's stock screen. This is on the daily. This is the Metastock Explorer. And this is one of the screens you can find is volume, trend, momentum. And you can see these are the stocks that made the cut today out of about actually the S&P 1500. And so we had, out of those 1500 stocks, we had 5 stocks pass the screen today. And then we looked at the trend thrust. We didn't get into a whole lot of the trend thrust principles today, but there's so much in this volume 2 kit. We can't go through it all. Okay, but you can see here that we had a couple positions that cleared the that cleared this screen as well. Actually, 1, 2, 2, 3. Okay, so I'm going to finish here with this. Okay, this one last nugget. Okay, now I call it the volume factor, and when I say that volume is a factor, I'm making a pretty bold claim. I'm saying that volume is not just a data set, it's not just a leading indicator, but when used correctly, it's a factor. But I'm going to take that claim and I'm going to take it even further. Volume isn't just a typical factor, it's the monarch of all the factors, okay? Because if you know where the money's moving, you know which factors to be invested in and which ones to avoid. So I made some big claims here. Here comes the receipts. The FAMA French model is the gold standard of factor analysis, okay? FAMA won the Nobel Prize in economics, okay? So this is the gold standard of investing, okay? To be considered a factor, the factor must have a minimum p-value of 0.05. That simply means that, to get all the geekiness out, it means that 5% or less of the time, these results happen by chance. Okay, the lower the p-value, the less likely it happened by chance. Okay, so it's on most factors to be considered a factor have to have a 5% probability of occurring by chance or less. Okay, now there are 2 factors that have that don't struggle meeting that criteria, and that is momentum and quality. Those are the 2 strongest factors. They have p-values of 0.01. The other factors that you look at, if they get 0.05, they struggle to get there. Okay. So this research comes from Dr. Matthew Ludi, and he did the FAMA French model using my volume factor suite with many of the tools that you have in there in that toolbox. Okay. And what he discovered, and it was published in Journal of Accounting and Business and Economics, that the p-value of the volume factor wasn't 0.05, it wasn't 0.01, it wasn't even 0.001, it's 0.001, meaning that it literally is off the charts. It's 100 times better than the very next best factor. Okay, so if you think this happened by chance, that's literally a definition of insanity there, mathematically. So I'm going to let you go here. Jeff is going to discuss how you can lease these tools through Metastock. If you found this to be of interest, I do publish a weekly commentary. You can find that. You can email me here at info@buffdormeier.com. To subscribe to that is I think you might be able to afford it. It's free. And then I have a couple books out. My most recent book is The Volume Factor. You can find that on Amazon or wherever you buy your books. That retails for around $20 or so. My other book is significantly more expensive. It's around $50. But this book won the 2012 Technical Analysis Book of the Year award, and that's also available on Amazon for about twice as much. So with that, I'm gonna turn it back over to Jeff, and he can bring it home from here.
All right, Buff, thank you very much. We do have a couple questions if you've got time for them.
Yeah, be happy to.
One of the questions is, how well does this work on futures and currencies?
So volume data works exceptionally well as long as you got good data. So if you got good futures data, then yeah, you're all in. So, but just make sure you got a good data feed, and it should be good. Now, when you start looking at options, you get things like open interest and things like that. That changes the dynamics. But futures is, I've heard people have good success utilizing this within futures.
All right, very cool. And what type of a time frame do you recommend?
Well, I would so when you get in, you can use this type of analysis in all time frames. If it doesn't work, if it works on the daily, it doesn't work on the weekly, but it works on the monthly, it doesn't work. So this should work on all time frames. Now, with that, one thing is a caveat. Intraday volume is U-shaped, meaning you get the volume in the morning at the open, then you get the volume at the close. And so if you're trading intraday using these volume indicators, you have to keep that in mind and adjust, because your volume is going to show up in the morning and it's going to show up at close, and then at the lunch hour it's going to be its weakest. So it kind of goes like this throughout the day. So intraday, you have to make some adjustments or use some different tools. But daily, weekly, monthly, whether you're short-term swing trader, intermediate term trader, or long-term, this works. If it doesn't work on one time frame, it's not going to work on any.
Okay, that's extended the questions. Thank you very much, Puff. I appreciate it.
All right, thank you.
Let me go ahead and grab the screen share from you. And thank you very much for spending some time with us.
All right, good seeing you again, Jeff.
All right, see ya. Go ahead and do this. All right. Again, the Buff just won the Dow Awards for this from the CMT Association. It's a very, very well programmed add-on into Metastock. It includes 2 expert systems. The scans you need to run it. We've talked about how scanning can help you kind of shortcut that learning process, or shortcut that selection process and focus on the things that work. It does have tests in there, so you can go in and test, make sure everything works well, see how it works against the instruments you're looking at, templates, and a total of 24 different custom indicators, which have all listed right here. So the systems are the trend momentum and the trend thrust. I don't know if both of those were winners of the Dow Award, but definitely one of them was. And here's a list of all of the indicators that are included as part of the methodology in the system. Normally, this is $150 as a monthly cost. It'll pair well with an extended trial. If you're just getting Metastock for the first time, you can buy 1 month and get a second and third month for free. You can also do that if you purchase if you lease the Buff Dormeier Analysis Toolkit. Not only will you get a permanent rate of $99 instead of $149, we'll also give you 3 months. So it does work really well with what you're looking at. So you can do this if you go to, if you give us a call, 800-882-3040. You can also chat online with us at metastock.com/saleschat. And you can also go to metastock.com/conf-promo. So a big thank you to Buff for being in here and helping us out with all of that. I do want to thank both of the sponsors that we have for this week's summit, or in this week's conference. First of all, I do want to say thank you for being here. It's been great to have you. I hope you're enjoying something. I hope you're enjoying the event, and I hope you've learned something. I'd encourage you, you can join the tradersforum.com. A big thank you to the Traders Forum for sponsoring the event today. You can do live market chats. You can learn about the markets. It's a community of traders designed to help other traders, and you can do all that for free. thetradersforum.com. We do a lot of really cool events up there, like just a podcast. Sometimes we'll go in and talk about different indicators and how they work. So thetradersforum.com. I also want to say thank you to Stocks and Commodities Magazine. I don't have their slide up, but we're going to say thank you to them just because we have a bit of extra time. The guys over at Stocks and Commodities have been great. They've supported the events and the conferences and getting these to you for years. You can find out more about the Stocks and Commodities Magazine at thetraders.com. Now, all the offers that we've got for you this week, including the extended trial for both Metastock and Buff Dormeier, can be found at metastock.com/conf-promo. You can get them at metastock.com/sales-chat. And you can call us We'd be happy to talk to you. 800-882-3040. Now, let's do a random number. I have some more prizes that we're going to give away. Buff actually gave a couple of books to give away. So I'm going to give away both of them right now. So Buff's talked a lot about his volume factor book. The volume factor reveals a critical role of volume analysis as a missing piece to investment analysis. This resource highlights how leveraging the volume factor empowers investors to achieve successful financial outcomes through goals-based investment strategies. I'll get done reading that because it's been a long week. I'm not really that great at reading, but what I want to do is we're going to do a little bit of a prize giveaway right now. So what I want you to do, I'm going to go ahead and click on over here to the questions tab. And if you're listening right now and you have a chance, go ahead and put in a number, a random number. It can be anywhere between 0 and 100. And we're going to actually have Google help us pick yet another number. So go ahead and get your numbers in. We're going to have a little bit of a time frame to do this. And while you type in your number, what I want to say is, again, with Metastock, it's been rated the best software in its price category for 32 years straight. It can help you test trading ideas, get feedback in the market, all of that kind of good stuff. And if you buy a month, we'll give you the second and third month for free. That means you're paying about $25 a month to use Metastock, the software that's been rated best in its price category for 32 years in a row. So are you giving me numbers? I've got a few in here. Time is running out. Let's check YouTube too. All right. I think that's good. Where is my YouTube chat? Okay. Hey, Tavanda, it's good to see you. Thanks for saying hello. All right. Okay. It's going to be a pretty easy contest to win. Okay. I'm going to open it up just a new Chrome tab right here. Give me a random number between 18. Yesterday, Google went low all day, or high all day. Today, it's going a little bit low with the number of 18. Let's see who's the closest one and won the prize for Buff Dormeier's book. What's the number 18? Elizabeth, congratulations. You were the closest with the number 13. So I'll send that information over to Buff. I'll have him send out the book. I believe it's a physical copy. The second winner was Neil again. Neil, you're taking away the prizes today. Congratulations, guys. Okay. Let's go ahead and go to the next speaker. We have a little bit of extra time. Our next speaker is Mr. Peter Dalal. Peter's been a great partner of Metastock for a number of years. He developed the first version. He developed a methodology designed to help people trade FX probably about 20 years ago. It's been a minute. Very, very successful methodology. He's an avid technician, a very hard worker, and does a really, really good job in terms of analyzing stocks and securities and that kind of stuff. So without further ado, let's go ahead and get him started. I'm going to go ahead and ask him to unmute his microphone now. And I'm going to give him the presenter privileges as soon as we can hear it. Peter, are you with us? Peter? I'm just hearing static out of your microphone. Yeah, it's just not working, Peter. Let me, here, let me do this. I wonder what that does. There's a spotlight for a speaker.
Can you hear me?
Okay, there you go. That's better.
I think on your end, the speaker was off, the microphone was off, so I just realized that.
Yeah,
You
we had to mute you because we were hearing a lot of static during the last presentation. So I'm glad we got it all sorted.
All right. So how are you doing?
I'm doing great. Let me make you the presenter. Let's make sure we can see your screen.
Me. We got to figure out which screen I'm on.
Okay. At one point, there was a point where I remembered exactly what screen you needed to select, and I want to say 7, but I don't remember if that's actually accurate or not.
Okay, I select one. Let's see if we can see that. All right, you can see it?
First try. It's working fine.
All right, so that's cool. All right, thank you everybody for coming here today. And we're gonna make it short. There's a lot I could talk about it, but we have to respect the upcoming speaker. I normally don't even look at who's going to speak there, so I have no bias. I try not to get any kind of feelings, right? So a lot of people I know from industry being around for a while. So Jeff and I go back, God knows how many years, as he said, at least more than 25 years. And basically, we're going to talk about one of the product which it was up and running for institution in 2006. That means I had prepared it way before that, right? And the retail version has been around like 7 years. So initially it was intended to do basically institutional work. That's where I came from. And I did it for me so I could save some time. So I don't have to do technical analysis too much. And I was traveling with Reuters back in days. Jeff and Kelly were together, and we went to several countries. Most of the cities in the United States we visited, and some of them in Canada. And I enjoyed traveling in those days. But the bad thing is, hardly you see your children, right? Because they were young. So that's what I regret. But I enjoyed traveling. I met so many people. We're not talking about thousands, more than 20, 30,000 traders around that time. So we have nothing else I could replace that experience dealing with traders. Then at one point, I really felt that I should spend time with the family. Then I went back to the trading again, right? So that's how trader works. But it was a very good experience, and it is very different experience when you transform your experience into institutional experience into the model you developed. So you're going to see some evidences on that. So let's get started. We are registered entity with CFTC at one point. I was registered with the SEC. So all series 7, 6, 63. We currently have 3 and 34, and we are regulated by CFTC. So some of the people may see too much disclaimer. Don't worry about it. We're going to make it quick. You could get copies from Jeff if you want to do it. And you could go on my site and look at it also. And I always do not talk about our website, but if I could show, I will show it to you if you can see it. Jeff, can you see that? Oh, yeah, I see that. So
yes, you can see it.
Yeah, this is our website. We don't want to walk you through it, but basically you register there and you will see a lot of good things there, which is kind of institutional side. Don't expect all the higher highs, higher lows, and all patterns. We went with institutional flow, and when institutional believes, including you too, to pull the trigger, right, to go long side or short side. That's what we track, right? And that's what I figured all out. And it is a risk-based technology. And later on, we're going to make you realize how many risks are there. I was afraid to tell people when we started with Reuters, when I first, maybe not like today. And I said, oh, there are more than 50 risks. Then slowly we check it up. Then I started talking, oh, there are more than 500 risks. Then there are 2,000 risks or more than 2,000 risks. And now, since last November, October, I went calculator and showed the actual calculation, which we're going to show to you. So humanly, it's not possible to calculate them in a real time. So we figure out a way, we prioritize them, sequentize them, and I create risk clusters, good and bad. So basically, I don't have to worry about all this traditional stuff. That doesn't mean traditional stuff is not good. I came from there. I taught all over the world traditional thing. But I realized that I do not have time and it's too much to learn, right? As it is, because of the amount of risk involved in trading. And we figured out and identified magic trades like an ocean and galaxies are combined, but you don't need to worry about learning about Mars, learning about Pluto. You pick up what you like, and then you could capitalize on that. And that's how it is. And basically, there's a lot into that on institution side. Most of the people have no clue, right? And even on the liquidity side, layers, right? Liquidity band, liquidity bucket, and gamma. There are 5 different stages. On a positive side, most people don't talk about negative gamma, right? There are 3 major stages of gamma, then the combination of that. And we were in a position to figure it out using manifested AI. That has nothing to do with your traditional AI. 15 plus years ago, we had manifested AI, but we kept quiet because people will not believe. So we don't want to say we are a conservative company. So I just want to give you an idea. Don't get too much kind of impressed about it. Just see what you could pick up, which fish you want to eat. So having said that, let me give you a little bit about, and then we're going to come back here. This is as simple it gets it. Bunch of color. So you could see here the colors of the candles, different colors, different symbols. Each has some kind of event happening as far as the risk clustering is happening, right? And you pick up one like easy to spot. It's the bull, right? And you could see it is self-explanatory. It's underneath that symbol. It's underneath the bull. That means we're going long. And this is my favorite one. So these are different kind of institution. So we got the pattern. We were the first one to accounting for different kind of institutions represented by we call it price perceptors. And because of that, there are different colors. So I want people to see this is not your normal software you come across every part of Metastock. This is something different because it's a risk based and it is clustering. So it will feel different. You can't Google and find anything about it, right? Because we try to be private and we started with institutional clients, right? So we stayed with them until me and Jeff and Carrie made a deal. So basically, my lifetime went into institution side. I just want people to know about it, where I'm coming from. So let's get started very quick about disclaimer. As I said, you could get a copy of these disclaimers. And these are the topics we're going to talk about today, right? And I would rather spend time with this slide, and you will see these titles there, so we could save some time. And once I finish, Jeffrey is going to take over. So as we are registered, I don't have enough time, or you don't have patience to listen to every disclaimer, every line. Long story short, we are not acting as an investment advisor here. If you want to get buy and sell and hold recommendation, hire your own. Market is risky. You could lose money, and we cannot guarantee anything, right? Including my own performance, I cannot repeat, because if somebody says that, regulators don't like it, because you cannot technically duplicate yourself. Yeah, you could in theory, yes, but in not real time, because you could fight with 20 cents difference. It's not the same, right? So we don't use those things. No guarantee, no nothing, right? Because results cannot be typical, and it's all falls under hypothetical categories. And these are all false, even though regulators telling us, even it's a real-time trading you're showing in your alert room, but they all fall under stimulated trading title. So we recently started putting the disclaimer a little bit here also. Every slide they want to have us, because there are some court rulings or whatever. So we don't want to get into this. We often do trading with options. I myself like options for many years. That's how I passed my Series 7, because I was trading all these different strategy. It was easy for me to pass Series 7. Right. So basically options are risky. Certain strategy, especially new traders, please don't trade it. Otherwise, you're going to have a tough time. And please ask your broker how much margin they're giving you. And please stay away from naked calls, naked puts. That's not your game. It's institutional game. Everybody will teach you that way. You could, but you have to have a lot of money. I did. It took me 3.5 years from UBS to get approval back then. It was a pain waiver. So it's not that easy. You got to have a large account, and you're talking about a couple of $1 million account. Otherwise, they won't let you sell naked calls and naked puts. So please don't try. That's the best piece of advice I could give you. We are registered, right? We took some exemptions, so I don't have to go through it. We do not do any brokerage. We don't manage anybody's money. I did all of these things, but I want a peace in my life, because I'm old, right? And I have a lot of health issues. So I'm taking it easy, but I left the door open just in case I change my mind. Intellectual property, we are very big in there, with a lot of trademark, a lot of service mark. Everywhere you're going to see TM, SM, registered trademark, and we pay for it. And we want people to respect it. And we have inserted this AI related. We have communication with these companies. Please do not try to mix that. We can stop people, but they've been instructed not to mix anything to do with magic trader, because you're going to have a disaster. So this has anything to do with the traditional way of analyzing. But we can stop people, but then losses could be there. All right, so this goes with the last Trump administration about the copyrights and whatever. All right, so we're going to go quick here. Right, we used to have testimonials. They 2 times they made us take it out, so we don't even have anything to do with testimonials. Regulators don't want it. Scalp swing, this is the important thing I figured out. We teach people, so all drawdowns are very minimal, and my risk on a swing trading is paid initially by scalping until I'm ready to take substantial risk. So until then, I will do scalping. Or the same security, or I will scalp other security to pay for the risk I'm going to take it overnight. So that has been working pretty good. So we're going to go over here, bunch of ingredients. So when we started with Metastock, we talk about ingredients. Ingredients is just a specific risk cluster, but you're going to see in the near future, right? More or less, we use those which we're going to discuss, and we added more risk clusters, so your trading can be more successful. That doesn't mean this doesn't work. It works, but I want best out of the best. So eventually in the future, Jeff will come up with some news. That's the best I could tell you. nothing more. And in my first patented product, I came up with a turquoise bar and yellow. At that time was a turquoise bar and a golden bar, and those are the catalyst specific risk conditions, and there seems to be very much like working many years, at least more than 25 years. So pay attention to those things. Those are God given gift in my trading. If you learn that itself, you don't need to learn much. So pick up those spots where you want to have a fight with the market and win. So those are the low risk areas where you could enter or exit. So same thing with yellow bar. There is indigo bar. So that was the second set of the patterns. So those are the most important out of all what I'm going to talk about, because they are really great entries. And I will show you again so you don't forget that. So here, look. But the new trader always look at the bigger time frames. So here is that yellow bar I'm talking about. Those are my favorite one. And then you could see here, there are a bunch of different color of candles. So we're going to teach you all these things. This is that turquoise bar. That's a trend change. So they give you a heads up. So if you are short, you could go in there and short cover it. Right? So Magic Trader has a bunch of experts. One is a simple one. This happened to be, I was looking at for option trade. That's why we had this one on. So I took the advantage to show it to you guys. So you don't need to worry about going think or swim and make a project out of it. You want to buy calls, or you want to buy calendar diagonals, or you want to do butterfly. You already know where to take the position. That's half your battle. And probably Jeff, if he has a time, he could show you the magic zone levels. And those are the levels, dynamic levels, and they're forecasting. They are not Fibonacci. Right? I don't know whether we have time today or not, but practically you could use them to select the strike price of giving an idea to the existing customers. All right. So basically, this works in a multiple time frames. We're going to talk about it also, and you could apply those multiple time frame in a vertical in many different ways on a Magic Trader. So Magic Trader is for beginners, intermediate, and advanced trader. And this one, I'm an engineer, so I like to do some kind of communication with people. That's where the gear came from, right? So you go to beginners, to intermediate, and then advanced one. And these are the clusters. That's what it is working with, right? So basically, those are the risk clusters I'm trying to show. So some of the questions came in during such webinars. It can work in what time frame? It can work in any time frame. However, I like to have a multi-confirmation. So at least if you can see here, I had a weekly on a left-hand side and a daily on a right-hand side. Once I like them, then I will go to 60. Right? I try to stay away from tick charts because this is a billions of calculation it does. It will work on them. I don't need to do that because I am used to look at as an institution, bigger picture, right? We will look at the monthly chart, then weekly and daily, and then maybe entry at the 15 minutes or 60 minutes, right? In a forex, I had to go back to train myself with the 5 minutes because people are very sensitive when we did first product for forex traders. So basically, these are the time frame. Metastock has a good deal. You could buy it, open up tick chart, 1 minute chart, you do whatever you want. But I don't like to go too small time frame. Drives me crazy. But futures, I would, right? Because futures are very expensive. They move very fast. You could get damaged pretty quick. So my life started with S&P futures on a professional level. I got to put disclaimer all the time. So basically, multiple time frame is embedded in there. In fact, my first product was multiple time frame. A menu like this contains all time frame, and I could see which one lining up which. At one point, the dream will be when Metastack is not busy to combine both of them. Oh my God, I already have everything in place. It's just matter of convincing Jeff, I guess. Oh, that is a dream machine. But both are good, right? They work independently, but I already have put a lot of time to combine them. Sometimes I do use that. So it is based on multiple time frame, but you could use separately. But I always like to have multi-confirmation by mentally I was trained that way. But with magic, you don't have to. So my first product was based on cumulative desire to buy and sell security, right? In 2003, which we have patent, still we have the patent. And this was based on a risk, and this was based on institutional believeness, right? Two different concepts. When you really believe to pull the trigger, I wanted to know that. So, when as a rookie trader, you desire to go long, short, but you never pull the trigger kind of thing. But institutions don't pull around. They are serious about pulling trigger. So just when we released this one, I was working on Magic Trader. So basically, this is very powerful. So I don't need to worry about this price up and down. If the institution money isn't there, there is no win. And you have to learn how they're moving the market using their specialized flow techniques, right? That's what at one day we'll have that in a different. I'm already using it, but that's the real fun. So the gamma, this and that. Many years ago, we were talking about gamma. So now we gamma squeeze and all these retail guys picked it up. But we have the technology working for a long time, right? And those are very powerful tools. All right, you could read it whenever you get time, but structural market intelligence, right, is embedded in our design. So there are 11 proprietary structural indicators, right, to navigate the inside of the Magic Trader. And I do not use any traditional AI models. We don't. We don't have to. Because manifested AI, when you learn, it's not popular because nobody wants to talk about it. But that's very powerful things. I was in a position to do all gamma without any option data, and Jeff can testify that because I asked Jeff. He said it's too complicated. I said I still want it, and he said no, we can't. Okay, then I went back to engineering drawing board and figured all out. So forward-looking structural detection. So Magic design in a forward-looking, right? There is a regulation coming out. We can use prediction kind of wording going forward. So we already adapted. So we could tell that, forward-looking, which is okay. So basically, Magic Trader, a lot of things are there. I want you to understand how it's designed. So you get an idea. This is not your regular traditional indicator. I don't want to give you the list. We used to do that. Now let them be happy, right? We don't use them. We don't want to use them. Then a real-time structural adaptability. So Magic Trader, many different components adapts the actual market condition as it goes and as it develops, not kind of vertical. We'll have to look backward, right? It is adapting it and adjusting it, right? And it's very useful while you're putting a lot of money and multi-time synchronization, and it's a liquidity sensitive recalibration. It does happen automatically. You don't need to do nothing. And a cross asset structural awareness. So I could see 15 minutes in a weekly or weekly in a 15 minutes, and we break that also into technological breakthrough. I could do either way. So that is very useful, especially for institution. So this product was designed based on my institutional exposure, being there, putting my own money to risk with them in a partnership. So I have to be right. Let me put it this way. We were mandatorily required to take $5 million going on a long side and $5 million on a short side every day before market closes. So that's the minimum. That can tell you the story. You are under a lot of pressure. If you make a mistake, you pay for it. Strategic risk compression converts combination of the risk complexity into structured catalyst output, reduce noises, enhances signal density. So that means certain spot, the risk is low, we're going to show you, and that's what the density comes from, and institutional grade structure filtering. So as I said to you, I hardly talk about retail stuff. In fact, I came from retail. What's wrong with you, Peter? But that's my past life. Now I'm living this institutional life. So, when you get your license and you get your prop trading, so that's the noise you're listening. That was 20 plus years ago I did prop trading. Then I went on institutional side and especially on hedging side. I had a partnership with, at that time, United States, one of the best and most reputable hedging company. And it was purchased by publicly traded company later on. So I went there and made a partnership with them. All right, so Magic Trade is a structured risk cluster engine. Magic risk cluster identify liquidity pressure concentrates. Magic Trader risk clusters reveal where market risk converges. This is very important. Some of you may not understand this. You don't need to worry about it. That's why we are here for. But this is the way institution really talks. So if you want to be institutional kind of trader and try to learn what institution does, you got to go to the school for that. Bullish magic clusters are upside risk concentration, liquidity accumulation, acceleration, and bearish is the opposite. Structural function, multi-layer structural risk alignment. This is the most important. And my first product was also multi-time frame alignment. When multi-time frame telling you we're going long, we're going long. We're not going opposite. There is always a counter cycle, and you need to learn to take the profit in a counter cycle or take advantage of that. So on institution, we wish there is a counter cycle. So people gives up and we buy from them. Or if it goes down on a counter cycle, we got a bear flag. So we keep shorting. I love that one. We got money, right? And from the old school, some of the people start picking up. So they will tell us, buy 50 cliff. So you have to buy 50,000. One clip is 50,000 shares, and our team will put 50 such clips either on a short side or a buy side and move the market. And 10 institution does that. It makes the change in a trend, temporary or permanent. It is a different game. And I witnessed, and I could not believe how they do things. It's unreal. You have to learn that. Structure compression before expansion and convert complexity into actionable catalyst. So we're going to go a little faster now. So this is the last one, catalyst I'm talking about. You could read it later. In short, this yellow color is warning sign we're going long. This is we're going short, or at least do not go long. You start putting stops, it's going to go down. All right. And this is one thing you learn out of Magic Trader. You will be very happy, and you could scan all these things. So you don't have to worry about it. So this is, we're not going to go into this. I took one of the available on a Google, the calculator for permutation and combination. This comes with the Magic Trader Elite, right? And there is one of the expert, and which includes, right, options and everything. So there are 112 symbols on our option side, and there are 11 factors, which is highlights. We call highlights. So if you do the combination of both, permutations are 20.9 quintillion. That many risk combinations are there, right? Permutations are there, and combinations are 524 trillion. It looks impossible. Math don't lie. You take these two numbers, put it in, and you will know. So all these symbols, permutation and combination results that. And this one you could count on expert, right? And let me show you where it is. So we don't have to go too far. So these are those highlights. When you get the software, you could calculate, and these are those 112 symbols. So you talk about when you adding this symbol with this one highlight, right? And you could have this many permutations and combinations. It is mind-boggling, but you don't have to learn every single thing. I'm just trying to tell you. In fact, at any given time, we don't have problem finding the trade. I don't want to. I want to be conservative. You're looking for 500 trades in a day, you could find 500 opportunities. You want 1,000, you could find 1,000. Have a bunch of magic trader on different computers, you will get it that much deep. Strategic impact, manual processing, impractical, traditional screen insufficient, magic trader engine, structure, reduction of complexity. So we figured out which one is the best out of all of this. We don't need to worry about all, because at one point it will rise by itself. If it's not available, it will go to the next and the next. So we also have a sequentization in there. So those sequences are time tested for years. So this is how it looks like, different colors. So we call it a price perceptor. So this is the breakthrough. I got it because on an institution side, right, we see the order flow coming from Goldman, UBS, and Citibank, and Merrill Lynch. So and their behavior is different. So I said, wow, we normally on a technical analysis buy and sell, but buy has a different separation. And I figured out how to separate them. And you could see here why is different color. They are all buy because different institution comes to buy that. This is a different institution. And when you in the near future, hopefully, I have everything working, right? Because I have 19 different experts, right? So the layer technology on a liquidity side, liquidity band, liquidity bucket, all different things. Then it's a gamma, all the stages, and the final is a stealth technology, right? They sneak, right? We were told, why don't talk to anybody. So I also have them tracked down. So when they sneakily do things, right? You think if prices are going down, they're buying. What the hell is that? Where was that exit pinpoint? That's on a stealth technology. So all these things are available into the Magic Trader. Thanks to Metastock after 18, my life changed because now I could show them on a chart, right? So now one of these days we'll probably show you. Those are very powerful. You don't know this is that stealth where they're putting $10 million, $50 million. So those are, it's not only that, they will tell you here, and you see the results here. You think it's selling, but it's not selling. That's why this thing happened. So that stealth technology is very important. So I was there, I was one of them. So I know exactly when they're doing what. So we figured out to put it into action. So these are those highlights, different color candles. So these are all different color candles, right? So Magic Trader has all. So the reason why they are there, because technically they do exist, but nobody had an idea how to do these things. And we got the patents on these things. So this was my breakthrough, right? And in examination, they break your whatever, right? They could not believe. So they don't issue the patent so easy. They really put you through hard time. All right, so these are some things which you already saw that these are the symbols on option side. And now the manifested AI, right? So this symbol shows up 3 and 3, right? That's what you have to know now. So when it comes in, it's telling you it's going to make a future high. This is what, when you put the arrow here, it's going to make a future high. We cannot guarantee anything. So the regulators in New York City, right, 2 years, they went through every piece of magic terror, right? And this language came from the examiner. So this is their, like, we cannot say approved language. We cannot use that word. So this is what we agreed with earlier highs. So in earlier stage, right, it's telling that in nice way, we're going higher, and the risk is on a scale of 1 to 6, 3.3, which is reasonable, and that's why the movement happened. And this is a tier 1 institution. This color is Goldman Sachs, Merrill Lynch, Citibank. They are all part of that. Then this color develops. They are there. They're putting their money. They're saying it. And type B, like UBS comes in, some hedge fund comes in, things like that. So this is a storytelling. Every candle is not complicated. It's the same damn color. So what is so complicated? 3-3, you have to learn once. The 3-3, we're going high. That's what it's telling. If they're telling, we're going. A is the tier 1. So our friends are buying. So we're buying with them, even though it's going down. People in a regular trading, I was one of them too. So don't worry about it. Oh, it's going down. Let's get out. No, we're buying more because he's telling me we're going higher. This is how I trade. And this is their liquidity comes with truckload of money kind of. That's why this candle is high, right? And regular one will tell, oh, it's a breakout. No, they're putting their money into, that's where I want to be. So I will be taking position here. And then it converted there. So this is as simple as gets it. You just have to learn once, right? What that A1 means is advanced price perceptor. So this institution putting more money at that time. That's why candle is so fat. And it was telling before that we're going to the moon, and it did. That's how it works. So what we did, you're going to see direction line with this symbol. We're going to go a little faster because we're going to run out of the time. So we look for it. So this is that direction line on upper part of the magic trader, which is right here. You do not need to get tension. So this is where you see green, right? It says here direction lines. So they're telling you we're going to go long. You got to believe it. And we did that. This is what happened. And this is the entry. It can come earlier. This direction can come earlier. It's not in my hand. When they believe it, then it shows up. So here it is spike. And this is not Metastock regular spike symbol. This is also manifested AI. So we crack the code. So make believe it comes in. So you get heads up in a scanning as well as, so we enter into, we call anchoring. So when it anchors, that means it is steady. Right? That's the time you see the catalyst. So we're going to go to the moon, but there is a bull there. And you could buy call option. And it has the intensity +1, sometimes +2, +3. So +2 is more stronger. So you don't need to worry about how that came from. You worry about the yellow bar and a bull. So we're going long and we're buying call option. And we don't have much time, but let me see if I could show you very quickly. Magic zone line somewhere is here. This is what I need Metastock help to punch in some first letters and it shows up. This one, I get frustrated, to be honest with you. I don't have patience. While you're trading, I want to just trade. Come on, where did it go? I missed it probably. But it is somewhere here. So you plot it here and it will a bunch of lines comes up and you don't need to worry about Fibonacci or anything. It will tell you, right, one level here, one level there. Probably Jeff can show later. All right, so we could save some time. All right, so basically is there. It's a universal magic zone lines and they are not Fibonacci's. They are adaptive forecasting and flexible. So they adapt the market changes. All right, so this is the first one. So direction, you want to know where it's going, long or short. It's going to go long in this case. So second one is a bunch of lines. So let's see in here, right? So where is it on the chart? Right here. So a bunch of lines, right? So there's a purple line, there's a blue line, right? And there's a dotted line. So this is that dotted line. So these two lines are parallel, and this has a value of 4, right? And this has a value of 2, right? And this has a value of 0. So that means 4, 1, and 0. That's what you remember. So when you put your arrow here, if it says 4, you will know it is 4. You just look at here or here. It's a 4. So that means we're going long. That's it. So this is the internal health. So it's pretty good. So we are happy. So we are going long. Third is that entry spike. We show it on a chart. I'm going to show you an example here. So that's that entry spike. So once you see that, and here, so this candle will be going long. Then this showed up, right? This is institution type A or tier 1 institution. And this, as we talked about it, is showing that earlier high. So we're going to go long. Look at what happened. So basically, you could do intra candle. So here it says we're going to go higher. Did it went? Yeah, it did went from open to the high. So that's how it works. And this is the advanced price perceptor. They came up with the money. It was going sideways. They tried to test this high, right? Sometimes I talk technical because I came from there. We don't need to. Most of the trader comes to us are technical traders. Then we change them to institutional traders. So now this is a little bit thick line. So overall health of the security, that's what it calculates. So this is that line, number 4. So when it's green, so here is a profit taking, retracement, retracement, profit taking, retracement. So as long as it shows vertical, we're good to go. So we could go long. So initially, when we were talking about the 5 ingredients, in the future, we're going to be talking about cluster, which are a little bit more concentrated or more odds are in your favor. That's what. So I'm giving you even these 5 ingredients plus more risk clusters in the direction you want to go. So horizontal time risk, this is also a breakthrough. This is not Metastock regular every add-on. This is based on a time risk. So every risk going bullish, bearish, or neutral based on a time sensitivity. And this has a lot to do with the option because option has a time sensitivity, right? So time decay. So that's where I was in position to separate them out and track them down. This ribbon, we call ribbon because I came from Metastock users in 90s, right? And but these are not the same one which you have it in different product. So these are those ribbons, right? Based on a horizontal time risk. Green is to go long. This is neutral. This is green. Then when we put things together, it's the same thing we talked about it. They all matching is the better. Even if you don't match it, few matches, you could have a trade. So it is not hard and fast. You have to have 5 of them matching. It doesn't work that way. In reality, we are traders. We look for small or big or good opportunity. So as long as suppose this is all horizontal and I have a either direction line or entry, I will go long. Then worry about everything, right? If I have this one and this one, I will go long. That's how I trade. So you can't, and you could scan every component. So same thing we're going to talk about to balance it out on a direction on a short side or going or put options. All right. I don't want to use too much shorts because you know that's how industry wants us to talk about it. But I short it as an institutional trader. Retail traders should not do those things which are very dangerous. Your margin will require a lot. If it goes against you and a short squeeze, you will wipe out your account. So we don't want to encourage you or put a stops right above it. All right, so this is that direction line. So this is where it shows up on a chart, on a health window. So we're going down. And again, these are the things under 0 on the negative side. So this is the -1 blue line and -4 is the purple line. As long as you have that, I think I cannot tell you safe, but you are less exposed to the risk. So you could here look at this horizontal, right? So if you want to stay short or you stay in a put side, these two lines, this thing happens, take the damn profit or do something or put a tight stop, right? But you could see here, right? It's a direction line is good, another direction line is there. You could trade between one direction line to another one. Same thing with a spike. So find those opportunity. And you could see here, security, health is deteriorating, right? And here it started getting better, right? And it will go higher. That's how I trade. Simple way. Let me tell you honestly, I don't care how much technical indicator you put it in. If you cannot make decision in less than a quarter minute just looking at, you need a lot of practice in flipping the charts. In your mind has to be trained to finish analytical work in less than quarter minute. And you should be flipping 500 charts minimum per day. If you do that, you will have different, I cannot guarantee, but better successful results. And Magic Trader is designed to do that because you don't need much time. So you practice that and you good to go. So here the entry spike and results are obvious. So this is tier 1 and tier 2 is here and then trend change. So these were invented back in 2003. And we did a bit more enhancement in a filing with the pattern on a Magic Trader, right? So basically, it is like we don't need much project making. So this color can go either way, dangerous, but they are there, right? This is the warning sign. So if they are there, to wait for getting this symbol, which is kind of, you know, brown color candles. And these are the advanced price perceptor because this is elite, right, option version. So those advanced means institutions are heavily loading up. So they are the one who causing this drop. This could be bunch of money, stock like Tesla. So you could scan this color of the candle and advanced price perceptors. So this is the pure health. I love it because as long as it's there, I stay in a trade. In this case, will be bearish. So these lines are powerful. Here I will be taking profits. And if I miss this one, I wait for this one and go back. And again, suppose it's choppy. This is choppiness. Then I got to deal with it. This is choppy. And then they're selling off at the end. Right? They do that. So because of the risk transition, because that's one of the lack in the industry, people have not perfected segmented risk transition. So eventually we will, even any product, we will have that. So that will help you to stay out of over trading and risk transition. We call it here choppy market, but what is happening at that time? Going long or short? So you practically, if you are a scalper, you could use risk transition, right, colors into that to eventually be prepared mentally. It's coming. I don't want to say much, but it's coming. If Jeff doesn't want to kill me, then I could show you. All right, let me be a nice guy. All right, I have all these things. Let me show you. Jeff is going to kill me. This is that risk transition I'm talking about. They are very powerful stuff. Look at that. Look at that. These are risk transitions. So we have technology as much as you want. My lawyer used to tell me the amount of inventions I did that you need money like a Bill Gates in order to file all patents and trademarks. So everywhere you're going to see service mark, trademark, or whatever. And We are self-financed company. We do not entertain any investors in last 25 years. I left multi-million-dollar construction business to do these things. I love it. Jeff will tell you 18 hours. I'm passionate. I don't know. It's weekend, what I'm doing. I keep inventing new stuff. So it becomes easier for me to trade. So Jeff has to pump up the DLL guys to do, before something happens, he has everything. Then you got to deal with Jeff and Kelly. It is true. I made that decision. They were the one who hold my hands. But I'm not a programmer. I'm a freaking rookie programmer. And I argue with everybody because that's part of, you have to have a dialogue, right? But at the end of the day, Metastock is one of the company I could trust in the world. I know most of the people out there. Metastock may not be the one of your kind or one of your taste, or may not be perfect. So what? Your wife is not perfect and you are not perfect. You're still married. I'm married 40 plus years. We got to make it work. So again, I put it all together, right? How it should look like. So we don't need to spend 2 hours explaining that. All these things, what you see is there. So any of the combination is good. At least I like one or two. And the new things, right? We will have things done for you. But don't bother Jeff, okay? I'm not supposed to even show you, but I am a developer. I'm a trader. I use for my own time savings. And I will pass it on as long as DLL guys wake up from vacation, right? But it is very helpful. Save you time. So it's coming, but that doesn't mean, right, it's going to happen overnight. But I love this version because all the options and institution price perceptors and advanced price perceptor. I miss those when I trade the other ones. So everything has a merits. So what we're going to show you, where to find this every component. So these are those 5 components on a Paris wool side. And if they do come, then you could mix match 1, 2, 3, 4, 5, or you could pick up 2, whatever you want. Flexibility is there, but you got to scan it, right? 5,000. But trust me, do not do that 5,000 every day. Otherwise, new LSEG rules, you will have to wait for 24 hours. So what I do, I will pick up one criteria. Like if I'm not a volume trader, to be honest with you. I go with the flow, institutional flow, right? Different parameters. So in your case, if you like volume, so do the volume, which is more than million in a day. That's good enough to get rid of all the junk. So you have 500 left out of 5,000, or maybe 2,000 left. So you do not have to scan all of them. So before you attempt to do this thing, do not do 5,000. As a developer, I had to show you that I could do 5,000, but it takes so much time. I don't have time for it. So I have selected, right, bunch of security, right? Let me show you. This, some of the feature. I have a lot of partitions. You could see here, right? Different, look at that here. Different kind of 587. So I'll pick up this one. Today I was working on this one, 455, right? So all these results I want to run half because I'm doing something, right? So 500 stocks. Oh, I made the list before, right? So you could make bunch of lists on Metastock and do whatever you want to do it. And I don't have to do 5,000. So this is very important. Don't go crazy. Otherwise, you got to wait 24 hours for Mother LSEG to give you blessing again. So these are some examples. So we're going to go quick. So this is the direction line. This is those 2 parallel lines, right? This is third is the spike, and fourth is the pure health and the ribbon. And you see this thing, good to go, pull a damn trigger. Same thing here on a 60 minute. So you just have to recognize. So practice those, where to find them. Number 1, 2, 3, 4. And if they are there, go. So here they were there, so we go. Yellow bar is my favorite. Go. Then it goes horizontal. Don't worry about it. If first come to us, you get out. Right? It, it first of all, it was a gap up, right? So you got to understand that you entering somewhere here. So you miss the boat. That's not your fault. That's the way market works. Pre-market, I don't like to trade because anybody who's coming from institution, unless you are a dark pool, they will do pre-market and aftermarket, right? But if you don't have knowledge and tools, don't do pre-market. There are a lot of people promoting it, but you could get more hurt, right? So I need to do trading 24/7. It's not worth it. Do something. Do futures, not stocks. Futures you could do. So same thing because we are regulators, so we got to show you their side also. Same thing. 5 ingredients, they are all here, and the manual says everything. So you pick up whatever you want. If they match all, it's better. So give you more example. This all is designed based on regulators because we are regulated for a long time. So they want to have a bunch of examples, this, that. If it's not time, then sometimes it's difficult. But we try to. So here, same thing. 1, right? Where is 2? This is 2. This is 3. So this is 2. Right? So parallel lines. Then 4 and 5. So we good to go. So that's how it becomes simple. So a little bit about my daughter. I won't talk much about myself because I'm done. I'm on my tail end of my lifetime, right? So my daughter is very instrumental in my success. Since she was 9 years old kid, I started training. I used to drag her into Smith Party Theater so she could get exposed what Jamie Dimon is talking or what Sandy Weill's daughter is talking. They were doing homework. But my wife had a multiple daughter birth, right? So she can handle also. I will take 1 or 2 with me so she get a break. And then I will give them bright. You don't say anything or no laughing, no chit chatting, no whispering. I'll give you McDonald's Happy Meal. So they discipline. But they were listening all these things when they were babies, when they were discussing buying Aetna PNC division. They were talking about all this property and casualties. And so my daughter said, "What is that, Daddy?" I said, "We driving the car. So that insurance falls under." So she embedded all these things into her brain and the little one too. Right. So at the age of 8, 9, they are exposed to the one of the best company in the world at that time. Travelers, right? Smith Barney, right? All these people, you will never even have an opportunity to meet them. Maybe you do, but my kids were in a position to grow up into that environment. And every business, I had multiple businesses, do this, do that, and I bribe them. So they learn, right? So they were not involved much into outside world, learning wrong things. That's what the whole idea, right? And look at she put so much effort behind my success, right? We have employees and we have everybody, but at the end of the day, whom you could trust, this girl becomes so smart. So she works for publicly traded companies. How she become like older, right? And got married, has one son, and now she moved out. But she helps me whenever I want it. This girl plays still a role in our organization. Because at the end of the day, Jeff has to deal with her or she has to deal with Jeff and Kelly. And they like her more than they do like me. But she don't argue. She's easygoing, like mother. So this is me, right? I came in 84, right? And I wanted to work for myself. My father-in-law said I'm crazy. I refused government job because I don't want to work for anybody. So within 1 year, I opened up my own company, consulting company, because I came with $20. So how far you could go? So I started saving people's money. That's why the name of the company is a Save Dollar Enterprises. Saving people's money. That's how I have nothing to do with Trump. But that's how I wound up doing his Plaza Hotel in 1987, presidential suite, because he was looking for somebody who can do a tough job. And I was fortunate. an architect, and we're still doing business with his company in New York City, but we don't socialize. He pays us good, he gives us bonus, we finish the job before time, and he loves that. Right? If you don't do it, you get punished. That's what you heard. You heard only punishment. But this is first-hand information because I lived that life doing his jobs. He demands, right? We don't socialize, but we finish the job, we get paid and bonus. And we make fast money with him. That's my whole thing, fast. All right, so again, this concept is believeness concept. So it's different and it's institutional belief plus retail trader mixed with that. This is those lines. The green line took me 6 months to damn program it. And each time frame, 60-minute weekly, and everybody has different of magic lines. They are the line in the sand. I wanted to always know when institution believes on upper side they're going long, on a downside they're going short. That's what I wanted to know. And how to design that line. Took me damn 6 months. And I was stuck and I would ask Jeff for help. And I jumped to the bed at 8 o'clock Monday night in Metro at that time. And formula will not work for 6 damn months. And I jumped on my bed. And my wife said, "What's wrong?" I said, "I'll be right back." I went there and I realized I forgot to put this one particular symbol there. And I put it in and it worked on a euro. I said, "Whoa, first time." At that time, red line wasn't there. So I said, "Wow." So when we can take the profit or mean risk reversion area. So that's what it was designed that. So this has nothing to do with your traditional looking time lines, okay? And otherwise it won't be different for each time frame has a different magic line. And we have list of those combos. So that itself should tell you they are not your regular lines. And they are adaptive, they're forecasting at the same time too. The traditional lines cannot do that. We used to openly tell the names of this line, but I got to keep Metastock happy there. I agreed with them not to do it. All right, Jeff, it's all yours.
Thank you very much, Peter. I do want to spend just a few minutes. And
Yes.
let me go ahead and, can you hear me?
Yeah, I could hear you.
Okay, good. I was wondering for a second there. Let me go ahead and open up my screen here, share my monitor, and just kind of talk a little bit about Magic Trader for a second. Peter, I want to thank you for coming in and spending some time with us. Let me just talk. I think what you were looking for here is the dynamic zone lines. Correct me if I'm wrong.
Yeah, dynamic zone line, yeah.
Yeah. And if you plot those on a chart, they're just going to
right there, yeah.
draw those there for you. So there you go. I showed that for
but
you.
You did it very quick, better than me.
It's almost like I wasn't talking and could look at and find what I wanted.
Jeff, you could tell them, look, they are not Fibonacci. They're flexible. You see that? And they're forecasting the future levels.
Yeah. All right. Let me talk a little bit about Magic Trader. Peter does a really good job of showing how the scans work and all that kind of stuff. I wanted to show you, since he's already talked about my favorite feature of Metastock, the scanner, I wanted to show you the Expert Advisor real quick here. So let me go ahead and open up. I've got the Expert attached. It's going to label like your yellow bar here. It's going to do all the color coding and that kind of stuff for you. I think Peter did an exceptional job in putting together the commentary. And so I wanted to show that to you. I'm going to go ahead and click on View, Expert Commentary. And as you know, when we open up the commentary, it's going to open up in a bit of a window. I might have too much data loaded in here because it's really thinking about it. Let's give it a second to think about it. But one of the things I really like, and it actually now open, is the clarity in which Peter put together the analysis that he does. So over here, the reason it takes a little bit of time to load is just all of the stuff that it's looking at, all the calculations it's doing over the hood and that kind of stuff. So if we're looking at this indigo bar right here, what you're going to be able to see is if you come into the commentary, it's going to help you understand what's going on. So in terms of the 5 ingredients that Peter's been talking about, you've got your magic direction line, which is bearish. You've got a neutral health indicator, a spectrum spike that is bearish. You're bullish with your pure health, and you're neutral with your horizontal time risk. And as we go down here, I'm not going to read through all of this just because we're a little bit running out of time. But also, I'm not very good at reading out loud. But it's going to break down the new direction line. It's going to give you all of the components and break everything down. It just does a really good job of giving you that dashboard view. What do I need to know? Tell it to me. Give it to me straight. So just love the way that that's put together. I think Peter understood the assignment when it came to writing and putting together the commentary. And I think he did a fantastic job with it. Everything's very, very visual. You can very easily see whether something is bullish or bearish. You can see your yellow bar here, your trends. All of that stuff is all very well put together. Scanning is great. Peter showed how to go in and run the scan. So what I want to do now is actually I'm going to go in and talk about a little bit about the services Peter offers. So one of the things that he does on a very routine basis is he does his alert room. His alert room has members that are very, very loyal and absolutely love to go to the room. They talk about all kinds of topics. Here's a list of some of the topics that they discuss in the education room. And you can see it's very, very extensive. They spend a lot of time talking about different technical methodologies. I want to point out, Peter's been doing the Magic Trader stuff for 20 years now. And he's very, very thorough in terms of the stuff that he does. So here's some more market-related topics that you get in, as part of his educational room. When we come in here, you've got your options-related discussions and your AI-related discussions. Just tons and tons of stuff that's put together here. AI-related MT symbols and indicator topics. Again, this is all part of the educational room. And I believe this is too. So it just keeps going. The room that people, there's a reason that people really, really like the room and that they stay subscribed to it just month after month after month after month. So in addition to that, Peter does quite a number of reports via Telegram. Here's a snapshot of that. And he has a Facebook group. The Telegram report I get as part of, well, actually, I'm not sure that's what I'm getting, but I do have a look at all of his reports that I get through my WhatsApp service. But all of this stuff is included as part of what he does. Let's talk a little bit more about the actual add-on for Metastock. The Magic Trader Elite is a massive platform. It's got 58 indicators in it, 47 different market explorations, 2 expert advisors, 35 templates, and you can kind of go down the list. It's huge. When I went to learn about the Magic Trader myself, I actually reviewed the manual. It's about 127 pages. It's very, very well put together and kind of explains everything for you. Because at the time when we were putting it together, Peter hadn't really done a lot of training on it, but I was able to learn everything I needed out of the manual. Let's go ahead and the Magic Trader Elite service and the Magic Trader Elite software is $199 per month. Normally it's a retail price. One of the things that we did shortly after the release is Peter recorded with me a fundamentals of Magic Trader. And it's about 20 hours of recording. It covers all of the fundamentals, the Magic Trader, the dimensions of risk, the different trading modules. You've got them all listed up here. It talks about the 5 ingredients, how to use them. I remember going through the training and it was very, very extensive. We did it all live, we recorded it, and it's available for you as soon as you subscribe. This is normally a retail cost of $9.99, and we'll talk about the special that we're going to do today. So here's the Telegram group. This is what he talks about. It's part of his Telegram. One of the things I really respect about Peter is how much he works. He's a very, very hard worker. Let's say it that way. So what we're going to offer today is a package that will help you get started. It's going to include 3 months of that educational alert room. Normally the cost of that would be $897. It's $299 a month, so that's $897 for 3 months. In addition to that, we're going to give you 3 months of the Magic Trader service. That Magic Trader add-on is $199 a month. For 3 months, we're going to give it to you. Normally, that would be a $597 value. We're going to throw in, we want to make sure that it's working well for you, so we're going to throw in the training as part of the package. That fundamental Magic Trader is normally $999. You also get the Telegram channel, which is normally an $897 value as well. So For all of that, if you added up the total value of that, it'd be $3,390. What we're going to do as part of our discounted price for this week only is we're going to offer all of that to you for $997. So to take advantage of that, we have to put all kinds of different specials on it. We need to have you contact us so we can get you set up. You can give us a call at 800-882-3040. You can go to metastock.com/saleschat and we can help get all of that running for you. So if you do this with the offer, not only are you going to get the fundamentals of Magic Trader, we're also going to give you a boot camp that we created as part of it as well. That's a $400 value and complete access to the Magic Trader educational portal. But you have to do it now. Give us a call, 800-882-3040 or metastock.com/saleschat. So really appreciate Peter for all the work he's put into this over the years. He's done a great job. We really appreciate the partnership and the work that he does. So
Thank you very much, Jeff. I
Yes.
appreciate you and Kelly and your staff. And thank you for coming, everybody. And hopefully we could do business together. Thank you.
Thanks for coming, Peter. Really appreciate you.
Bye-bye.
Okay, I'm going to put this self-chat on here, and then I also put the phone number here as well. And one of the things that's really, not really that surprising, but just the people that are part of that alert room just keep subscribing to it over and over and over again. They love it. Once we get you started on the Magic Trader, I'm sure you're going to keep it. So as we move on, I want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. They've been a great supporter of the Metastock products and the conferences and the events that we've been doing for decades. You can find out more about them at www.traders.com. And all of the offers that we have, including the Metastock promos, you can get at metastock.com/conf promo. To do this Magic Trader, though, you'll want to call in 800-882-3040 or metastock.com/saleschat. Looks like we do have one question. I'm going to go ahead and look at that. Elizabeth said, great, thanks. Okay, you're welcome. I'm glad you liked it. Okay, and then let me just check YouTube, make sure we are all caught up. I've been trying to make sure we get all of the questions. If I can find YouTube. Okay, we are completely caught up. So let's go ahead and get over here. I want to introduce our final speaker today, Mark Leibovit. Mark's a great friend of Metastock. One of the things that I really like about Mark is back a few years ago, they did a Timer Digest competition. And I think Timer Digest is still around. I'm not sure a lot of people are participating in it. But as part of the Timer Digest, what you would do is you would send in your trades. And Timer Digest would keep track of your trades, and they would rank the people that were giving trade recommendations out. And Mark Leibovit, our next speaker, has won that award many, many, many times. In 2019, he was the Timer Digest Timer of the Year. I think he was also mentioned the top gold market timer of the decade at one point. But Mark has been Mark is a great technician, and he's going to talk to us about volume analysis today. Mark, are you with us? This Mark Leibovit is coming at 4. He is in the room. Let me go ahead. Mark, can you hear us? Well, we're having two audio issues in a row. Give me just a second here. I think his mic is on.
You hear me now?
I can, yeah.
Okay.
And I can see your camera, but it's not really broadcasting. So, but I can hear you, so that's a positive move.
Hold on. I don't know why the camera's not broad. It's on.
Yeah, I can see that. But I'm not too worried. I'm not as worried about that. I'm glad we can hear you now.
Okay.
Let me go ahead and turn.
I know what happened to the camera here, Jeff. I mean, it shows that it's on my screen, so whatever.
I'm just getting a slash through it. Like I'm getting a fact. It looks like you're broadcasting, but it's just not sending anything through to us. So I'm not too worried about it though, Mark. If I did send a screen share to you, so I should have asked you if you wanted to share your screen.
I see you, Jeff. Let's see. I see the camera on the left.
Mm-hmm.
Camera's turn on camera.
Okay. Now, what you're going to see, I'm going to go ahead and make you the presenter. It should ask you if you want to share your screen.
Okay. It says share. It says cancel and share. Invitation. Select here to share. Select tab. Invitation.
And you can do either a tab or an entire screen.
Share. You got me now?
Yeah, I got your email though.
Okay, that's email. And there's the PowerPoint.
Okay, no, I'm just still seeing your email address or your email. I'm seeing an email from me though to you.
Right, that was the instructions to come on board.
Yeah. So I think what I'm gonna do.
Let's share the screen. Hold on, let's get rid of that.
Yeah, hit share the entire screen.
Share. Select tab to share. Entire screen.
All right, now I'm seeing me a bunch of times. Hey, me.
I see you. I see you.
All right.
Where's the PowerPoint? You don't see the PowerPoint?
I do now. Yep.
Okay.
So now, if you just go slideshow full screen, it'll get rid of me enough.
There we go.
Right. Okay. First try. I can see it. I can hear you. I'm gonna go ahead and let you talk. Take us away.
Okay. So you don't see me though. You just see the PowerPoint, correct?
That's correct. I see the PowerPoint and I can hear you.
I don't know what happened to my picture. Anyway, let's see what's going on here with the PowerPoint. Okay. My up and down arrows don't seem to be responding.
It is advancing from side to side for me, Mark.
Yeah. Okay, let's go up here and see why I'm going the wrong way here with the PowerPoints. Page up. Okay, we're getting into charts now, and we're not supposed to be there, Jeff. So I don't know what's going on. Hold on, I'm going to go back to the PowerPoint. I apologize.
Oh,
at least I'm the last of the day, right?
Hey, yeah, you're doing great. We're overdue for technical problems. I should have warned you. All right, I can see the very first slide. I think.
That went up, and then for some reason it says from beginning. And then when I go hit the key. All right, so anyway, folks, what you're looking at here is all my newsletters at vrtrader.com. So here's a promo code, and sorry to make a commercial of it, but that's the first slide. So anyway, I produce vrtrader.com, and we'll try to get through this. I don't know why the PowerPoint's not responding the way I like. So this half off for any of my newsletters. Been doing this since 1979, so it's about 45 years. So when Jeff says we've known each other a while, that's an understatement. So it's been a long time, but we do various sectors. We follow cannabis, crypto, blockchain, market timing. Our main letter, platinum. We have our metals letter, and there is a half off offer, 50% off if you go to the website using that promo code. So let's see. We get down to the next page. Originally started back in '79 as a volume reversal survey. That's my technical tool. We're going to be talking about that with the Metastock add-on indicator in just a moment if we get to that point. If you remember, the old timers remember me. This is going way back into the 1980s, 1990s. I used to be an elf with Louis Rukeyser on his PBS program. and that helped to launch my career. Weekly, I do a podcast, howstreet.com. In fact, we're going to be recording one just after this broadcast at Metastock today, and will be posted on our website tonight. And Jeff was kind enough to mention my Timer Digest. They no longer publish, Jeff, so unfortunately we can't get any future ratings. They were doing it for decades, and they stopped doing it. If you want to learn more about my technical work, I have a book we published in 2011 called The Trader's Book of Volume. It's about 450 pages covering all the volume indicators that I know about, and of course I emphasized to a great deal my volume reversal VR indicator in that book. So you can buy it on Amazon, and we are working on another book, have been for a year or two, and we'll keep you posted on that, where we're going to go into a lot more details in my technical analysis of volume and charts. It's available now in Chinese as well, by the way, as you can see on the screen. So we all look at a lot of indicators. I'm just going to go over a few. I do a lot of esoteric stuff, a lot of off-the-wall stuff, and of those of you who follow me know about that. Jeff, do you hear me? Everything okay? Yep.
Yeah, I can hear you. Is
Okay.
my mic on? My
Yeah.
mic's still on. I'll turn it off. Sorry.
No, I just was wondering if I made a mistake. Thank you very much. Okay. So anyway, how people follow the Fear and Greed Index. This is put out by CNN, and I use it in a direction that it's moving. So if it's heading down, that tells me there's more selling coming, and the contrary view, well, it's down, you should be a buyer. But my interpretation of that Fear and Greed Index in the market is if it's moving up, the market's moving up, and stay with it. The more greedy it gets, the higher it goes. And if it starts turning down, doesn't mean it's a buy yet. It just follow the trend down until it finally turns. So I just think it's something you can follow, and it's still in an uptrend. So despite the fact the market's way overbought and they're running AI stocks, it hasn't turned down yet. Every year I do my annual forecast models. I've been doing it since 1987. These are just some examples. This is a separate product you can buy at vrtrader.com. It's also offered now at 50% off. You're looking at my forecast for the Dow in 2024 on the top side of the screen. The bars were the forecast, and the yellow line was what actually happened. This is based on my cyclical work. In addition to the volume work, the bottom chart was the forecast for last year, 2025. You could see the actual indicator results in the yellow line versus what had happened. This is like the old weatherman story. You make a forecast for the year, but you always look at your, as a weatherman would do, look out the window just before he goes on the air, just to make sure the big picture stuff is working. So that's my advice here, but it's a great overall tool, and we've been very successful with it. This is the forecast for this year, and I charge my annual forecast fee for it, but because Jeff's kind enough to have me on the program, we throw this in as a little bit of a bonus. But this is for crude oil and not for the Dow, and I just want to get you a picture of what this is showing, that a lot of volatility here. But basically, the picture still says an uptrend for the year. And I know there's a lot of stuff going on with Iran and peace talks and everything, but this says that for the year, it's still going to be higher, not necessarily to the explosive side that you're seeing, but the model just says you see some volatility, some dips, as you can see along the way, but it still says the trend's up. So that's the play there. This is my forecast for Bitcoin back in 2024 and 2025. I know a lot of traders follow the cryptos. In fact, we have our blockchain letter, and still excited about it, but extremely volatile. What's happening in Congress with regard to the Clarity Act and so forth is very important. And I think the big picture says government's involved in crypto, and you have to be paying a lot of attention to it. But meanwhile, this is on the screen, just a forecast for Bitcoin itself, which is sort of separate from the other cryptos that the Clarity Act is talking about. And that still has to get passed by the Senate, though it's apparently reached the next stage for a possible vote coming up. The Bitcoin forecast on the top is for 2024, the actual versus the results, which is the yellow line. And last year, this was the forecast for Bitcoin at the beginning of the year, and then what actually happened during the year. And this is my forecast this year for Bitcoin. Showed initial strength, and we've been seeing that now into this May period, but it starts telling me that come June, and as we're entering that now, we may see another correction in Bitcoin. Bitcoin, as you know, was 126,000, went down to 60,000. It halved and rallied back toward 80. And I'm still very bullish long term on it, but the cyclical work says there may be another buy, retest of that 60,000 level, or even possibly lower by the end of the year, which I'm frankly disappointed about. I hope that doesn't happen, but that's what the cycles are saying could happen. And like anything else, we watch our volume reversal and other technical tools along the way. But at the moment, this is what the forecast model is saying. So if you want to see it, that's where it is. I do a lot of stuff in terms of cycles, lunar cycles, seasonal cycles. I've been doing this for 40 years. When I was a trader on the Chicago Board Options Exchange decades ago, I ran into financial astrologers who told me, hey, you got to pay attention to lunar cycles and all kinds of other astro cycles. And I laughed at the time, but then over time, you can see there is a correlation. One of the big things I do is the seasonal patterns, the equinoxes and solstices. Now we have the summer solstice coming up June 21st. And my theory is, and it's just not my theory, if you check your charts, you'll see there tends to be volatility around the seasonal patterns. The big classic one is the one in March, where we saw on many occasions big lows in the market around that time frame, or change of direction in that time frame. So you've got to watch the September and the December solstice equinoxes and see what your technical indicators are saying. On a short-term basis, the lunar cycles have tremendous impact. There are a lot of analysts out there who followed me over the years, and others, not to say I'm the original one, that show there is a correlation between gold and the stock market based on it, whether we're in full moons or new moons. So you have to put these on your charts, as I do. And if you get overbought or oversold around lunar cycles, you got to pay attention to them as well. So this sort of gives me another perspective. The solar flares is a big factor, particularly with all the satellites we have up there. Over almost 200 years ago, we had in September 1859 what they call the Carrington event. We had a huge solar storm, and at the time we didn't have, obviously, the technology we have today, but it fried all the telegraph lines at that time. So I check, nothing I can do about it, but I'm always checking a website, spaceweather.com, to see what's going on with solar flares and so forth, and they do have a significant impact. And also what we have now going on, which you need to pay attention to, besides the geomagnetic storms that could be coming from the sun, which in effect are also affecting a potential super El Nino effect coming this summer into the fall, which could affect markets, commodities, stock market, all kinds of stuff on the planet. So this is what the forecasters are saying now, and this comes from scientists who are pointing to the super El Nino, which is being triggered by geomagnetic forces from the sun. So this could affect the markets here in a lot of ways, in all markets, not just obviously the stock market. So we're watching the progression of potentially the El Nino. If you don't know what El Nino is, it occurs when waters in the Central and Eastern Pacific become unusually warm. And I said a moment ago, for investors and commodity traders, the El Nino can affect agriculture, energy demand, soft commodities of all kinds, natural gas, potential insurance losses, and shipping patterns. So according to this, there's often fewer Atlantic hurricanes during this period. I know as we get into the summer, we start talking about that. So more flooding perhaps in the Americas, but interestingly, less potential hurricanes, which I guess is sort of good news for those in Florida on the East Coast. Well, for those of you who've been following me for years, I'm a big follower of the extraterrestrial world, and I'm not the only one. Steven Spielberg, as you know, came out with his Close Encounters of the Third Kind back in the 1970s, and he's another blockbuster is coming in a couple of weeks, June 12th. It's called Disclosure Day. If you read the news, you can hear Donald Trump talking about releasing UFO files, and even Obama did this when he left the presidency. He released a lot of stuff that unfortunately was didacted and you couldn't read everything. But something's going on out there. It's been a lot of cover up. I've been following it for years. And for those of you who are interested in the movie, it is coming. And of course, if you're a fanatic like I am about the UFO phenomenon and studying it for decades, that's more of a serious discussion than anything else. But don't want to get into too much discussion of it other than way back in the 1980s, a good friend of mine, Paul Davids, produced a film called Roswell. He now lives in Sedona as well. It was a basis of the big 1947 event, which, as you can hear on TV or in documentaries, was one of the big dramatic events in the whole thing. So that influenced me decades ago. And if you talk to me more privately, we can get into more detail about that. Even Representative Tim Burgett from the U.S. Congress says essentially that what Congress knows and what the public has been told is vast different. So, and there's a lot of secret stuff going on. I mean, the real question is, if some serious disclosure is made, is it going to change our markets or not? And that's what we're all thinking about. How's it affect us financially, if at all, if there really is some super disclosure factors here. So we're going to pay more attention to that. And, you know, this is all related to the markets. I mean, there's some big disclosure comes out. You know, we have SpaceX going public. We have the Space Force that was created by Donald Trump. There's stuff beyond Iran, you know, beyond Israel, Gaza. There are other things that can affect the planet and our lives. So we have to pay attention to these news stories and see how the market reacts. The other big story, of course, is we have a new Fed chairman coming in tomorrow. There's a big story about what's happened to the gold market and to the what's happening to the Fed's strategy going on, as many believe that gold may not be at Fort Knox, and that may be one of the reasons why we saw such a big surge in gold here back in January, besides the fact that the central banks were making an acquisition. But I don't know if you remember Ron Paul, the former U.S. congressman, but he wrote a book years ago, and his son that follows that format now, about ending the Federal Reserve. And I know many of you think that's extreme, but there are Congress talking about that maybe we've given the Fed too much a leash and maybe needs to be brought in a bit, if not ended completely. The classic book in this regard, many of you may know the subject, is The Creature from Jekyll Island. And this is Edward Griffin's classic book, and it's only about 500 or 600 pages, but it gets into the formation of the Fed and a lot of the unusual and questionable activity surrounding the Federal Reserve. And one of the things I do like to say is even Ben Bernanke back in 2008-9 made a statement, you know, admitting that the Fed may have been partially responsible for the Great Depression in the 1930s. He actually was quoted to that effect, because why? The Fed had raised rates during that time, which was the most inappropriate thing to have done. And maybe we're going to see Warsh come out with some surprising news here, because raising rates is inflationary. It doesn't take away inflation. It actually causes more inflation, because it increases cost of companies and business activity. And he may surprise everyone and lower rates. And that's actually better, despite what the news media is telling you and what you might be reading in the numbers. So it'll be interesting how things unfold here in coming days and weeks. I already mentioned the Clarity Act a few moments ago with regard to crypto, so I'll pass over that. That's still in Congress. This will affect almost all the cryptos, and particularly the XRP. So now to move on to the Metastock volume reversal indicator. I'm going to leave some time here for some. If we can pull up some charts, if I can get this to work on the screen here. But back in 2011-12, Jeff and I put together the volume reversal add-on indicator. If you go to the link at the bottom of the screen or go to the Metastock website, you can get a nice video presentation with Jeff and I going over the entire tool, and goes into a lot of detail about it, more so than we can during this broadcast. But basically, it's based on my concept that volume precedes price. This is another link to that video if you want to pull it up. But again, you can go to the Metastock website and do it. But it's based on the theory that volume reversal is a change of price accompanied by a change of volume. It's my main indicator. Mainly since my days as a floor trader many years ago. I'm always watching where the volume is going. And as a general rule, you'll see reversals off key bottoms or key tops, even on a short-term trading basis and near-term basis. So it's following essentially the smart money. So to me, volume is everything. And if you don't have volume behind a move, it's really not going to go anywhere. But it's also key in terms of change of direction in the market. So that's sort of the main basis, though I complement it obviously with other technical indicators and the cycles, but that's my main trigger in terms of looking at my charts every day. So when we put together the add-on indicator, we created 3 versions of the volume reversal for the Metastock platform. And there's 3 of them. We're only going to show one here because it's too confusing to go into all of them on a short broadcast, but the sequential basically shows all the volume reversals on the screen, negative and positive. And again, I want to define the volume reversal for you as a change of direction and accompanied by a change of volume off trading lows and trading highs. So in the sequential version, which is the examples that we're going to be showing here, and which if you call in and or text us and you have specifics you want to see, we can try to do that as well. And this is the main tool that I would like to talk about. So one example I just pull up here is Disney. This is what a screen looks like when you pull up a chart on the indicator platform. And there's a little box on the left here that gives you instructions when you touch the little negative or positive VRs that you see on the screen. And when you do that, this is not live, so if I move the arrow over, you won't see it change. But if it's live, and maybe we'll get to that a little bit later here, it actually gives you a signal. So if you touch, for example, I'm circling that negative VR, a box would open up here on the left and it would say, hey, negative VR, time to go short. And it would tell you where the stop is as well. The main purpose of this is to show you that, volume precedes price. And this is a weekly chart of Disney. And you can see that, when a negative VR comes in, let's go all the way back here. This is back to 2023, of course, but, you get a negative VR on the weekly chart, and you just head down, and another negative VR, and it heads down. And not every signal is perfect, but you get some really powerful volume reversal signals saying that smart money was selling. What I like to do also is tie a 533 stochastic in, which you see here in the bottom third of your screen. And as a general rule, if I see a downtrending stochastic and a negative VR, that makes me feel a little bit better because you've got sort of momentum in terms of price in addition to the volume signal. So a combination of that and the VR is basically mostly what I look at. Now on the screen, I've got some moving averages, and I do that just because I want to see what, where the moving averages are, since so many people following them. So, for example, the green line would be your 200 week, and your blue line would be the 50 week, and I would have 150 and a 20 in here as well. But this is more important, I think, on the daily charts. And everybody seems to follow the 50-day moving average. So I like to keep the 50 up there on the daily as well. So anyway, this is sort of a picture of what I do. I'm looking at the weekly chart. Of course, I'm looking at my daily charts as well, because this gives me a sense of where volume is moving. And, I don't have 50 other indicators up here. It just tell me, and this is why this tool is so valuable to you as a potential subscriber, in addition to your other indicators that you might choose to use, because it confirms where volume pressure is and where the likely outcome of the price will be. And that's why we created the platform. So you might want to add this as another tool in your arsenal of indicators. Let's see here, what else we have here. These are some visuals that I had prepared prior. Let's go back up to going the wrong way here. Let's see here. Let's see. Every time I do this, it goes, my program goes nuts. I apologize for that. Okay, well, that's my next book. Let's go back up here to the charts. Let's see where we left off with Disney. So another one of my favorites is Constellation Brands. And it's also because you get good correlation in the signals. This has been up in the last few days, and we've been long for our clients at VR Trader. The story behind this, if you're looking for a story, is that, as you know, they produce Modelo beer and Corona beer, and we have the big soccer matches, World Cup coming up, and they feel, if you're looking at some other beer stocks like Anheuser-Busch and stuff, they've been rallying as well, so they anticipate a lot of beer sales. In any event, the stock is really cheap compared to where it's been. It used to be a $250 stock. It got down to about 140 or so. In recent months, Berkshire Hathaway was taking a position in it. But as a trader, that plus the story, we have a positive VR, and we've been trading it here on the long side. Now, you know, the potential is this can go all the way back up to the mid 160s or back to 200. You know, you can't tell until you see volume change, but the stochastic is rising, and it has been up the last couple of days. And as anything else trades around, but it's volatile, and it's one of my favorites. So, but look at the screen. I mean, just before it came down here, we had a series of negative VRs on the daily chart, and we did see a nice little decline. And then the story sort of broke here about the World Cup, and then positive VR came in, and now it's been trending up. But even well before this, looking back over it in the last several weeks, you can see some nice correlation on the positive and negative VRs in terms of follow through. So this is why it's a valuable indicator, and of course we try to tie in the stochastic to it. So right now I'm bullish until we see a negative VR, or until we really clear all these moving averages and reverse. That's sort of my opinion, looking at Constellation Brands and why we are long the stock. Let's see if we can get to the next one here. So the total stock market index I follow, this is Vanguard's ETF for the overall market, and we traded a lot. And as you can see here, back in February and March, before the market came down, we had a whole series of negative volume reversals telling us, hey, watch out. And sure enough, we did climax with that sell-off in March. And right at the bottom, positive VR, then another positive VR, then another positive VR. And we've been sort of trending up since. We did get a negative VR here a couple days ago. So I don't know. I'd be a little careful here, because stochastic is turning down, and everybody's euphoric here, you know, with what's going on with SpaceX and everything else. But not to say we're going into a bear market or not, but you do have a little negative pattern here in the very short term here. So we'll see what unfolds here, and if obviously the way we trade the VR, and then I should back up here a little bit and give you a little bit of some trading guidelines with it. So if I generate a positive VR, for example, let's look at this one here in the total market index. Okay, my mental stop is the low from the previous day. In other words, if it came off of a low and a positive VR was formed, that should be a key pivot point or reversal. So if I'm long this, and generally I take a couple 3-day trades anyway, but as a general rule, if it goes back through that level, that would tell me that I'm going to stop out of that trade. Okay. On a negative VR, the opposite applies. You're using the high from which the negative VR came from, and that becomes your mental stop. So if you're short based on this negative VR, your stop would have to be no worse than that high. And obviously, if it keeps going down, you want to keep lowering your stop. But as a general guideline, wherever the reversal comes from, the high just prior to it or the low just prior to it becomes your reversal trigger point for a stop. That's very important to me in terms of my trading. And as a general rule, if it's working out, it'll continue in your direction for a couple of days, and maybe you'll get a washout decline. But as a trader, and many of you are traders out there, and I tend to be more in a 1, 2, 3 day camp in terms of my own trading. This is very important. So I watch that level as a mental stop. So I want to give you a little insight about that. Newmont Mining has been a star performer in terms of the VRs, in terms of catching both the downs and the ups here, and it's one of our favorites. I've been trading the stock for decades, and I remember when back in 2011 it was in the 70s and it dropped all the way down to $20, and as you can see, it went up to 130. But when it did get that high, we started to see some negative VRs here, and this was when the gold and silver were topping out in January, February, and sure enough, you had a nice nice washout. And then you did get a positive VR here in late March. As you can see here, I'm circling it. You had a nice little rally, and you had a rising stochastic. So there was a contra trend rally in the Numa. And since I've been trading for so many years, and it's one of my favorite trading stocks, I pay a lot of attention to these short-term signals. And I might even just trade it for a couple of days. Like, for example, here, you had a negative VR in early April. It dropped just for a couple of days. And then a positive VR came in, and we just took a quick trade in that. Positive VR here, and it rallied for a few days. So, bottom line is good correlation with the VRs. It's also one of my favorite trading stocks because of its liquidity. SILJ is the Amplify Junior Silver ETF. This is all your junior silver stocks, things like First Majestic Silver, for example. And very volatile, and it's a great place to be if you're looking for a ETF for the silver stocks. And with the price of silver high, and even though it may correct to $50, as some are saying, it ultimately is going a lot higher. And even at present prices, the silver companies stand to make a lot of money based on where the stock is now and compared to earnings, where the stock used to be. So this is a good surrogate for the silver stocks, the small silver stocks, which should do well. Even if silver just trades sideways here, the profitability level is higher. But in terms of the VRs, we have really nice correlation in the signals. The most recent one that I traded here, we had a positive VR about 6-7 days ago. We came all the way up, and we have collapsed. I did not get a negative VR off this top, however, but we seem to be getting oversold here. So we're in it in our service because I feel overall it's in a bottoming process after this big washout we've had here, and it seems to be holding well above the 200-day moving average. But we do get some nice signals here on the downside and the upside for trading purposes. So this is one of my favorite ways of playing the silver market, the stocks that is, versus the physical metal. Chevron, of course, don't need to say much about that. It's been a tremendous performer here for traders. Regardless of Venezuela, regardless of the Hormuz Strait. Company pays a generous dividend. I think it's around 4%. It's a blue chip company, but had some really nice trades here in the last year and a half in terms of its move. And you're looking at a weekly chart here I put up in CVX to give you some perspective, but on a weekly basis, it had some really powerful signals up and down, down, up, and then up here. A big one here, back in the fourth quarter of 2025 before the huge move up. We haven't had any negatives yet. So we'll see how this all plays out, but it gives me a good sense of how, a good sense of how to trade this stock because of both of its trend and because of the volume shifts. We can look at a daily chart perhaps later. I know crude oil is all over the place. It trades day to day. But this stock, over time, with the dividend and everything, is just a great investment. And if you can trade it along the way or sell calls against your position, this is what I've been doing. I think it's just a great, core holding in your portfolio, whether you're trading it or not. Another hot stock, as you all probably know, is Rocket Labs. This is tied, of course, a lot to the SpaceX and interest in satellites, and space exploration, and our communications. We had a really nice, play in this in terms of a spectacular up move and down moves along the way using the VRs. VR generating nice little rallies, then a negative VR, and you're getting a nice little decline. Then a VR, and you get the beginning of a nice little rally. So nice little volume shifts in the chart give you a sense of where some of the smart money is moving with this particular stock, and this is why I like trading it as well. So it's honest, you're getting honest signals, honest follow through to the downside and upside, and this is one of dozens that we could show you, but this is just a few examples that I wanted to just to put out here, in our presentation. I think this is the last one, Jeff, that I had prepared ahead of time because I figured we might perhaps have some questions and may want to look at some actual charts. So I think this is the live version here. So let me see if I can put up. Let's see which one. Let's say the Rocket Lab, the one from today. I'm going to have to go to. We're going to have to go to the search for the symbol. It's RKRV.
.o.
There you go. So here's up to date. And I'm happy to say that we're getting some live charts here, so we can have some fun here along the way. So what we have cooking here, we have a negative VR in Rocket Lab. This is today. It's the most interesting, timely signal here. So for those of you who are in Rocket Lab, we have a little declining stochastic, a negative VR. So I'd either be short the stock or out of it now. And if I'm short, I would keep a stop at yesterday's high here. You can see some good correlation here with negative VR and positive VR. And this has been a popular trading stock, and you can see it has some nice little 2-3 day trading swings along the way. But just wanted to update you a little bit because the chart I just shown you was the weekly chart. So this I would not be long the stock right here. And obviously, if it reverses back through it, then and you're short, then you're obviously you know where your stop is, which is yesterday's high. So Jeff, if we have some questions, we can look at some other charts, or you could take over.
Yeah, let's see. But one of the questions that is coming in is, what are the numbers after the VR? What do the numbers after the VR mean? So like the 2, the 3 on the VR sequential that you're looking at.
Oh, I'm sorry. Okay, so on the screen we have a little counting mechanism on the chart. So if you have a positive VR here and a second one appears subsequently, it says that's your second one. That's all. It's just counting. It's just counting a consecutive. It has no meaning to my trading per se. It's just a little notation on the screen that you know how many positive VRs you had up in the recent trading session. So obviously, if you got a whole bunch of them and it counts 3, 4, 5, that you know tells you there's even more accumulation on the chart that I showed you. I believe for the total stock market index or the S&P, when there was a whole series of negative VRs, I think it counted those as well before the market came down. But I have to pull up that screen. This is not critical to the analysis. It's just a little tool that was developed as part of the program to count it. I'm sorry, and right over here is a -3. I'm sorry. So here's 1, 2, 3. There's a little 3 here because there was 3 negative VRs. It just lets you know how many had been accumulated in the recent time span. I'm sorry. Go ahead.
Oh, no, you're fine. No, you're fine. Don wants to know, how is the VR indicator triggered?
How is it?
In other words, what leads to a VR?
Okay, so let's go over an example right here. So definition of a VR is a reversal of volume and price, okay, off of a low or a high. So let's look at this example here. So you have a rally day, okay, and then the next day you get a reaction day, meaning you took out the low from the previous day and volume picked up. That generated a negative volume reversal. Conversely, on a positive VR, you have a rally day, a higher high from the previous day, and volume increasing from the decline from the previous day's low to this high. So it's a change of direction, a change of price, measuring from the previous day's low or the previous day's high. And that's why we created the program, so you didn't have to calculate it. But basically you're getting, in this down example here, you're getting increasing volume to the downside as compared to the rally on volume. Whether it was up or down, it made no difference because it increased to the downside. So it said sellers came in off that level and gave you a sell signal off that little peak. And conversely, buyers came in here as volume picked up off this low. This is why I mentioned where your mental stop comes in. If sellers come off this high and you have a selling sequence, you don't want to see it go back above that high. That means the selling may not have been for real, okay? In this case, it was. It did drop for a few more days. Conversely, if you have a rally, as in this example here, you don't want to see it go back price below that low, because that's where the buyers came in and stepped up to the plate. So that means there should be some follow through, even though in this case it was only for a couple of days. So my stop is always the low prior to the positive VR, or the high just prior to the negative VR.
Okay, let's see. Francisco says the SPY had a -5 in March, back in March this year.
Let's see here. This SPY, let's see what it pulls up daily and weekly. All right, so let's look at this chart here. Here we're looking at the daily chart of the SPY. And it did have a count on this particular one that before, it starts, I guess it started the count again, because here's a positive VR, then a negative VR came in. So negative, 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 and it gave you that 3, okay? So that gives you an idea of how that count worked, and this is, but it changes when a positive came in between. Now this is, again, there's a lot of trades along the way. I mean, even though all these negative VRs ultimately warned that we were going to get this sell-off, which we did, you can see that even though we had negative VR, there was a positive one that gave you a trade for 2 or 3 days. Then another negative VR gave you another down in a couple of days, okay? So my general view is to take it for, day at a time, and if I can make a couple day trade out of a VR, particularly in an index, I'm happy to do it. But after the big decline, which we saw at the end of March, literally there was a positive VR right at the bottom. It rallied for about 3-4 days. Then a negative came in. That would have told me to get out right away. But then another positive came in. It just reversed, and then it took off again. So you just got to know where your stops are on these things, because the markets do change direction on you. But in this particular instance, it had a pretty good call right at the bottom, and it had a pretty good call here, catching this nice leg higher. You do get conflicting, signals along the way. Nothing is perfect, but my general view is you get follow through after the VR, and that's really what I'm trying to accomplish here with the short-term trading. Also, you got to watch the stochastic, okay? So if the stochastic is going up, that makes the positive look a little bit more, credible to me. And if you're getting a negative VRs like up in here, and your stochastic is starting to roll over, that tells me be a little careful that those VRs may have more import because of the loss of momentum in the market. This is the daily chart. We can put the weekly chart up too. Does that answer the question, or you want to look at the?
Yeah, it did. It actually answered the next question too. The next question was, when you get the VR signal, do you validate it with the stochastics? And you just nailed that one as well. So good job.
Yeah, I know. I try to. I mean, nothing is 100%, but as a general rule, if you're getting a declining stochastic momentum and you're getting your negative VR, that gives you a little extra kicker in terms of credibility.
Doug says, I'm intrigued. Is this reliable for minute bars for day scalping orders?
I don't do it, but I have clients that do that. I mean, we can put up. I don't think we can do that. Can we, Jeff? Let's see here. No.
Not on the installed version you've got, but you could if you had the real-time version.
Right. I have other versions that you can put up 5-minute, 15-minute, 30-minute, and you'll see the VRs intraday. So for those who are futures traders, and I don't do it, though I have clients that do use it on intraday. They tell me there's some great short-term trades, for 20, 30-minute, hour type trades intraday if you put it up. Honestly, it's too fast for me. I don't do that anymore. I'm not, though I am guilty if I take a trade during the day and I get a quick profit, I might, quickly get out of it. But I'm not using the 5-minute or 15-minute or 30-minute chart to do it, so it is doable and it does work. If we could pull it up, I think we would see some examples of intraday in all the markets, commodity markets as well as the stocks.
I'm curious, is the fact that you're a top gold market timer in particular, you write newsletters on gold, precious metals, that kind of stuff. We had a phenomenal rally up until the end of last year. in gold. A little bit, it's been kind of shelving a little bit for the last 6 months or so. What do you feel is the future for gold?
Let's put up let's put up GLD, okay?
Okay.
Why not? See what happens here. Listen, I'm a long-term bull. If you talked to me in 1985, I would tell you the same thing I'm telling you now. I've been bullish for decades, but what's your patient level? You know what I mean? So it's like anything else with the market. Here's the GLD chart. Most recent is a positive here yesterday. This is your daily chart in GLD. Okay. There's some nice, some nice signals in here. Before the big blow off in January, you had a couple of positive VRs moving up. Okay. And then you got this negative coming right off this top. You get a couple of conflicting signals here along the way, but we get some nice trades here and a positive VR, and the one we just got a couple of days ago. This is a daily chart on it. What I would say is you're still holding a 200-day moving average despite all this volatility. And let's put up the there are corrective numbers below the market if you look at other technical indicators all the way down to about 3,500 in gold itself, but I don't know if it's going to get there or not. Let's look at the weekly chart. Okay, so on the weekly chart, it's not that bearish. I mean, it corrected. You had a big correction. You've been going sideways. You're well above all the key moving averages, the 50-week, the 200. I mean, it's still a bull trend. You just had a big shakeout. So my impression of the chart is, and your stochastic is at a higher level than it was, as the price was as is a few weeks ago. I'd like to see a nice positive VR come in here on the weekly. That would be great. Like we saw back here in October, we had 3 of them. That would be sort of nice to reaffirm a new uptrend. So I know there's a lot of bearish viewpoints out there. The most recent big signal is a negative one, so I don't want to argue that it couldn't still come down. But to me, overall, the overall pattern looks like just a big uptrend with a nice shakeout, and it doesn't look like a bear trend to me. It looks like a bull market that just had a correction. But if it is going to correct, you've got your 50-week moving average here at the 384 in the GLD, and perhaps that's where it might go. That might be a big buy point if you're not in gold. And the fact that the most signal on the weekly chart is a negative, you could argue that is a possibility, but I'm not shorted, so I'm not playing. To me, there's a lot of bears out there. Since it had a shakeout, I could see it going lower. But many of the shares have held up well because the companies are making money. For example, Newmont Mining had like record earnings, and the stock took off big about a week ago. The shares, I think, are going to do a lot better, perhaps, than the metal because of the high price and the fact they're making so much money now. With the overall price of gold still high compared to where it's been. I mean, gold is still up there. I mean, you're still looking at gold at $4,700, $4,500, $4,600. It's not like it's in a bear market. The top was it's off its high, but historically it's still very high, and companies I think will do well with the high price. So as a trader, I'm keeping a core long position. And if we get that shakeout, I'm probably going to add to it.
All right. Francisco wants to know, do you think there will be food scarcity because of the fertilizer not being able to get through the Strait of Hormuz?
That's purely a subjective call. I'm more concerned because of El Nino and the fact that if that happens, that could cause agricultural issues in addition to what's happening in the Strait of Hormuz. So I would say probably yes, based on what the commodity cycles are saying. And I'm providing more of a 6-month comment here, but I would say the probability is high. Yes, that will happen, could happen.
All right. Let's see. Don says, thank you for answering questions, and he said it in all caps. So I think he really meant it.
Thank you.
Don said also great explanation of the trigger. I appreciate it. And he also said great presentation. So
Well,
That's
thank
all
you.
the questions, though, that we have for you today, Mark.
Well, thank you. And thank you for being given the opportunity to wind up your Thursday.
Of course, anytime. You did a great job. Let me take the control back here. I do want to talk a little bit about the VR Trader, how to get it, and that kind of stuff. So let's do this.
Thank you, Jeff. Talk to you soon.
Of course. Thank you. Okay. All right, cool. There we go. Mark did a great job of actually talking about this and showing what's available. It does, of course, do scanning. It's basically got 3 included system. You've got your 2-day, your directional, and your sequential. And with all of that, it includes the ability to do explorations, the expert advisor. It's a fully built add-on for Metastock. And it's available for $99 per month. And like the other subscription offers that we've been doing throughout the thing, if you buy a month, we'll give you the 2nd and 3rd month for free. So it pairs well with if you're new to Metastock and you need to get a subscription for Metastock, you can get this along with it, and you can pay one cost and you'll be good until the end of summer, basically. So to do that, you can go to metastock.com/conf promo. You can give us a call at 800-882-3040. And you can also go to metastock.com/saleschat. All 3 of those are great ways to go ahead and take advantage of all of the offers we've done today. So as we kind of wrap up, I do want to say thank you to Stocks and Commodities Magazine for sponsoring the events. They've been a great sponsor, a great partner, and we really appreciate all the work that they've done. I also want to say thank you to, or I actually want to encourage you to join the Traders Forum. You can do that at thetradersforum.com. Great resource designed to help traders learn about the markets. We do some really interesting podcasts, and it's a growing community of traders helping traders. You can find out more about it at thetradersforum.com. As I said, all of the offers that were available through the week are available at metastock.com/conf promo. You can also give us a call. We'd love to talk to you at 800-882-3040 or metastock.com/saleschat. We've talked about a number of, let me just kind of recap today a little bit. And we'll talk a little bit about what's coming up for the final day tomorrow. So let me come back up here. This morning we started with Dave Landry. He talked about his methodologies that are built into Metastock as part of it. We talked about the 3S code system, which helps you find those MW patterns on the market. Very, very cool. I talked a little bit about Ichimoku, another high-powered methodology that's built into Metastock that's just included. Fausto came in and talked about order flows. Buff Dormeier talked about his Dow award-winning volume. Oh my goodness, volume program. Won the VCPI. I got it. The VCPI system. Peter talked about the Magic Trader and the success that they're having with that. And then, of course, the VR Trader. So a really good day. Tomorrow, we kick off with Jacqueline Monroe. She's going to come in. We're going to have Zahir Anwarian, Rob Booker, a good friend of mine, Sonny Harris, who's going to talk to us about dancing with the market. Adrian Mann's another great technician, and Harry Gebhardt. So got another full day for you tomorrow. I hope you've been enjoying the sessions and the conference, and I want to thank you for being part of it. If you want to get set up for any of the offers, give us a call, 800-882-3040. You can also visit us online at metastock.com/conf promo. And I look forward to seeing you tomorrow.